Profitability could be potentially hurt a little bit by the costs related to the deal, the $8 billion deal for Maris that was completed.
I think voice is clear, guys. Let me know in the comment box. Okay, yeah, voice clear. Start करते हैं आज का सेशन. गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू. सो कल का सेशन थोड़ा सा शॉर्ट किया था. आज की अगर बात करें, कल वैसे क्रूड ऑयल मोमेंटम में था. परसों से मैंने बाइंग में ही था. आप लोगों को मैंने परसों ही बताया था. वहाँ पर दो सपोर्ट थे. ऊपर वाला थोड़ा सा मार्केट कई बार टेस्ट कर चुका था. नीचे वाला सपोर्ट था, वहाँ से कंटिन्यूसली बाइंग में ही है, बना हुआ है मार्केट अभी भी. कल ये फॉरेक्स में रेजिस्टेंस को हिट कर गया था, वहाँ से सेलिंग आ गई थी, तो हमारे वहाँ थोड़ा सा गैप डाउन ओपन हुआ है. लेट्स सी इंडियन मार्केट में भी रेजिस्टेंस पे अगर जाता है तो वापस से 5800 900 मेजर रेजिस्टेंस है. एंड परसों से देखोगे तो ये ऑलमोस्ट 250 पॉइंट का मोमेंटम कर चुका है बाइंग साइड पे. नेचुरल गैस परसों एक सेलिंग का ट्रेड था. मार्केट में एक सेलिंग काफ़ी अच्छी देखने के लिए मिली थी. रिकवर किया था बट अगले दिन फॉरेक्स में नीचे गया. ये मैंने कल आपको लेवल बताया था, मल्टीपल टाइम टेस्टेड लेवल है. परसों ही बताया था, बहुत बार टेस्ट हो चुका है. तो कल इसने ब्रेक डाउन किया था, रीटेस्ट भी किया थोड़ा बहुत, फिर वापस लेवल के ऊपर आके पॉजिटिव ही हो गया. तो ये स्टिल ऑन अ सपोर्ट एरिया. लेवल एक बार रिफ्रेश कर देता हूँ मैं फिलहाल फ्रेश से, सो दैट यू कैन इजीली अंडरस्टैंड. बाय द वे आज क्रूड ऑयल ऑप्शन की एक्सपायरी है, तो ध्यान रखना. टुडे इज क्रूड ऑयल ऑप्शन एक्सपायरी, सो एमसीएक्स में प्राइस थोड़ा सा वॉलेटिलिटी हो सकता है पूरा साइडवेज ही चला जाए. मेजर न्यूज़ की अगर बात करें तो आज डेटा मैन्युफैक्चरिंग एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा गोल्ड और सिल्वर को इम्पैक्ट करेगा. 130 होने वाला है. लंदन सेशन इज गोइंग टू ओपन शाम को 6:30. न्यूयॉर्क सेशन ओपन होगा एंड देन 8 बजे यूएस मार्केट की ओपनिंग रहेगी. कल वैसे भी यूएस में बैंक हॉलीडे था, थोड़ा सा वॉल्यूम थिन था वहाँ पे. आज मैं एक्सपेक्ट कर रहा हूँ थोड़ा सा वॉल्यूम प्रॉपर रहे. ठीक है. बाकी ओवरऑल कहोगे जियोपॉलिटिकल टेंशन की बात, तो क्रूड ऑयल थोड़ा सा बुलिश हुआ है बिकॉज ऑफ द ईरान यूएस एक्टिविटी. कुछ स्टेटमेंट्स भी आए थे दोनों कंट्रीज की ओर से, उस वजह से थोड़ा सा तो हमें देखने के लिए मिला. बाकी कल भी S&P 500 हो, नैस्डैक फ्यूचर दोनों ही डिक्लाइन किए थे. गोल्ड सिल्वर स्टडी वहीं बने हुए हैं, कुछ खास बुलिश या फिर बेरिश मोमेंटम हुआ नहीं है पिछले काफी टाइम से. ईरान और आज आई थिंक आज है मीटिंग ईरान और यूएस के बीच में. Trump says he will be involved indirectly in Iran talks. Hmm. And in focus at Geneva peace talk between Russia and Ukraine. क्रूड ऑयल मुझे लग रहा है कि ऐसा ना हो कि आज पूरा दिन इसी रेंज के अंदर ही कहीं साइडवेज ना चला जाए। एक तो एक्सपायरी भी है तो उस वजह से हो सकता है या तो मोमेंटम बड़ा होगा या फिर लास्ट वीक याद होगा लास्ट मंथ सॉरी मार्केट एक रेंज के अंदर ही चला गया था जब एक्सपायरी थी ऑप्शन की। कल इंडियन मार्केट काफी अच्छा रिबाउंड किया था स्पेशली बैंक निफ्टी निफ्टी में अभी भी थोड़ी बहुत हाई लेवल से कह सकते हो सेलिंग का प्रेशर बना हुआ है बट बैंक निफ्टी इज सुपर बुलिश राइट नाउ। आज भी देखोगे बैंक निफ्टी निफ्टी के कंपैरिजन में ज़्यादा ही बुलिश है इवन दो मॉर्निंग पे गैप डाउन जरूर हुआ था वापस रिबाउंड कर गया आज फिर से एंड इट इज़ कंटिन्यूसली अपसाइड मोमेंटम। मुझे लग रहा है शायद वापस से एक बार ऑल टाइम हाई को ब्रेक करने जा सकता है बैंक निफ्टी क्योंकि इसका एक रेजिस्टेंस था प्राइस तो उसके ऊपर कल क्लोज कर गया था 60,900 के ऊपर। आज हल्का सा गैप डाउन जरूर हुआ 60,900 के ऊपर मुझे लग रहा है क्लोजिंग ऊपर ही आएगी तो देयर वेरी हाई चांसेस ऑल टाइम हाई एक बार जाना चाहिए वापस 61,300 के अप्रॉक्स। वो देखना पड़ेगा क्या वो लेवल होल्ड करता है नहीं करता बिकॉज निफ्टी भी उस केस में अपने एक स्मॉल रेजिस्टेंस 25,850 के आसपास जा सकता है। इंट्राडे 15 मिनट कल रिकवर किया था आज गैप डाउन हुआ इसने भी रिकवर किया है। या रेजिस्टेंस है 25,850 26,000 25,850 टू 870 के बीच में 15 मिनट टाइम फ्रेम 4 आवर। बाकी गोल्ड आज भी डाउन है फॉरेक्स में सिल्वर भी आज डाउन है एटलीस्ट टिल नाउ 1% से ज़्यादा ही डाउन है। बाकी सिल्वर स्टिल कंटिन्यू होल्ड करके बैठा हुआ है $75 नीचे $60 के आसपास अगर आता तो बढ़िया था वापस से बाइंग के लिए अदरवाइज जिस तरह का प्राइस एक्शन बन रहा है देयर वेरी हाई चांसेस 73 $70 70 मतलब 70 टू $75 के आसपास काफ़ी बायर एक्यूमुलेट हो चुके हैं। अगर ये लेवल बाई चांस ब्रेक होता है $70 के नीचे 4 आवर टाइम फ्रेम पे फॉरेक्स चार्ट सिल्वर देयर वेरी हाई चांसेस कि ये फिर थोड़ा अच्छा खासा गिर सकता है एक्यूमुलेशन बहुत ज़्यादा हो गया। कि जो प्राइस एक्शन यहाँ पर बना हुआ है ना अप्रॉक्सीमेटली $70 से $75 के बीच में, ये गलती से अगर ब्रेक हुआ 4 आवर टाइम फ्रेम, मेरे अकॉर्डिंग प्राइस थोड़ा बड़ा फॉल कर सकता है। जरूरी नहीं है ब्रेक हो, डब्ल्यू ही बना सकता है यहाँ पे, क्योंकि ये जो प्राइस एक्शन काफ़ी देर पहले मैंने आप लोगों को बताया था उसके अकॉर्डिंग ये अभी भी इसके ब्रेकडाउन में गिरा नहीं है नीचे। दे आर डेफिनेटली ट्राइंग टू मेक अ डब्ल्यू पैटर्न कंटिन्यूअसली लाइक दिस, बट यहाँ $70 के नीचे लगता है थोड़ा सा बेरिसनेस बढ़ सकती है 15 मिनट इंट्राडे। अभी यहाँ पर कोई लेवल नहीं है, नेचुरल गैस थोड़ा ऊपर आएगा तो देखेंगे। बीच में कोई ट्रेड फ्रेश प्लान नहीं कर सकते। लेट्स सी कोई नया सपोर्ट या रेजिस्टेंस फॉर्म हुआ है अगर गोल्ड या सिल्वर में। $55 का लेवल 4 आवर टाइम फ्रेम पे कई बार टेस्ट हो गया। उस हेड एंड शोल्डर पैटर्न के फॉर्मेशन में अगर कंप्लीट होता है तो ऑलमोस्ट ये 5वीं बार है ये $75 के लेवल को हिट कर रहा है 4 आवर टाइम फ्रेम पे। तो सिल्वर में $75 इज अ वेरी क्रिटिकल पॉइंट नाउ। मुझे लग रहा है अगर ये ब्रेक करता है नीचे प्रॉपरली 75 to $70 के नीचे, क्योंकि विक तो बहुत बना रहा है, होल्ड कर जा रहा है बार बार, थोड़ा सा एक बड़ा प्रेशर अगर सेलिंग का आ जाए ना, हम ठीक ठाक गिर जाएंगे प्राइस में। डेली टाइम फ्रेम पे थोड़ा सा सपोर्ट नीचे, बट 4 आवर मुझे लग रहा है थोड़ा सा ज़्यादा रोका हुआ है प्राइस को स्टिल। ये फॉल करता है नीचे 75 to $70 तो आई एम एक्सपेक्टिंग प्राइस फिर सीधा एक बार वापस से 58 $59 तक वापस आ सकता है टेस्ट करने प्राइस को। क्योंकि उस लेवल पे अभी भी प्राइस एक बार भी आया नहीं है, कोशिश जरूर करी थी बट एग्जैक्टली हिट नहीं किया है। सो लेट्स होप वहां तक आ जाए एक बार, $50 60 राउंड नंबर कह सकते हो। प्राइस ऑलमोस्ट अपने ऑल टाइम हाई से 50% करेक्ट कर जाएगा, मतलब 10% और फॉल होने के चांसेस हैं सिल्वर में, सिल्वर फॉरेक्स में, फ्रॉम करंट लेवल। बाकी कल एक रिपोर्ट आई थी ब्लूमबर्ग की, जहां पर उन्होंने पब्लिश किया कि जो गोल्ड और सिल्वर में ट्रेडर्स हैं, उन्होंने लॉन्ग शॉर्ट की काफी हैवी पोजीशन बना रखी है। लॉन्ग शॉर्ट इन द सेंस ऑफ, अगर ऑप्शन जो ट्रेडर है, मार्केट अगर अनएक्सपेक्टेडली अपसाइड जाता है तो भी प्रॉफिट होगा, और डाउन साइड आता है तो भी प्रॉफिट होगा। सो दे आर नाउ प्लेइंग एज अ सेफ इन ऑप्शन। ठीक है, ज़्यादा रिस्क नहीं ले रहे हैं, सेफ प्ले कर रहे हैं, एंड दे कैन एक्सपेक्ट बोथ द साइड मोमेंटम। प्राइस यहाँ से हो सकता है और ऊपर भी जाए, हो सकता है थोड़ा करेक्शन और दे दे। $49। क्रूड में एक, सॉरी नेचुरल गैस में एक रेजिस्टेंस है, आई होप वहाँ पर टेस्ट करने एक बार आ जाए। अगर एक नेचुरल गैस में वापस सेलिंग का ट्रेड प्लान करेंगे। ऐसा चाहिए। तो परसों वाला ही रेजिस्टेंस है, यहाँ तक मुझे लगता नहीं है प्राइस वापस रीच करेगा, फिर भी लगा लेते हैं एक बार। जहाँ परसों सेलिंग आई थी, जहाँ से सेलिंग का थोड़ा सा बड़ा टारगेट रखा हुआ था, दैट इज स्टिल इंटैक्ट। अभी भी ये इंटैक्ट ही है जब तक प्रॉपरली ब्रेक नहीं होता। एक बीच में ये मुझे लेवल थोड़ा सा लग रहा है, कंफर्मेशन नहीं है, थोड़ा सा इसको पॉइंट ऑफ इंटरेस्ट ही मान के चलेंगे। बट दिस लेवल नाउ एक्ट एज अ पॉइंट ऑफ इंटरेस्ट। यहाँ पर एक सेलर्स लिक्विडिटी लेने शायद थोड़ा बहुत आ सकते हैं, बट इसको हम कंफर्म रेजिस्टेंस नहीं मानेंगे, एज अ पॉइंट ऑफ इंटरेस्ट के तौर पर ही कंसीडर करेंगे, बिकॉज ऑफ द कैंडल क्लोजिंग जो हुई थी इस पर्टिकुलर लेवल पे। ये तो एक सेलिंग का प्लान देखते हैं, यहाँ से भी करेंगे, बट नॉट इन अ हैवी क्वांटिटी, बिकॉज एज आई सेड ये एग्जैक्टली रेजिस्टेंस है नहीं है, कंफर्मेशन के साथ कहा नहीं जा सकता एमसीएक्स चार्ट में, बिकॉज ऑफ द कैंडल क्लोजिंग। जिस तरह से कैंडल क्लोज हुआ है, दैट इज नॉट अ रेगुलर कैंडल। निफ्टी में अभी कोई ट्रेड नहीं, निफ्टी में मैं भी वेट कर रहा हूँ वो रेजिस्टेंस पे। जो मेरे 15 मिनट के रेजिस्टेंस थे वो सपोर्ट थे, फ्यूचर में वहां पहुंचा ही नहीं प्राइस पिछले 3 दिनों से। तो निफ्टी में मैंने आप लोगों को बताया था, रेजिस्टेंस गैप अप ना हो जाए, बात अलग है। 25,870 टू 25,900 के अप्रोक्सीमेटली वहां पर एक सेलिंग जोन बन सकता है। बाकी एक मेजर सपोर्ट वही 24,800 के आसपास था, वहां तक तो नहीं गिरा खैर। लेट्स होप इस एरिया के आसपास मिलता है, तो ऑप्शन सेल किया हुआ है 3 दिनों से। किस लेवल पे आएगा देखेंगे यहाँ पर, लेकिन ध्यान रखना थोड़ा सा इतना कॉन्फिडेंस नहीं है इस लेवल पे सेलिंग का। एक जोन जरूर है, कैंडल क्लोजिंग की वजह से थोड़ा सा डाउट हो रहा है, इसलिए एज अ पॉइंट ऑफ इंटरेस्ट कम क्वांटिटी से ही प्लान करेंगे। थोड़ी वॉलेटिलिटी भी हो सकता है, पॉसिबल है। बाकी वैसे नेचुरल गैस भी देखोगे फर्स्ट 15 मिनट की कैंडल के अंदर ही ट्रेड कर रहा है अभी तक, वापस इसके ऊपर प्रॉपर ब्रेकआउट हुआ नहीं है। फर्स्ट 15 मिनट की कैंडल के ऊपर ट्राई जरूर किया मार्केट ने एक एक बार ब्रेकआउट करने का, नेक्स्ट कैंडल पे वापस नीचे ही आ गया प्राइस। सो और ये जो नीचे हमारे पास एक लेवल था 274 वाला पॉइंट ऑफ इंटरेस्ट, वो अभी भी होल्ड करके बैठा हुआ है। बेसिकली तो वो ब्रेकडाउन है। मार्केट ने रिटेस्ट भी किया वहां पर, ध्यान से अगर दिखाऊं मैं आपको चार्ट पे तो यहाँ देखोगे ब्रेकडाउन हो गया था कल ओपनिंग के बाद। काफ़ी देर वैसे ट्राई किया था मॉर्निंग पे ओपनिंग पे होल्ड करने का, ब्रेकडाउन हुआ यहाँ पर, रिटेस्ट भी किया काफ़ी देर, फिर ये कैंडल में पता नहीं क्या न्यूज़ आई शाम को, ओपन इक्वल टू लो बना के ब्रेकआउट करके वापस लेवल के ऊपर ही चला गया। एंड वही लेवल फिर से सपोर्ट बन के बैठा हुआ है आज। एक्सपेक्ट मैं कर रहा था कल कि अगर ये ब्रेक डाउन करता 274 के नीचे सस्टेन करता, तो फिर नीचे 250 का लेवल ठीक था नेक्स्ट बाइंग जोन के तौर पे। क्रूड ऑयल फिर से हुई 15 मिनट की कैंडल के अंदर ही सस्टेन कर रहा है, बाहर निकल ही नहीं रहा है। देखते हैं नेचुरल गैस में अप लेवल पे आएगा इधर पे कहीं। नेचुरल गैस को तो वापस नीचे आना पड़ेगा फिर वापस बाइंग के लिए। Wow, India is discussing age-based social media curbs. Minister say major news. Are they going to ban like Australia?
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
Now to our top stories. Two high-profile sets of negotiations are taking place in Geneva today. The US and Iran are holding a second round of nuclear talks. US Secretary of State Marco Rubio says that he's hopeful Tehran and Washington can broker an agreement. On Air Force One, President Trump said that he will be following the talks closely.
So I'll be involved in those talks indirectly, and they'll be very important, and we'll see what can happen. I mean, it's been typically, Iran's a very tough negotiator. I think they want to make a deal. I don't think they want the consequences of not making a deal. They want to make a deal.
President Trump has moved forces to the region and threatened to strike Iran unless it agrees to a deal, curbing its nuclear program. Tehran has begun conducting military drills around the Straits of Hormuz, according to the Tasnim news agency. Iran's Foreign Minister Abbas Araghchi held talks with the head of the UN's atomic watchdog on Monday, but facing American pressure, he said in a social media post there would be, quote, no submission before threats.
Expectations are low for any breakthrough on discussions to end the war in Ukraine, also happening in Geneva. Western officials and analysts say President Vladimir Putin believes time is on his side and support for Ukraine will peter out. A spokesperson for President Putin, Dmitry Peskov, says Russia is taking the talk seriously.
This time we intend to discuss a broader range of issues related to the territories and other matters connected to our demands. The presence of the chief negotiator, that is Medinsky, is now essential. Indeed, the delegation will now be expanded this time. In addition to Medinsky, Deputy Foreign Minister Galuzin and other officials will be there.
Dmitry Peskov speaking via a translator. Russia has spent months repeatedly striking Ukrainian cities, leaving hundreds of thousands without power in a bid to bring the country to its knees. But Bloomberg analysis suggests the war's human and economic cost to Russia is rising, especially in border regions. Both sides say any potential progress today would need to be agreed by their respective leaders.
Now, we've got some breaking news this hour. UK jobs data for December shows unemployment rising above estimates. The unemployment rate coming in at 5.2% in December. The estimate had been for 5.1%. The October to December wage number, excluding bonuses, sees an increase of 4.2% year on year. So UK wages also rising less than expected, though, in December. In terms of that data, the pound extending losses after the data. Currently, sterling down 0.3% against the US dollar, 1.3588. So those are the latest figures for UK employment.
The mining giant BHP posted bumper profits thanks to a surge in demand for copper and a broader metals rally. Earnings rose 22% year on year as a years-long effort to boost copper production paid off. According to the firm's CFO Vandita Pant, BHP is set to boost its offering of the metal even further.
For the first time, 50%, more than just about 50% of our earnings, EBITDA, came from copper, and performance across our assets has been very good. To take example of Escondida, which is our largest mine that we run in Chile, we are revising the guidance up for this year and next year.
BHP's Vandita Pant speaking there after the latest earnings announcement. Following the news, BHP's shares jumped by as much as 7.6% in Sydney to hit a record, their biggest gain in over 10 months.
Bloomberg has learned that Elon Musk's SpaceX is competing in a US military contest to produce autonomous drones. The company and its subsidiary XAI are hoping to break into the weapons sector by winning a secretive $100 million contest to build voice-activated drones. SpaceX and XAI didn't respond to requests for comment. The news comes as Anthropic's talks about extending a contract with the Pentagon are being held up. Bloomberg understands that the company wants guardrails that prevent Claude from being used to develop weapons or to spy on Americans.
Ireland's data protection watchdog has launched an investigation into sexualised images created by X's chatbot. It follows an EU probe into the social media platform X over concerns about Grok. Europe is increasingly moving towards tighter social media regulation, particularly in relation to under-16s. Both Germany and the UK are weighing legislation that will limit children's access to social media and set the stage for a new showdown with some of the biggest US companies.
US Secretary of State Marco Rubio has praised Hungarian Prime Minister Viktor Orban during a visit to Budapest. The US is doubling down on its support for the populist leader as the country prepares for elections next month. Speaking in Budapest, Rubio said that President Trump would provide assistance to Hungary if it ever ran into financial trouble. He said the two countries are entering a golden era of relations.
I can say to you with confidence that President Trump is deeply committed to your success, because your success is our success. Because this relationship we have here in Central Europe through you is so essential and vital for our national interests in the years to come.
Secretary of State Marco Rubio there after President Trump gave his personal endorsement of Orban this month, despite the Prime Minister's party trailing in opinion polls ahead of the vote on the 12th of April.
And the executive chairman of Hyatt Hotels, Tom Pritzker, says he's retiring from his position at the company and won't stand for re-election to its board. Pritzker cited an association with the disgraced financier Jeffrey Epstein and his partner Ghislaine Maxwell. In a statement, he said he, quote, exercised terrible judgment in maintaining contact with them and feels deep sorrow for the pain they inflicted on their victims. Hyatt named its president and CEO, Mark Hoplamazian, to succeed Pritzker as chairman, effective immediately. Well, those are your top stories on the markets this morning. Eurostoxx 50 futures down 0.4%. FTSE 100 futures are slightly higher. On Wall Street, equity futures are in the red as well. US markets will be back later today after the President's Day holiday. 10-year Treasury yields down 3 basis points at 4.02%.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
CrudeOil देखो रेंज के बाहर निकला है, थोड़ा सा अगर ये नीचे आता है 15 मिनट टाइम फ्रेम पे इस पर्टिकुलर जोन के आसपास, तो वापस से देखते हैं बाइंग का। सा और फॉल करता है तो देखते हैं यहाँ पर ये प्राइस एक्शन कैसा बनाता है। यहाँ पे ऐसा ना हो एक फ्रेश रेजिस्टेंस क्रिएट कर दे। सपोर्ट तो थोड़ा सा डाउन साइड पर ही है क्रूड में, अब या तो फ्रेश सपोर्ट क्रिएट करेगा, देन वी विल सी इट। भी 5620 का जो सपोर्ट एरिया जहाँ परसों बाइंग आई थी वहाँ वापस हो सकता है प्राइस आ जाए वापस ट्रेड करने, नहीं तो वहाँ पर देखेंगे। बीच में इसमें और कोई सपोर्ट रेजिस्टेंस नहीं है फिलहाल के लिए। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम।
I want to get your views on what's happening in Japan, but what else are you watching on the AI story? I mean, you think we're going to get some clarity, maybe some of those software names are being revived to some extent. What else are you watching for? Is it debt levels? Is it capex spend commitments? Is it news out of India and the AI Impact Summit? What are you watching for?
I think I'm increasingly thinking about what are the repercussions that are inadvertent. So we're going to get ricochets into other markets because it's just such a big shift in how we're investing and how money is spent. And if you think about the credit market, the Dallas Fed has put estimates out for how much issuance you'll get from tech companies this year for the AI build out at $300 billion. Now that's 17% of total US IG issuance last year. That's massive. And so it has to have some kind of repercussion for the credit market. And there are a couple big ones I see. The first is that you get less diversification. So your credit indices have had to lower, or they've had historically lower tech weightings. So they become increasingly like equity indices as that tech weight rises. It also is longer duration debt. So USIG tends to have a duration around 7-8 years. You're getting 40-year, 100-year bonds, and that means your duration rises, which means you're more sensitive to interest rate changes. It means it's slightly more volatile. And those are just a couple of things that we can see. And it's a big impact. So there will, of course, be repercussions that we can't.
Okay, that's super helpful. Skylar, Montgomery Koenig, we didn't have time for Japan. We'll get you back on tomorrow if we continue to see the rally in JGBs that we've seen in the session today. Geopolitics and focus as well, Ollie. And we're getting live pictures, I believe, from Geneva.
Yeah, we can see what's going on in Geneva right now outside of the Oman permanent mission in Geneva, where we're expecting those conversations between the United States and Iran. We've heard from Marco Rubio over the last couple of days. They want a negotiated outcome. Of course, the threat here is possible military action in Iran. The stakes are incredibly high, so we'll be watching those talks very closely, Tom.
Okay, plenty more coming up. Stay with it. So that is it for the opening trade. The Pulse is up next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Geneva takes center stage for U.S. foreign policy with crunch talks on both Iran's nuclear program and Russia's war in Ukraine. UK unemployment reaches its highest since the pandemic as the labor market continues to weaken, setting up a potential rate cut by the spring. Plus, the French President Emmanuel Macron is making his 4th visit to India. He'll try to persuade the Prime Minister Narendra Modi to upgrade his air force with French fighter jets. Now, there is quite a lot going on, more in the world of geopolitics, I have to say, than it is in the markets. Also, a reminder, today is New Year in China, which means that a lot of the markets are closed across Asia. Now, what we're looking at in terms of stocks, they seem to be fluctuating ahead of the U.S. being back from President's Day yesterday. So stocks actually a little bit mixed. Contracts on the NASDAQ 100, for example, suggesting a bit of a slide in technology shares. U.S. traders coming back to their desks with tensions climbing around Iran and concern about the broader impact of artificial intelligence rippling beyond the tech sector. You can see Brent crude 67.94. And then look, here in Europe, a lot of what we're seeing will be dictated by the U.S. a little bit later on. Treasuries edging higher as precious metals are actually sliding. The CAC 40 holding on to gains, as is the FTSE 100. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, in a moment, we'll discuss market sentiment with Kamaksha Trivedi, head of global FX and interest rates at Goldman Sachs. But first, Geneva is at the center of global diplomacy, where the U.S. is actually holding indirect talks with Iran and brokering the next round of discussions between Russia and Ukraine. So let's speak to Mark Champion, Bloomberg opinion columnist, and Hugo Miller, Bloomberg's Geneva correspondent. So thank you to all three of you for joining us. Mark, first of all, I mean, this comes on the back of the Munich Security Conference. Again, quite a lot of anticipation about that Marco Rubio interview and the speech, which doesn't seem to be that friendly towards Europe. What did we find out at Munich that we can transpose into Geneva?
Well, I think the Munich basically told us that, U.S. policy hasn't changed since a year ago. Rubio was a little more polite, but the essence of U.S. policy that he laid out are exactly the same. The approach to Europe is exactly the same. It's quite hostile. And that really translates through Ukraine, which he barely mentioned. What we see now is the next round of talks. The Russians, since the last round, which seemed to be quite pragmatic, the Russians have been really doubling down, insisting that there is this spirit of Anchorage, this deal that we don't know about that was made, they say, in Anchorage when Putin met Trump. And that deal was very favorable to the Russians, and it set out basically it gave them what they want. So they have now sent a team to Geneva. That team is headed again by the sort of amateur historian who's the culture minister, instead of by the more detailed oriented people. Last time that he was there, he just talked history. Yeah. So it's a kind of, at the same time, from the other side, you have Trump saying Zelensky's better make a deal, come to the table, or he's going to be in trouble. So it really is sort of, Europe excluded and Ukraine under pressure. And I think that's where we are, and it's not very favorable for the Ukrainians.
Mark, I want to go to Ukraine in just a second, but how unusual? I mean, these are two very, very different portfolios when you're dealing with Iran and Ukraine. So why is it in the same day, in the same place?
I don't know. I can't tell you. But, what is the case is that the two men who are conducting these negotiations for the U.S., Steve Witkoff, and Jared Kushner, they are, in charge of both portfolios, and they're both there. So it'd be kind of like speed dating for them, where they're kind of moving between these two, sets of negotiations. So exactly why they decided to do it that way, if it's logistics, if it's a message of some kind, or if they just think that they can handle it, I really can't say.
Hugo, what can you tell us about what we can expect in Ukraine? We saw the speech from, of course, Vladimir Zelensky over the weekend at Munich Security Conference. I thought it was a great speech. It didn't get much traction. And so I don't know what you think happens on the ground today.
Good morning, Francine. Yes, speed dating, Mark. Interesting way of putting it. I think one thing that is interesting is this is not happening at the U.S. mission in any way. Last November, there were talks held there, and it was very much a U.S. show. This is being held on a slightly more neutral ground at the Intercontinental Hotel, where traditionally talks do take place. It's very hard to get a sense of what the Ukrainians expect to get out of it. There is obviously a large difference in where the two stand on terms of the issues of territory. The Ukrainians may brief journalists this afternoon. I think if they do, perhaps it's because they feel that they've got a little bit more momentum, or things are perhaps going better than the rather gloomy scenario that Mark just laid out for the Ukrainians. But we won't know until this afternoon if they are indeed going to say more, and what they will say, very much remains to be seen.
Kamaksha, how's this playing out on the markets? As head of emerging markets, again, I don't know whether this has a direct impact, or actually markets for the moment would rather just forget about geopolitics because they don't know how to price it and they don't know how to expect.
Yeah, I think the really interesting thing, Francine, is the tension you're seeing on the one hand between these geopolitical risks, the valuation-driven, some of the sell-offs in the AI space, but actually really strong cyclical data on the other hand. And a lot of emerging market assets are, at the end of the day, cyclical assets. And so what you're really seeing is, so far, because markets are struggling to price those geopolitical risks, you're not really seeing that geopolitical risk premium outside of certain pockets like gold, for example, or the Swiss franc, where these talks are taking place. The rest of the emerging market complex, or really the rest of the cyclical asset market complex, I think is still pricing off that better cyclical data that you're seeing across the world.
Are they right not to price anything for oil?
I think you're tending to see this thing where, oil prices are holding up, I think, where they are, and even going up into weekends before kind of relaxing on Mondays when, you don't get some kinetic action. I think so you're seeing a little bit of that premium there. And again, that's another thing where if you get any kind of positive resolution out of any of these things, I think there's actually a downside skew to oil prices, which again would be quite helpful to the broader risk backdrop and again to emerging market assets.
Mark, what do you think will happen with Iran? We understand from Iranian officials that, again, they're willing to discuss their nuclear enrichment activities, but have tied it to U.S. sanctions. And then there's always this rumor that a U.S. strike could come.
Yeah, absolutely. I mean, Donald Trump appears to believe that he can get the Iranians to accept, to move out of their comfort zone and accept something simply to avoid, getting hit by, 2 aircraft carrier strike groups. We'll see. There is this sort of debate going on within Iran, within the regime, with sort of hardliners saying, look, this is an existential fight. We can't really afford to make a deal. We have to just make our stand. Otherwise, as an Islamic Republic, it will kind of undermine us and we won't be able to get there. The more kind of pragmatic side, which includes the foreign minister who's in the talks, they're sort of arguing that we need to make some kind of deal. We need to get some economic relief. We've got these major protests. We need something.
But, Mark, I mean, is this very binary, that you either have a stalemate which could push President Trump to, conduct or support airstrikes, or you have progress which would avert strikes?
It looks like President Trump doesn't really want to pull the trigger, that I'm just speculating there, just from the things that he's said. That's the sort of message that he's kind of giving out. You had Benjamin Netanyahu worried enough that he went to Washington to try and, hold Trump to the sticking place and say, it's got to be nuclear plus ballistic missiles plus an end to supportive proxies, which is the kind of deal that the Iranians absolutely won't make. Trump is kind of holding his cards a little close to his chest, and we'll find out. If it's just a nuclear deal, that's quite possible. Once it moves out into ballistic missiles and proxies, that becomes, much harder to envisage.
Hugo, how are you expecting actually the negotiations on Ukraine going? We understand that the Russian president is definitely trying to play for time. His negotiators trying to drag out these peace talks. So the economy is being slammed at home and they're suffering massive casualties. But at the same time, they're hoping to pound Ukraine further, I guess.
Yes, I mean, I was reading a good piece today just about how much Putin is, using the winter weather. And I think as long as the cold weather remains, Russia is has no interest really in doing anything other than playing for time. As Mark mentioned, Vladimir Medinsky is much less of a details-oriented guy. He's much more of a kind of just champion of this greater Russia dogma that Putin has been pounding for years. Kirill Dmitriev, who's led the Russian delegation in other talks, I think is much more detail-oriented. So if you look at essentially the two sides that are coming together, it seems to perhaps be one that is going to be more just playing for time, certainly on the Russian side. And in a way, the Iran talks, from what I was hearing from an analyst, may be much more conclusive, be much more substantive. And 2 days from now, the situation, for better or for worse, may have evolved much more than with the Ukraine-Russia standoff.
Kamaksha, I mean, again, I don't know whether you cover Russia any longer as an economy, but it does seem that a lot depends on China and whether China feels strong enough. I mean, I had a NATO ambassador a U.S. NATO ambassador, the U.S. NATO ambassador to NATO, who was basically saying with one call, China could stop this if they call Russia. What's the Chinese, economy's thinking right now when it comes to some of the geopolitics?
I mean, look, I think on the economy, I would say China is, at one level in a very strong place. I think, growth has been, was stronger than consensus expectations. We think it's going to continue to be firm. It is a very bifurcated economy, so you have kind of a very, very strong external sector and a very weak domestic, part of the economy. And I think the implication of that from a global market standpoint is also the extent to which you're seeing this play out in the currency markets, in the strength of the CNY. It's kind of one of our strongest conviction views that the CNY will continue to appreciate. So I think that is going to happen. I think in the extent to which they can exercise leverage more broadly, I think is still an open question.
Yeah, what influence, Mark, do you think China's having at the moment? There's also a link between Iran and Russia.
Well, absolutely. So on the Ukraine front, the Chinese are extremely influential in the sense that they are sustaining Russia's ability to, produce drones and missiles and so on, in the face of sanctions. And so they are extremely important. They're very quiet about it, but it is, it is central. And it's true that if the Chinese were to lean on Putin, then it would change the complexion of the war greatly. But that's highly unlikely, I think. And then on the Iran-Russia side, it's been interesting that that's a dog that sort of hasn't barked. That Iran did make this. There was this kind of axis of anti-Western forces, anti-US forces, with forming with Russia and Iran, China, North Korea, and so on. But when push really came to shove, and the Iranians needed really significant help, air defenses and all that sort of thing, the Russians really couldn't supply because they're too engaged in Ukraine, and the Chinese, for whatever reason, didn't.
All right, thank you all for a terrific way to get us started this Tuesday morning. Mark Champion, Bloomberg opinion columnist, Hugo Miller, Bloomberg Legal Europe reporter in Geneva, and Kamaksha Trivedi is staying to discuss the Fed and the UK after the break. So coming up, UK unemployment has reached its highest level since the pandemic, setting the stage for a possible interest rate cut this spring. We'll have more on that next, and this is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
February 24th, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, conflicting U.S. economic data, falling inflation but strong hiring has made the path for future interest rates cuts unclear. That means a lot is riding on this week's inflation data and the minutes from the last FOMC meeting. Well, Kamaksha Trivedi, Chief FX and Emerging Market Strategist at Goldman Sachs, is here. Kamaksha, thank you so much for sticking around. We talked about geopolitics before. Look, there's just quite a lot of markets' expectations for interest rate cuts. It all depends on inflation. We had a benign print, but does it stay that way?
Yeah, I think it does stay that way. I think if I look back at our outlook for this year, I think we do have a stronger growth outlook. The strong jobs data that you mentioned is very consistent with that. I think the really differentiating feature of our view on the U.S. is that despite that stronger growth outlook, we actually expect inflation to remain benign. So the numbers we got, very consistent with that. And we think there's some cyclical reasons, the waning impact of the tariffs, this, softer wage growth, but also some structural reasons, whether it has to do with, some of the AI impacts, whether it has to do the deflation coming out of China that is being exported to the rest of the world, particularly in goods inflation. Both of those should keep inflation under control. So we are very comfortable with that, combination of slightly stronger growth, benign inflation. That should be pretty supportive for risk assets, and it should be moderately, cause the dollar to moderately weaken further, even after the depreciation that we've seen.
What can you tell us in terms of, some of the things that people have said is actually, tariffs will somehow get into the second half of figures in the U.S. Has that been already, been miscounted, or is it already priced in?
I think some of it has already been reflected. Some more will be reflected. But again, this is a kind of, unless you see sort of fresh developments there, they should sort of gradually come out of the, the upside impact that it's imparting on inflation. And so, again, I think that that's a kind of one-off impact, and it should gradually come out. And I think that's not going to be something that keeps inflation higher for longer, which is, again, one of the reasons, we're very comfortable with, we have 2 cuts in our forecast for the Fed, second half of the year. Yeah. That seems to be, the right place to be. The markets have swung back and forth. They were pricing less earlier. Now they're pricing a bit more. I think that's still the right modal view to have.
And what's happening to the labor market?
Yeah, we think the labor market is, still generally on a kind of softer trend, but the recent data has been quite encouraging. It's certainly not something that you're seeing like a, big slowdown that would kind of concern you so far. But it's been on a kind of softer trend for some time. I think combined with some of the stronger GDP data, the pickup in sort of industrial sector activity there, I think the cyclical data still looks good. And it goes back to what I was saying. I think there is this tension that I think we're going to have to live with for most of this year between, on the one hand, somewhat challenging valuations, lots of uncertainty in the AI space, the geopolitical risks that we were just discussing, but a really strong support from the cyclical side and from the macro combination of cyclical data being strong, inflation being benign, and that being quite a supportive thing for cyclical assets overall.
At what point, I don't know if you're expecting further dollar weakness, and is there a point where actually it starts hurting them?
We are expecting further dollar weakness. I think that, the dollar is still an overvalued asset on our metrics, and I think that high valuation was supported by kind of exceptional macro and market performance in the U.S. for many years. We think we are getting less exceptional macro and market performance from the U.S., and I think the dollar should depreciate further. I don't really think the rate at which it's depreciating and the fact that it's coming from an overvalued level should make it a big concern for policy authorities in the U.S. After all, it's a large economy. Trade is a relatively small share of GDP. So it doesn't have those kinds of impacts that kind of, small open economies need to be particularly concerned about. So, yes, more dollar depreciation ahead.
OK, let's also talk about the UK. A rate cut by the Bank of England could be on the cards after the latest UK unemployment data. For more, let's talk to Kit Reese, Bloomberg's Markets Today editor. Kit, so good to have you on the program. So what is the BOE likely to make of the data?
So things are trending in the right direction, really, for the Bank of England. So today we saw wage growth cool more than expected, and unemployment was elevated as expected too. But, I want to say that there's still a lot of uncertainty. The last vote was very, very close. So it shows just how divided members of the Monetary Policy Committee are. And looking at the data itself, things like payrolls are very prone to revision. So it's hard to get a very clean read on this. Plus, the ONS itself throws in lots of caveats into the data, saying that certain time periods can be a bit volatile. So it's hard to kind of get this broader read. But overall, the markets are fully pricing 2 rate cuts by the end of the year. Again, not exactly sure when these are going to come, so there's a bit of uncertainty there. But overall, it looks like things are trending in the right direction. And with tomorrow's inflation data, hopefully we might get even more confirmation that inflation is coming down whilst the jobs market is cooling.
Kit, the unemployment rate, again, is at the highest since the pandemic. So that's another thing for an already unpopular UK Prime Minister.
Yeah, definitely. Away from the economics, it's also a political issue. And, one thing that was really striking was the high level of youth unemployment in the figures. So obviously for voters, this is going to be a very salient issue. And some of the things that have added to this situation are the tax increases that were introduced last year. We have higher energy costs for businesses. The hike in minimum wage has also made it more expensive to hire people. So overall, businesses are still struggling. It's still a very weak backdrop, which isn't going to escape, voters, politicians, also, Bank of England members. So we've got a couple of risk events on the horizon, local elections, the spring budget. So we'll be definitely keeping an eye on the pound and gilts and how they perform going forward. But it's still very uncertain and sort of murky waters ahead.
Yeah, I have to say that jobless rate amongst 18 to 24-year-olds is 14%. So that, is a huge, huge number as young people bear the brunt of the hiring slowdown. Kit, thank you, as always. Our Bloomberg Markets Today editor, Kit Rees. Well, we're back with Kamaksha Trivedi. Kamaksha, when you look at sterling, first, the Bank of England is a very different, when you look at the level of interest rates, it's the gap between the ECB and the BOE. I don't know if that's justified. I think would be my first questions. And how do you expect the BOE to behave from here?
We expect more rate cuts from the Bank of England. In fact, we think there's going to be 3 more cuts the rest of the year. That's more than market pricing, like you were just discussing. I think that, for purely, I would say, plain macro vanilla reasons, the fact that the labor market is soft, that inflation is coming down, I think that gap between, the ECB rate and the Bank of England rate is going to compress, and that's going to drive, sterling weaker versus the euro in particular. I think that's one of our key views. The sterling also, bear in mind, had a very good few years, so it's sort of pretty highly valued as a currency. So again, it's not it's not undervalued anymore as an exchange rate. I think some weakness is likely, some weakness is warranted, some weakness should be, I think welcomed by U.S. policymakers from current levels.
The Prime Minister is going through such a tough time. Is that playing out in the markets? Could it play out in the markets?
I would say less so this year than it has been I would say through much of 2025, in the sense that I think political risk premia, both in gilts and in sterling, was a big driver, I would say, for most of last year. When we look at our metrics, in some sense, you had a little bit of a pickup of that in January around the sort of political developments there. But, my view for, actually gilts to outperform and for sterling to underperform is much more, I think, based just on the macro reasons. It's pretty straightforward. You don't need to invoke the politics. This is a country where the labor market is soft, where wage growth is coming down. Inflation is finally catching down. It's been a laggard to a lot of the other G10 developments. We'd expect that to happen this year. And that should allow the Bank of England to cut, and to cut more and more forcefully than many other G10 central banks. And that should keep sterling on a weaker path. That should allow gilts to start doing a bit better. That's a pretty macro, case.
Talk to me about yen. This was the big surprise with the landslide victory last week. But this is what happens to yen from now?
Look, I think that, the yen reacted in a kind of fairly positive way, along with all Japanese assets, in response to this kind of landslide victory. And, that momentum could continue a little bit longer. But I think the key here is, what is the stance of the Bank of Japan? Whether they are really willing to kind of step up the pace of the hiking cycle, to support that yen strength. We're not convinced that it's going to be that much faster. We're expecting the next hike to come in July. It could be a little bit earlier than that. I don't think it's going to be March. But, overall, the pace of that hiking cycle is still a pretty moderate one. Mm-hmm. And if you see, still some of the, wage growth metrics, they're picking up, but they're not really sort of, blowing things out of the water yet. I still think that it's been a little bit too far, too fast in terms of the yen appreciation. Our forecasts are centered around 155 for dollar yen. I think that's still around the right sort of level. I think the combination of the kind of intervention threat and alongside some of the other measures and the kind of buy Japan enthusiasm has settled both, I think, the yen and the long end of the rate curve, but I think the yen should gradually move weaker again.
So interesting. Kamaksha, thank you so much for being with us. Kamaksha Trivedi there, Chief FX and Emerging Market Strategist at Goldman Sachs. Coming up, the French President Emmanuel Macron will meet India's Prime Minister Narendra Modi as the two countries deepen ties. We'll have the details next, and this is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Geneva takes center stage for U.S. foreign policy with crunch talks on both Iran's nuclear program and Russia's war in Ukraine. UK unemployment reaches its highest since the pandemic as the labor market continues to weaken, setting up a potential rate cut by the spring. Plus, the French President Emmanuel Macron is making his fourth visit to India. He'll try to persuade the Prime Minister Narendra Modi to upgrade his air force with French fighter jets. So the French President Emmanuel Macron is on a three-day visit to India to advance talks on a massive defense deal for more than 100 Rafale fighter jets. He'll meet India's Prime Minister Narendra Modi and attend an AI summit as the two countries deepen ties. Now, for more, we're joined by our government reporter, Sudhi Ranjan Sen. Sudhi, thank you for joining us. So what can we actually expect from the Modi-Macron meeting?
Well, from the Modi-Macron meeting today evening, in fact, in a couple of hours from now,
we're going to see a wide-ranging multilateral announcements coming in, and primarily among them, the focus would be on defense, joint manufacturing, co-production between the two countries. There's going to be space, and also there is going to be cooperation in critical technologies like AI, for which there is a summit that's happening, but a bilateral cooperation between the two countries that is going to figure very prominently. In addition, there is going to be discussions on mobility of talented workers from India. India has been trying to create opportunities for its people. So broadly, these are the key areas where we're going to see discussions and announcements coming out.
So why is the meeting so important, and what is actually expected from the meeting of defense ministers?
Well, I mean, as we've reported, India has decided to go for the French-made fighter jets. Now, it's a multi-billion-dollar deal. It's the biggest defense deal ever for India in the last 7 decades. So that is the main talking point. However, there are some more steps, processes to be completed before it can, a contract can be signed. What's important about it is that France and India are coming to an agreement whereby there is going to be transfer of technology. There is going to be, the two countries getting together to manufacture. And what we have reported and are being told by government officials in India is that large number of these jets, of the 114 that India is planning to buy, are going to be made in India. That's going to be a big boost for Modi, a big boost for the defense manufacturing in this country. Overall, if you look, the significance is that India is widening and broadening its cooperation. While it's moving away from Russia, it's also not sticking only to the United States. And the two countries are trying to, look for certainty when the global order is going through huge challenges.
But, Sandy, I mean, Modi is also showcasing the country's tech industry at the summit. So, there are challenges, but also this is a reason to celebrate.
There is a reason to celebrate, but, and India is trying to get into the space of, AI governance, look at the space where AI is going to impact, try to generate the discussion on having AI for, the sectoral AI, so to say, where it's actually going to help or harm people. And in that, India and countries like France, Brazil, and the other countries like Switzerland, Spain, they've all come in with the hope that while they have perhaps lost out in the bigger race of artificial intelligence, these countries could make themselves relevant in the discussion and the discourse in this area.
Okay, so interesting. Sudhi, thank you so much. Sudhi Ranjan Sender, Bloomberg's India government reporter. Now, Geneva is at the center of geopolitical discussions today as two sets of peace talks get underway. It comes as the U.S. Secretary of State, Marco Rubio, attempted to reassure European leaders at the Munich Security Conference at the weekend after the damage inflicted on transatlantic ties over Trump's Greenland threats. Well, with us now is Evie Aspinall, Director of the British Foreign Policy Group. Evie, thank you so much for joining us. When you listen to what Marco Rubio was saying, it felt friendlier in tone, but not necessarily in substance. How should we take it?
Exactly that. I think there was kind of a conscious effort, and even as a person, I think there is a kind of a tendency among Rubio to be a bit more diplomatic when it comes to Europe than Vance was. And so there is a clear sense that there is some degree of willingness to be constructive. But underneath that, I mean, Europe has been absolutely destroyed, actually, by the kind of the state of relationships in the last kind of few months, and are very, very nervous about the future of the relationship with America. So whilst this goes some way to being like, oh, actually, it's not so bad, and maybe we'll do this with you, actually, underneath it, there's still lots of messaging about the importance of Europe rearming, and even comments about how the US would do it alone if it had to. And I think that will have sent some alarm bells ringing.
So what I don't really get to grips with, Evie, is that is Europe doing enough? Are they trying to do enough to get their act together so that they can stand alone in terms of defence?
Europe is definitely scaling up, and it's getting up pretty rapidly. But a lot of it is noise. A lot of these commitments are being made to appease Donald Trump. They say, oh, no, we're going to increase defence spending to 3%, 3.5%, because it looks good. But the practicalities of doing that, when it comes to defence procurement, defence capabilities, a lot of Europe doesn't have that. There's a broader question as well, which is lots of European countries are having difficult economic situations at the moment, and trying to build public support to increase defence spending at this moment in time is very, very difficult.
So how would you describe this transatlantic relations? For me, it was also very telling that Marco Rubio yesterday, after the Munich Security Conference, went straight to Hungary, offering his support and pledge to Viktor Orban.
Yeah, and I think that in itself says a lot about the reality of where the Trump administration is, where it aligns itself with people in Europe. You know, Hungary is a notorious agitator within Europe, within the EU particularly, and so there is a lot of discomfort with that decision, even though it's perhaps not too surprising. It's where a lot of Trump's politics lie. But I think it speaks to the ideological differences that are at the heart of the rupture we're seeing between the US and Europe.
So what do you think that Europe does next if these U.S. security commitments become less and less predictable?
I think Europe is trying very hard to work out how it can prioritise its own defence without the US, how it can reduce some of its reliances. That is incredibly difficult, not least because there are very impressive US defence companies that are incredibly powerful, and actually a lot of Europe is very reliant on. So it's a very difficult thing for Europe to do, and they are very reliant on the US, but they're going to be conscious efforts to move away.
I mean, what does success in Ukraine look like? Because, you know, if you succeed in Ukraine, that kind of keeps Europe together.
Exactly, and I think that's one of the biggest challenges at the moment is that Europe isn't in the conversations around Ukraine and the ongoing negotiations, and so it's actually its voice isn't really being heard. You know, it's critical for Europe that Ukraine's sovereignty is protected, that territory isn't lost, that it's able to come closer to NATO, to Europe, and that's looking quite unlikely, particularly with the stance Trump is taking to negotiations.
But I mean, a reminder that actually there's not much, there haven't been arms or money coming from the U.S. for quite many months.
Yes, exactly, and so Europe has stepped up, actually, to some degree for Ukraine, but it's not sustainable. Long term, Ukraine cannot last and it cannot survive without U.S. support, and so these negotiations are critical for Ukraine's future.
So should Europe get closer to China for either protection or certainly influence over Russia?
I think you'll definitely see Europe will move closer to China. And in large part, that's kind of, we're in a world that is more multi-aligned and it is becoming increasingly acceptable to work with lots of powers at once. And so we are seeing Europe moving closer to China. There are benefits to that, primarily economic, but there are also risks, and the security risks of closer collaboration with China are very real, and I think a lot of Europe is aware of them, but at this moment in the time, because they're so nervous about the United States, they're being pushed towards China out of necessity rather than choice.
So, again, are the next couple of months crucial, or does Europe have a little bit more time, given all the conflicting messages from the U.S. and, frankly, also from China?
I think it really depends, in part because of what Trump does. If he'd asked, a month ago when there was a Greenland crisis, everyone would say, Europe must act now, it's all very, very urgent, and we need immediate independence. That's not realistic and it's not viable. At the same time, it's kind of calmed down a little bit, but it always feels like we're about one tweet away or one comment away, and suddenly everything will spiral again. So I think Europe is trying to move very quickly, but it's not got the capabilities yet to do so.
What do you worry about the most right now when it comes to geopolitics? And actually, we also have a very weakened UK Prime Minister, and so I don't know what that means and how that's reflected in negotiations.
Yeah, I think for Europe and across Europe, Ukraine is the top priority. It's been going on a long time. A lot of attention has been drawn away from Ukraine in recent years because of lots of other challenges and crises. But that is kind of in many ways the symbol of European security, and failure to support Ukraine would ultimately splinter Europe and its security long term. And I think you're right. The UK has a challenge because, post-Brexit particularly, its position on the world stage has been weakened. We have a leader that's got domestic challenges that it's trying to fight, and he's done a very good job, actually, on the international stage, and that's been quite well respected, in particular, working as a bridge between the US and Europe. That bridge position is increasingly difficult, though, because relations are splintering so quickly.
I mean, are you expecting US foreign policy to change as we get closer to the midterms?
I think so. I think there is a potential that it either escalates or it calms down, whichever he feels is the most politically palatable at the time. I would like to hope that it'll calm things down a little bit, you'll focus domestically, and the international side will be a little bit calmer and more constructive, not least because actually many Americans are supportive of a relationship with Europe and want to make sure that those alliances stay strong.
I mean, there's one question on actually Macron of France is also so weakened. We were just, hearing how he's in India trying to sell some of the Rafale fighter jets. But is Germany and actually Chancellor Merz the new kingmaker in Europe?
So Germany's definitely stepping up. I would say Germany has a challenge that culturally it's very anti-defence and has been for a long time, and it's had to kind of in the last, particularly post the invasion of Ukraine, shift towards a more defence-led mindset. That isn't natural for Germany, and actually when you see the next German elections, I think that will come out again. So in some ways Germany is stepping up, but I think you will always see Germany, France, the UK, and increasingly Poland kind of leading within Europe on defence.
And where's China in all of this? They've been quite quiet.
Yeah, they have been quite quiet. I think they're kind of letting things play out, and at the same time having gone one-on-one conversations. We obviously had Starmer was in China recently. Lots of European leaders are going over to China, making deals, focusing on growth, and kind of winning over friends and allies slowly and surely as the kind of chaos happens over to the other side.
Well said. Evie, thank you so much. Evie Aspinall, they're director of the British Foreign Policy Group. Now, India is hosting one of the world's largest artificial intelligence summits, with the Prime Minister, Narendra Modi, seeking to clear a path for India in a heated race to develop frontier models. World leaders and tech giants, along with investors, are meeting in New Delhi. Let's bring in Bloomberg Opinions columnist Catherine Thorbeck. Catherine, thank you for joining us. So there are some big names attending the summit. What does India hope to achieve from this?
That's right. So it's really a who's who of Silicon Valley descending here on Delhi this week. You know, we have Sam Altman from OpenAI, Sundar Pichai from Google, Dario Amodei from Anthropic. And at the same time, Indian companies are really commanding the spotlight, too. We had news earlier today that the Adani Group is investing $100 billion to produce data centers and really position India as sort of an AI hub. And, you know, in some ways, I think this summit is a bit of a sort of PR spectacle for Modi. But at the same time, I think it's really giving India an opportunity, and really the global South, to really have a seat at the table in this AI conversation. You know, so much is focused on the US-China AI race, but middle powers don't want to be left behind. And I think that just the amount of excitement for AI and for tech in India this week is just tremendous. And you can really feel it in the air and really in the traffic here in Delhi this week.
So on the other side, what does the tech and AI industry hope to get from India from the summit?
Right. So India has really emerged as one of the biggest users of generative AI. You know, it has an incredibly huge and tech-savvy young population. It has the second highest user base of any country behind the US of ChatGPT. So it's really become this sort of must-win market for big tech companies. And they're really, you know, investing billions and pulling out all the stops to really win over and lure Indian users to their AI tools and services and platforms. So I think this competition for India has really become sort of a really, like I said, must-win market for these Silicon Valley companies. And I think just that user base and tapping into that young and tech-savvy population has become very, very important.
In a wider view, can Southeast Asian countries beat the West and also China in this global AI race, or are they really lagging behind?
Right. So I think it will be very difficult for India and for other countries to compete on foundation models and on building sort of these big frontier models. You know, you really need deep pockets, and that's a very difficult task. And there's already some sort of clear winners. But at the same time, I think that there's really an opportunity for India to make a big difference when it comes to building AI products and, you know, AI sort of applications. And I think that another, you know, sort of secret weapon that India has is really its people. You know, as I mentioned, it has this huge user base of AI, but it also has a huge developer base. So I think that there's definitely a lot of potential and a lot of excitement for India to sort of keep pace in this AI race, and especially when it comes to making sort of products and applications.
I mean, Catherine, do they have to choose between China and the US? And is China really only like 6 months behind? I mean, 6 months feels like you can catch up pretty quickly.
Right. So I think that they're trying to sort of position themselves as sort of a third way and show that sort of a third way is possible that doesn't have to sort of align with China or the U.S. And at the same time, like I said earlier, you know, U.S. big tech companies, Silicon Valley, are really vying very hard for this Indian market. And I think that, you know, there is a China sort of delegation here as well. So we'll have to sort of see how it all plays out. But I think it's definitely something to watch here in Delhi this week.
Catherine, thank you so much. Our Bloomberg opinion columnist Catherine Thorbeck. Now, coming up, AI fears send Dassault's and Siemens stock down this morning. We'll have the latest tech and market development next. And this is Bloomberg.
world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Season is here.
Let's get back to the earnings story.
Get all the details that you're going to need to start the trade.
Bloomberg is first to break the numbers.
A bunch of earnings. Pretty Agricole.
Earnings from Heineken, ABN AMRO reporting as well.
Fantastic reporting from you and the team.
With the smartest insights.
You've delivered again record results.
If we take a step back and look at the yearly results, the income is stable.
Our earnings interviews continue. Lots of really contrasting conversations.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, AI continues to cause market disruption. Dassault Systèmes and Siemens are the latest to be hit by investor concerns. Let's bring in Bloomberg senior market strategist Neil Campling. Neil, thank you so much for joining us. So what does the appetite for AI investment tell us? I mean, it remains high despite the disruption hitting other equity valuations.
Yeah, absolutely. There's a big conference going on in AI in India right now. Everyone who's someone in AI is there. And we're getting talk about Moonshoot looking to raise $500 million on a $10 billion valuation. Quite remarkably, that's double the valuation just a month ago when they last raised money.
Yeah, so and this is a Chinese AI company.
Chinese AI company, and today there's a lot of focus on Chinese AI. We had Alibaba come up with the latest update of their AI toolset, and we're expected any minute, any day to have DeepSeek as well come out. So in public markets, we are having this kind of this two-way pull about the disruption of the AI is causing, and that's very much on a vertical layer by specific apps. But on the horizontal layer, these big language models with these big data sets, there's still a lot of investment that's wanted in this space.
Yeah, I feel like we're, and it's this race, especially between the U.S. and China, but also within the U.S., it's different, companies trying to get there first or trying to have a better product. But when does it settle? Because you could have this fight like 6 months in, 6 months out, I'm more advanced, I get used more, and then it changes in 2-3 years from now.
Like it does with every technology evolution, as we've seen. Sometimes the early mover advantage doesn't necessarily pan out. But I think the key that we have to remember on this particular example is the real value is in the data and who owns that data. Now, one of the things that Alphabet has is it owns the data. Right. Microsoft doesn't own the data. It's mainly through their OpenAI JV. So in that partnership model, it's about who owns the data. And that's what I think is going to play out during this year, as to find out who the likely winners are, for sure.
Neil, talks between Anthropic and the U.S. government over the uses of their AI systems. What does it tell us about safeguards?
Absolutely, and guess what? It comes again down to data and who owns the data, and will data be used in a wide range to get data on the US citizens. And so safeguards are important, and like with any technology, we need to have processes in place to make sure that they are used safely and do not get used by bad actors, which obviously is always a risk. And so we have to have these guardrails in place.
Neil, thank you so much for joining us. And Neil Campling there, Bloomberg's senior market strategist. Now, Hyatt Hotels executive chairman Tom Pritzker is retiring from his position and will not stand for re-election to the company's board. This, they said, citing an association with Jeffrey Epstein. Now, Pritzker says he deeply regrets his association with Epstein and Ghislaine Maxwell and decided to quit the role he's held since 2004 after discussions with fellow board members. And President Trump says he's speaking with his Chinese counterpart Xi Jinping about weapon sales to Taiwan. While speaking aboard Air Force One, Trump said he would make a decision soon. China has previously warned that the U.S. to handle arms sales to Taipei with the utmost cautions.
President Xi, in your talk with him recently, warned about sending more weapons to Taiwan. What was your response to him? Are you going to send more weapons to Taiwan?
I have a response. I'm talking to him about it. We had a good conversation, and we'll make a determination pretty soon.
And Bloomberg has learned that SpaceX and xAI are competing in a secretive new Pentagon contest to produce voice-controlled autonomous drone swarming technology. Sources say Elon Musk's companies are among only a few selected to compete in the $100 million prize challenge. While SpaceX is an established defense contractor, AI-enabled weapons development marks a new and potentially controversial move for Musk. Now, Russia is trying to leverage its old soft power ties in Africa in the absence of significant economic hard power, with the continent being a target for Russia since the Soviet Union supported decolonization during the Cold War. Well, that's a story in today's Bloomberg Big Take by Anthony Squazin. Anthony, thank you for joining us. So talk us through, first of all, what Russia is doing, first of all.
Thank you. As you mentioned, Russia doesn't have a huge amount of money to spend and hasn't got much to offer in the way of trade to Africa, but it does want to build its influence. So what it has turned to is soft power, and one of the most obvious examples of that is the way that it has rapidly expanded the presence of the Russian Orthodox Church across the African continent, signing up priests, getting new adherents, and those churches and priests often echo Vladimir Putin and the Russian government's talking points about Western decadence, the impact of colonialism on Africa and how Russia's their friend, and conservatism and family values, which appeals to a lot of Africans.
So, Anthony, what's been the reaction on the ground?
Well, it's been quite. It's been done in quite a stealthy way, so it hasn't been noticed by a lot of governments. The expansion began in early 2022, and they moved from 3 countries into 34 countries across Africa. But what is happening now is that there are a lot of other things coming up about Russia's involvement in Africa. Recruitment of Africans to fight in the war against Ukraine, recruitment of young women to work in drone factories. And there's beginning to be a realization that by pulling too close to Russia, African countries are also letting themselves in for a relationship that could be quite difficult for them, especially when they have to explain to their populations why they've let their people go and fight in a foreign war they know very little about.
Anthony, can religion replace the economic and political moves by other countries seeking influence in Africa?
I don't think so. I think China, the US, Europe will always have more heft because they can spend a lot of money on infrastructure, funding power plants, building roads, investing. There are companies doing business in Africa. Russia doesn't really have that to offer, but it doesn't have anything else, and it's doing its best with the tools it has. And this is one of the ways it has decided to do its best to build up its influence. And alongside that, they've also opened a lot of cultural and language centers, and that's the strategy it's following. Whether it's successful, we'll have to see.
Anthony, where's China in all of this?
Well, China hasn't got anything to do with particular strategy, but China is dominant in Africa. It's by far the biggest trade partner. It's built in a huge amount of Africa's infrastructure, roads in Nairobi, dams in Cameroon. So it's very well known, and its soft power and contribution towards the African continent is recognized by your ordinary citizens. But it isn't working hand in hand with Russia on this particular case.
Anthony, thank you so much for the great reporting, but also what we've seen, of course, for the big take. Anthony Squatson, Bloomberg's senior reporter for Africa. Now, this is a picture across the board. Again, stocks seem to be fluctuating a little bit. Contracts on the NASDAQ 100, for example, suggesting a slide in technology shares that may have further to run as Wall Street investors return from a holiday break. Now, the outlook for the Fed rate cuts also in focus following Friday's inflation data. Investors seeking clues on the Fed's rate path from Michael Barr and San Francisco Fed President Mary Daly. And you can see S&P futures down 0.1%. Now, Jesse Jackson, one of the most prominent U.S. civil rights leaders of the 20th century, has died. He was 84 years old. In a statement, Jackson's family said he died peacefully, surrounded by family.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, I was traveling, the business. But of course, after, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands my concept. He supports me 100%. But he's a very smart people. Sometimes, strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures are lower, treasuries higher as traders return from a long weekend. We're looking ahead to December inflation data later this week after last Friday's January PCI. Round 2, Iran and the US set for nuclear talks in Geneva with Oman as the mediator. And Anthropic and the Pentagon hit a snag in contract discussions over mass surveillance and security concerns. All that coming up the next hour, but let's take a look at these markets because, of course, it's a holiday-shortened week here in the United States. There was no trading for equities or treasuries, obviously, yesterday for President's Day. And we did see that rally fizzle out on Friday after that more benign CPI data on Friday. That has futures pointed lower. Even Russell 2000 futures are lower today. In fact, small caps may test their 50-day moving average today if we continue on this track. But it's particularly in NASDAQ 100 futures where we're seeing the decline. Also seeing a big move in treasuries. So we had that big move on Friday, and that is continuing today with the 10-year yield down another 2 basis points. That is a massive move just in the last 2 weeks. Traders pulling forward bets for Fed rate cuts and maybe even adding in a third this year. That 30-year yield at 4.66 and the 2-year yield all the way down to 3.39. We're going to be speaking about all of the market moves and whether that might all change this week in just a few moments. But first, let's get to some individual market movers this Tuesday morning. Over to London and Abir Abu Omar.
Good morning, Vonnie. Let me start with some M&A action for you this morning, starting with Zim Shipping, which was up a whopping 40% this morning on the back of some, as I mentioned, M&A news. Hapag-Lloyd offered $35 a share for Zim, and it's going up this morning in the pre-market. That values the company at around $4.2 billion. And this is a space that struggled quite a bit since the post-COVID days because of freight rates that have gone lower. But moving on, staying in the same space, but moving on to another company that is doing quite well this morning. Norwegian Cruise is up this morning, and this is on the back of activist investor Elliott taking a stake that is over 10% in the company. This is another stock that hasn't done well in recent years, so Elliott wants to help it with this underperformance. And then finally, Paramount, Vonnie, it's gone up this morning 3%. It's paired some of those gains, but still up quite a bit, and this is on the back of renewed talks with Warner Brothers. We reported over the weekend that Warner Brothers might be interested in coming back to the table with Paramount, and this is on the back of an amended deal that Paramount has given Warner Brothers. So this could bring a renewed push to the bidding war with Netflix. We'll keep an eye on this space. Vonnie?
Yeah. That could be a second round. How exciting. Albir, thank you so much. It's all deals action today. Coming up later in the hour, Marvin Lowe of State Street saying it's rotate America, not sell America these days. He's joining at 5:30 a.m. Eastern. But first, Islamic Republic of Iran broadcasting company Khan reporting that nuclear talks between Iran and the U.S. have begun in Geneva in the last hour. Take a listen to President Trump yesterday.
So I'll be involved in those talks indirectly, and they'll be very important, and we'll see what can happen. I mean, it's been typically, Iran's a very tough negotiator. I think they want to make a deal. I don't think they want the consequences of not making a deal. They want to make a deal.
Joining us now is Bloomberg's Onur Ant. And we know, Onur, that we also are seeing the Foreign Minister Aragachi speaking with the head of the IAEA before these talks. Do we know anything about how that IAEA conversation will have gone?
That's the conversation where Iranian Foreign Minister Aragachi relayed their proposals to the IAEA, which has been pushing for a resumption of visits to nuclear sites in Iran that were bombed by the US and Israel back in June during the 12th-day war. We know that those are the proposals that Iran will be delivering to the US as part of the negotiations today that are taking place in Geneva with the mediation of Oman. Now, the key thing to note here is that we have seen that although Iran has long maintained that nuclear enrichment on its soil is an inviolable right under the Nuclear Non-Proliferation Treaty, of which it is a signatory, it has also signaled some flexibility around that red line, and it has tied the whole negotiation over the nuclear enrichment activities to the potential lifting of U.S. sanctions during the Geneva talks. So that's going to be the thrust, the gist of the talks today taking place between the two sides, Vonnie.
Yeah, and we know that the oil market is watching this because it's binary, right? It could go either of two ways. We could start getting more supply if sanctions are eased, or less supply if there are disruptions, Onur.
That's correct, and we have seen that already yesterday when oil prices, after posting their first weekly decline since the beginning of the year, suddenly jumped on the news that Iranian Revolutionary Guards were holding military drills in the Strait of Hormuz. And I should remind you that the drills itself, although they do take place every now and again, what was new about the drills was the fact that the Revolutionary Guards sort of surrounded those drills with a very specific language that was referencing possible potential threats coming to the Islamic Republic from the Strait of Hormuz, and how they were ready to deliver a decisive blow to any threat coming from the area. So yes, Iran is signaling that, yes, it is ready to negotiate with the U.S., which it is already doing, but it is also ready to respond to any military confrontation should the talks in Geneva and later possibly elsewhere fail to yield a compromise between the two parties.
Yeah, I mean, we've just had a statement from Khamenei just literally 4 minutes ago to President Trump, you won't be able to destroy Iran. So it's interesting to see the two tracks at the same time. We're also seeing the beginning of 2 days of further talks now. U.S. mediators negotiated on Ukraine, Russia. Onur, any hope that there'll be a breakthrough there?
Well, the talks there are equally tricky. Obviously, there are still huge differences between the two sides. We have seen that Zelensky coming under pressure, especially from the US, to possibly consider concessions to basically bring Russia to a peace deal. And we have also reported in the last few weeks that US is somewhat operating on an expedited timeline, given the midterm elections in the US. But yes, the gap there also remains very, very wide, and it remains to be seen how that could be bridged. Vonnie.
Onur Ant, Managing Director for Middle East and North Africa, thank you so much for joining us today. Turning to tech now, Anthropic in talks with the Pentagon, but hitting a snag. The AI company wanting to put guardrails in place to stop its Claude tool from being used for mass surveillance and for developing weapons. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. Tom, are these negotiations with the government, or can the government just direct the company to do as it says?
Well, at the moment, they're negotiations. As far as we understand, Anthropic has had and is coming up to the end of a 2-year contract with the government where it's provided models that have helped to pull in data, particularly in terms of the national security data, intelligence, and to make sense of that for the government. Then they're coming to the end of that contract, and the negotiation seems pretty fraught because they're trying to put a guardrail around this technology to stop it being used for, as you say, the mass surveillance of Americans or for the use of build-out of autonomous weapons systems. The Pentagon seems to be pushing back pretty hard. They say they want to be able to use this capacity, this AI model provided by Anthropic, for everything as long as it is legal. And we're hearing from some defense officials briefing Bloomberg, suggesting that some within the Pentagon, some within the Department of War, see Anthropic now as a supply chain risk and may even consider talking to vendors to the Pentagon and getting to confirm that they do not use Anthropic. So the stakes are pretty high for Anthropic, and it potentially opens the door for OpenAI, for Gemini of Google, for Grok of XAI, potentially to get a piece of the action. They are all working on systems, on models that would be compliant and would fit into and bed into legally into the Pentagon's workflow. They're not there yet, but it potentially opens the door to that. So we'll continue to watch these negotiations, and it also points to two key things. One, militaries around the world, including the US, are leaning very heavily into AI software and AI hardware embedded, and the ethical dilemmas now for companies and large language models and labs that still maintain that the build out of AI and the move towards artificial intelligence are about benefiting humanity. So the ethical concerns will become more acute. And what we see in terms of on the battlefield, how AI changes both the hardware and the software, that will also continue to be in focus.
And Tom, as I understand it, Anthropic already had built Claude Gov specifically for this purpose, right, to offer it to the US government as a tool.
Yeah.
Are we to understand that perhaps that didn't go far enough, that it doesn't allow the government to do as much as the government wants?
Well, I think that's the interpretation, isn't it? I mean, again, according to reporting, actually officials have been really pleased and really impressed with the Claude Gov model that they've had access to in terms of pulling together intelligence data, making sense of it, and allowing them to make smarter and quicker decisions. And it seems that that has been something that's been welcomed broadly, but this is a Ministry of War, Defense Department of War, and a Pentagon under Pete Hegseth that wants to have more utility, that wants to be able to push the boundaries in terms of what they can use this tech for. And this happening at the same time as there are reports that SpaceX, owned of course by Elon Musk, is looking to take part in a competition at the Pentagon to build out voice-activated autonomous drone swarms. So again, the Pentagon is leaning into this. They see this as really important in terms of how they fend off their adversaries and having the tools at their disposal to be able to contend with their adversaries. And this is leading to this point of contention.
Tom McKenzie, thank you so much. Tom McKenzie, host of Bloomberg Tech Europe, among other programs on Bloomberg. And we're going to continue talking about what Tom just mentioned, because SpaceX and XAI are competing in a secretive new contest to produce autonomous drone swarming technology. Let's get more with Bloomberg's Lauren Grosh. Lauren, as I understand it, this is sort of next-gen drone autonomy, right? So we have drone autonomy, but this would be voice-controlled swarming drones capable of coordinating multiple unmanned systems at the same time. Am I reading that right?
Yes, as my colleague Katrina expertly reported, the idea is translating voice commands to swarming drones in pursuit of a target over air and over the ocean. And apparently that is still a challenge, and so the Pentagon is hoping to compete this kind of software technology using AI, and SpaceX and XAI, the newly formed company, seem to be part of that competition.
Who is close to having this technology? As I understand it, just regular drone technology wise, we are seeing a lot of companies supply that to the Pentagon, right? And not just the majors, but also some smaller independent companies and so on. Are they all in the race for this drone swarming technology?
I'm not exactly sure, but I know that Katrina also did report that OpenAI is part of this competition as well. So I imagine that many AI companies are going to want a piece of this pie in some capacity.
All right, and they operate separately, SpaceX and XAI still, even though we know that they're very likely to combine. How might they work together in the future?
Sure. So as we understand it, when we reported that SpaceX acquired XAI, it is a wholly owned subsidiary, and they are operating largely separately. That has a lot to do with the fact that SpaceX is subject to something called ITAR, International Traffic and Arms Regulations, whereas XAI employees are not cleared for those regulations. And so they want to remain largely separate. But I think this is a clear sign of how the companies could be working together moving forward. Also, there are obvious ways that they are going to work together. For instance, one of the main reasons for this merger is that Elon Musk has this grand vision of putting data centers into space to do complex computing for AI. So obviously SpaceX would be serving that, XAI would be the customer for SpaceX. And then as we also understand, SpaceX employees have been using a specialized version of Grok into their workflow. So there is going to be some crossover moving forward.
All right, Lauren, thank you so much. That is Bloomberg's Lauren Rush. Earning two other top stories trending on the terminal now this morning. Danaher nearing a roughly $10 billion deal to acquire U.S. medical technology firm Masimo. That according to the Financial Times. The deal would value Masimo at a premium to its almost $7 billion market capitalization. Danaher develops and sells products used in biotechnology, life sciences and diagnostics. BHP shares jumping to records after posting earnings at the upper end of analyst expectations. Copper accounted for more than half of BHP's profit. Bloomberg TV spoke with BHP Group Chief Financial Officer Vandita Pant.
For the first time, 50%, more than just about 50% of our earnings, EBITDA, came from copper, and performance across our assets has been very good. To take example of Escondida, which is our largest mine that we run in Chile, we are revising the guidance up for this year and next year, which means that we will be producing more copper in the constructive copper price environment that we are in.
And Goldman Sachs is planning to remove the diversity criteria in identifying potential board candidates, according to the Wall Street Journal. The bank's board is expected to approve changes this month. The move in line with similar rollbacks by peers, including Citigroup and Bank of America. Coming up, we head over to the United Kingdom. Sterling weakening against the dollar as unemployment hits a 5-year high. That's next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bank of England in February, they kept the door open to a March cut. I think today's data reinforces our base case that they will go in March. But does this mean that they need to go back to back or they need to go very aggressively? In my opinion, the data has not weakened enough yet for us to make that conclusion.
The unemployment rate in the UK hitting its highest since the pandemic. That's cementing traders' bet on 2 interest rate cuts this year by the Bank of England. For more, let's bring in Morwenna Coniam in London. So as the commentator there was saying, Morwenna, this very likely cements a cut next month, but will there need to be back-to-back cuts, particularly since we're seeing inflation coming down? It was 3.4%, it's now at 3%.
Well, yes, it does solidify those bets for an interest rate reduction. It really follows with what the Bank of England have been suggesting that they wanted to do. They've been looking for further evidence of inflation cooling. We'll get more of that from CPI on tomorrow. But this does indicate that wage pressure has been easing more than expected. And that really sort of clears the path. And that's the way that the market has responded, now fully pricing in a rate cut for April and also moving towards it being more than sort of 70% likely in March, with a second cut fully priced in for November.
Yeah, and they do get more data before the April meeting as well. Now, more troubling perhaps is that the unemployment rate for males aged 18 to 24 is at 17%. That is a massive figure. And, you know, there's only so much central banks can do for particular demographics, right? But is there anything they can do to target the weaker segments of, you know, what's in this data?
I think that's an interesting question. What we're seeing is sort of private sector wage growth. That slowdown has been coming, which is what we really need to see. I think the public sector side of things, they might be able to look through that as being the sort of one-off due to pay rises that are sort of known about. I think what's interesting when we've just seen some productivity growth data coming through is that you're seeing productivity increasing a lot in IT, perhaps with the AI impact there, but in other areas it is decreasing, and overall there's been a productivity decrease according to the labour forces survey data that the ONS currently use, and that is quite concerning, I think, for young people, especially as we do see unemployment rising slightly more than economists had expected.
We saw quite the move in sterling, Morwenna, and gilts as well, moving off the back of this. Were markets not anticipating such weakness?
I think it was a bit of a surprise, actually. We had expected wage increases to slow, but not by as much, not to sort of 4.2% instead of 4.6%. That was quite a surprise. We saw sterling fall quite sharply when the number came out. It's come back a little bit now, but still, you know, falling below 136. And also, particularly in gilts, seeing yields coming down as those traders adjusted their bets, particularly at the lower end of the curve. But that's something we've seen across the curve and outperforming Europe today as well in terms of the gilt market. So that's certainly good news for mortgage borrowers, but also for the Treasury as they look to hold on to or increase their fiscal headroom ahead of next month's spring statement.
Yeah, exactly. Well, we'll see if those inflation figures tomorrow do come in at around 3%, as consensus is expecting in January, down from 3.4% in December. Morwenna Coniam, thank you so much. Coming up, Hyatt Hotels chairman Well, he's stepping down over Jeffrey Epstein ties. More on that story and look at what else is making headlines in your front page news next. This is Bloomberg.
For us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Development, for example, and Nuvia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth we've started with by empowering our customers across all our segments?
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting activist Elliott has built a more than 10% stake in Norwegian Cruise Line, making it one of Norwegian's top investors. The company has lagged competitors including Royal Caribbean and Carnival. Norwegian shares among the worst performing in the S&P 500 over the past 5 years, with the stock remaining near COVID-era levels. Next up, the Financial Times reporting hotel magnate Thomas Pritzker has stepped down as executive chair at Hyatt, the hotel group founded by his father. This after documents revealed the extent of his ties with sex offender Jeffrey Epstein. The documents revealed extensive email correspondence and references to meetings spanning more than a decade to 2019. Pritzker said in a statement he exercised terrible judgment in maintaining contact with Epstein and Ghislaine Maxwell. And finally, the New York Times reporting Los Angeles Mayor Karen Bass is calling on 2028 Olympics chair Casey Wasserman to resign. This after his name surfaced in the Epstein files. The mayor told CNN she cannot fire him, noting only the non-profit board of directors can replace him. Wasserman helped craft the winning bid for the games, but announced last week he's selling his entertainment agency because his limited interactions, as he put it, with Epstein and Ghislaine Maxwell 2 decades ago had become a distraction. Those are your front page stories. Let's take a look at the market setup now going into this Tuesday post the long holiday weekend. Futures lower, yields lower, and the Bloomberg Dollar Index unchanged. Coming up, Marvin Lowe of State Street.
are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures pointed lower, treasuries higher as traders return from a long weekend. We're looking ahead to December PCE data later this week after January's CPI data was benign Friday. Round 2, Iran and the US set for nuclear talks in Geneva, Oman mediating again. And Anthropic and the Pentagon hitting a snag in contract discussions over mass surveillance and security concerns. So let's take a look at those markets now, because we are coming off that long weekend. You can see futures pointed lower, particularly Nasdaq 100 futures indicating that tech sell-off might continue. We did see a rally in equities, but it fizzled out on Friday. This, of course, as we saw a major move in treasuries as well. Let's take a look at where they stand, because that move continues. We have the 10-year yield now under 403, the 2-year yield under 340, and the 30-year yield at 467. It's a pretty amazing move. Traders pricing in perhaps a sooner Fed cut and maybe even a third Fed cut this year. Still have a few stragglers in terms of earnings. Palo Alto Networks reporting after the bell, for example. It's currently in the long part of the Goldman Sachs AI proof basket. We'll see if that proves to be a good play. But let's get some individual movers before the market open now. And Abir Abu Omar.
Hey, Vonnie. Let's start with some consolidation in the shipping space this morning, starting with ZIM that is up 35%, almost 35% this morning. This is on the back of Hapag-Lloyd, the German counterpart, offering $35 a share. That values the company at around $4.2 billion, and investors are clearly looking favorably at this morning. Moving forward to, and staying in the same lane, to Norwegian Cruise that is also up this morning. This is on the back of a Wall Street Journal report. The Wall Street Journal are reporting, citing some of their sources, that activist investor Elliott is interested in taking a stake of over 10% in the company that's struggling quite a bit. They've already put in a board member, suggested to put in a board member in Norwegian Cruise, and this is why the stock is acting favorably again this morning, up 11%, adding on those gains from the morning. And then finally, Paramount, Vonnie, that is up this morning slightly a little bit. And this is a story that includes two other stocks, but they're not moving as much. And this is on the back of a Bloomberg report over the weekend. Now, the market was closed yesterday. So the report over the weekend by Bloomberg suggested that Paramount's amended deal to Warner Brothers suggests that Warner Brothers might be interested in coming back to the table and discussing the terms with Paramount, and that suggests that we could see a further escalation to this bidding war between Netflix and Paramount over Warner Brothers. Vonnie, back to you.
Sure, David Zaslav is thrilled with all of this escalation. Abir, thank you so much. Abir Abu Omar there. State Street's Marvin Lowe weighing in on some of the latest economic data, then writing, quote, the market's recent reaction has been that all news is bad, creating the view that recessionary odds have increased. Our view, however, is that the economy remains on solid footing. Marvin is senior global macro strategist and joins us now. And of course, your view is much more than that, right, Marvin? Your view is that it should be risk on. It's not just that the economy is on a fine footing. So why is the market then pointing to perhaps an increased odds of recession?
Yeah, I mean, we entered the year ultimately heavy from a positioning perspective. We know how solid the markets across a number of asset classes were last year. So, overall risk had a fairly heavy weight in portfolios. And we're going through some fairly significant, questions and reshuffling with regard to winners and losers, particularly around this technology AI trade. And that's going to create volatility. If we were coming in from a much looser overall positioning perspective, we'd probably have a little bit more room. But, volatility is something that probably isn't that surprising after the year we had last year and really the last few years.
You say mega AI is starting to crowd out less robust business models. What gives you the confidence that mega AI is, the place where the business models are actually robust?
Yeah, I mean, certainly I think that this is just the evolution of this kind of broad, really disruptive trade and technology that's making its way into the economy. We're starting to see the fruits of that labor, the fruits of the amount of capital that's being spent. I still think that we're quite early on, and we're going to be surprised by some of the losers, and some of the winners might not necessarily be names that we know yet at this point. But it's having the impact that a lot of this investment has been pointing at towards for the last several years already.
Marvin, is it even possible to value these companies right now, to know their sort of economic value, if you like? Obviously, famously, Warren Buffett didn't get into Apple, right? Because at the early on, he couldn't value Apple properly.
Yeah. I think there's a lot of truth to that. The disruptive nature. Yeah, if we kind of just think about overall, communications and the internet during the early 2000s, the disruptive nature of that technology across businesses, across economy, wasn't really understood. But it certainly was accretive to overall growth. It was accretive to capital spending, and now we have the fruits of that labor. I think very much discussion is similar to AI, and that's what makes it difficult, particularly given how widespread the rally has been across any name associated with AI, and that really wasn't a healthy response. There are going to be losers to these really large winners.
Can I move to the Fed, Marvin? Because a lot of this volatility is possibly, predicated on what the Fed is going to do this year. I mean, there's so many outstanding questions, and sure, we might be talking about the difference of one rate cut or a couple of months, but it could also be something much larger than that, right? Given that we don't know who the next Fed chair is going to be. I mean, it's likely to be Kevin Warsh, but we're not fully sure how that process is going to play out.
Yeah, it's never a dull moment in our world, is it? Yeah, you know what? I view the rate cut discussion as fairly narrow. The economy is ultimately going to define just how aggressive, the Fed could be. It's still a committee that decides what monetary policy is going to be. And if the data is pushing aggressively against what the Fed is doing, we're going to see that make its way into asset values. And, for the most part, asset values are a leading indicator to where the economy is going. I think that we need to get nuanced and really think through balance sheet policy, think through communications, really think through the fact that overall bond yields have been suppressed by a very, very vocal, active, and aggressive Fed for the last 10 to 15 years. And a lot of what at least, Kevin Warsh is talking about is going back to before that period existed. And from my perspective, there's more premium that's needed in that type of environment.
So, Marvin, are we not getting the returns that we deserve for the amount of risk that we're taking then? And is the VIX not really representative at around about 21 today?
Yeah, Yeah, I mean, certainly, I guess I would say that we should expect the volatility to continue. Again, positioning is still quite heavy. A couple of days ago, we were still talking about being near all-time highs, despite the fact that we're worried about this volatility. So it is a rotation, and people own a lot of stocks, and they're trying to figure out which ones they want to own. When it comes to treasury yields, I think that there is a need for a safety bid in the face of volatility. But the reasons that we didn't like yields kind of in this sub 4% level last year was that there were these concerns that were out there. And whether it's the deficit, whether it's inflation settling, above 2%, which is what we had been comfortable, none of those questions are really answered yet at this point.
No, they're not. Marvin, are you concerned at all about liquidity or anything about this market give you concern?
You know what? Liquidity certainly is always in the back of my mind, particularly when we talk about capital being pulled into AI and really funding these business models to the size that we've seen over the course of the last 6 months to a year. Kind of having said that, my read on liquidity, which is a daily thing that we go through on the trading desk to really understand if there's stresses in the financial system, is that liquidity is still ample enough to really create at least an orderly market as we get to what is a clearer value on a lot of these business models.
You're defensive on duration, which I don't really think is the consensus right now. And partially that's because you think that Warsh's past statements on the balance sheet and also his type of communication will add volatility. Yeah. So where are you recommending people hedge? What are the good hedges right now?
Yeah, and I think that is really the key point in terms of this Treasury rally, is that all of the hedges that typically work are expensive. The Swiss franc certainly is one that one goes to in that type of environment. It is expensive. Gold, we've kind of seen what gold has done over the course of the last several quarters. It's no longer that safety hedge that we would normally expect. I'd say equal duration makes sense. I think that one needs to kind of broadly think through maybe some of the more stable aspects of the technology sector in terms of at least finding balance within that volatility, and really thinking through the Swissy, thinking through whether or not the yen has a little bit of stability. I think those conversations are still making their way kind of through the trading desks.
Well, it's just going to give us fodder to keep chatting with you over the next few months. Marvin, thank you so much for joining us today. That is Marvin Lowe of State Street. Now to other top stories trending on the terminal this morning. Danaher is reportedly paying about $10 billion to buy medical technology company Massimo, which is up about 38% in trading right now. Danaher and Massimo did not immediately respond to the FT's request for comment. Goldman Sachs planning to remove the diversity criteria in identifying potential board candidates. That's according to a Wall Street Journal report. The bank's board is expected to approve changes this month, and that move in line with similar rollbacks by Wall Street peers, including Citigroup and Bank of America. Civil rights leader Jesse Jackson has died. Jackson was an acolyte of Martin Luther King Jr. and carried on King's struggle for justice and equality, running his own civil rights organizations. In 2017, Jackson disclosed he had Parkinson's disease. Jackson was 84.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
So I'll be involved in those talks indirectly, and they'll be very important, and we'll see what can happen. It's been typically, Iran's a very tough negotiator. I think they want to make a deal. I don't think they want the consequences of not making a deal. They want to make a deal.
President Trump commenting aboard Air Force One ahead of today's talks between the U.S. and Iran, which are currently taking place. Joining us now is Mika Solner of Bloomberg Government. Mika, as I understand it, the same problems abide, right? So Israel wants certain things included. The U.S. isn't really for that, but Iran has agreed to talk about nuclear enrichment, at least if the U.S. talks about sanctions easing. Is that it?
Yes, I mean, President Trump seems pretty confident on where the talks stand right now, and we'll note that it's really interesting that he's kind of taking himself out of the picture right now. As we just heard the president say, he's indirectly involved. The nuclear talks have been led by Jared Kushner and his special envoy, Steve Witkoff. And so I think that we're going to see, more to come this week. But this also comes on the heels of President Trump meeting with Israeli Prime Minister Benjamin Netanyahu last week, who he said these talks must continue. So we're going to see what happens this week in the continuation of these.
Moving to different theaters now, and it's not a theater, at least yet. Anyway, Trump talking with Xi Jinping about decisions on making weapons sales to Taiwan, or sort of removing the backlog there and getting those weapons moving to Taiwan again. Do we know any more about those discussions, Mika?
Yeah, this is going to be a huge decision that I know that the White House is, really interested in pursuing. This comes after the U.S. already provided weapons last December, and this is going to be a huge tension point between the U.S. and China as President Trump prepares to go meet Xi Jinping in April. So I think that we're going to see more ramp up on this, and of course the U.S. and there's a lot of Republican and Democratic lawmakers, really pushing for more security in Taiwan as well, and who really want to increase the presence there.
What should we be looking out for today, Mika? What's on the agenda?
Yeah, President Trump will be holding policy meetings, and I think that we're going to see more play out on the foreign policy stage as Iran takes center stage this week. So we'll likely hear more from the president and his team on that, as well as potential talks on DHS and ending the negotiations there to end this partial government shutdown.
All right, Mika, thank you so much. Mika Solner there of Bloomberg Government. Turning to technology, the Pentagon's contract discussions with Anthropic hitting a snag after the company wants to protect Claude, its AI tool, from being used for mass surveillance and for developing weapons. Joining us now is Bloomberg's Neil Campling. So there's an ethical concern here, right, Neil? The Pentagon is a little more comfortable perhaps with just staying within legal limits, but Anthropic wants to put more guardrails in. Is that it?
Yeah, that's exactly it, Bonnie. I mean, this is bringing together two massive topics of discussion right now. Obviously, AI in the headlines every single day, as pretty much is defence, as you've just been talking about with some of the geopolitical situations. This really, I think, is all about the protection of the data. The data is the most important part of the value within the AI ecosystem. And these guardrails being talked about are to make sure that the right purposes are being used with the use of this data. So obviously the Pentagon will use it within legal limits, but they want to be able to basically analyze and use that rich data set in order to expand this relationship. And
now,
that's clearly a point of contention.
Yeah, because, you know, Anthropic positions itself as the more responsible, perhaps more ethical AI company. But, I mean, does that mean that the Pentagon can just go with the likes of OpenAI's ChatGPT? I mean, you've Alphabet's Gemini, xAI's Grok. There are plenty of choices. Are they as advanced when it comes to this kind of technology?
Yeah, I mean, it's difficult to know exactly how each platform stacks out in terms of the technology that can be used in a defense setting, of course, because it's very secretive in terms of that nature. But as you mentioned, there are alternatives. So there could be an opportunity for an alternative platform to be used, such as, obviously Alphabet controls the entire ecosystem, including the data. That could be one option, as you mentioned. OpenAI may well be another. So this story probably has got quite some room to run and developments to look out for in the next couple of weeks, I'd say.
Neil, how close are we to, voice-controlled drone swarms that can target multiple military targets at once?
Yeah, I mean, this is again a fascinating story playing on the terminal this morning, talking about really the idea that potentially SpaceX could be the platform to choose in this. And actually, it's a good example that SpaceX technology really has evolved at breakneck speeds over recent years, and now it could be used in additional settings. So it's a great story to watch out for, especially as we get closer to that expected IPO in a few months' time.
It seems there's nothing that SpaceX won't try to do at the very least. Neil, thank you so much. That is Bloomberg's Neil Camping. Shares of BHP in London extending post-earnings gains. Results were boosted by an historic metals rally, and for the first time ever, copper accounted for more than half the group's profit. Bloomberg spoke with CFO Vandita Pant earlier.
For the first time, 50%, more than just about 50% of our earnings, EBITDA, came from copper, and performance across our assets has been very good. To take example of Escondida, which is our largest mine that we run in Chile, we are revising the guidance up for this year and next year, which means that we will be producing more copper in the constructive copper price environment that we are in. So very pleased with that. And not only that, across our assets, as you would know, we have a lot of byproduct in our copper segment. In our assets, in the half, almost $2 billion of byproduct revenue was booked across gold, silver, and uranium. So a fantastic business and really reliable performance coming through across all our assets, with more to come in terms of the higher guidance for Escondida, for example, that I have given, along with the outlook on medium term with the copper projects. We have 4 very attractive copper programs around the world, in Chile, in Argentina, in Australia, and in the US, which means that we will increase our copper production from where we are into the future as well.
Coming up, we'll get you set up for your shortened trading week. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Earnings season is here.
Let's get back to the earnings story.
Get all the details that you're going to need to start the trade.
Bloomberg is first to break the numbers.
A bunch of earnings. Pretty Agricole.
Earnings from Heineken, ABN AMRO reporting as well.
Fantastic reporting from you and the team.
With the smartest insights.
We've delivered again record results.
If we take a step back and look at the yearly results, the income is stable.
Our earnings interviews continue. Lots of really contrasting conversations.
Continuing coverage on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead for this week. Of course, it is a holiday-shortened week, but we do have the latest Fed minutes coming on Wednesday. Plus, we get Walmart earnings on Thursday. Just a few stragglers left, of course, for earnings season. And then in terms of economic data, we're going to wrap up the week with December PCE. That's, of course, after the benign CPI last Friday. We also get PMIs and New Michigan sentiment on Friday. So a big day for economic data. Let's look at some pre-market movers. Massimo up almost 40%. This on a Financial Times report that Danaher is considering a $10 billion deal to buy Massimo. And, of course, that would massively increase the value of Massimo. It was worth about $7 billion in market cap before today. Norwegian Cruise Line on a report that Elliott Management is buying more than a 10% stake in Norwegian Cruise Line, going to try and put somebody on the board there, the an ex VIP at Carnival, to try and turn things around there. Shares are trading really where they were around COVID era, even though demand has come back. And then Paramount Skydance up about 3%. Warner Brothers might actually reopen sale talks now that Paramount has really sweetened its bid. Of course, that may make Netflix reconsider its bid as well. Let's take a look at the macro environment this Tuesday after the long weekend. We have S&P futures pointed lower, NASDAQ futures pointed even lower than that. So it looks like we're going to come in on a bit of a negative note. We also have Treasuries continuing to rally with the 10-year yield down another 2+ basis points and the dollar index relatively unchanged. Let's take a look at oil as well, because we're looking at these Iran talks and seeing which way they go. Right now, New York crude up about 1%. Bitcoin holding in there around $68,000. Look at that VIX, though. It is above 22. Maybe that's a cause for concern. That is it for Bloomberg Brief. Surveillance is next. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There's a lot of creative destruction that's taking place in markets.
Some of these things are overdone. It's about valuation.
The stress within the AI and the software names is still very, very concentrated.
There are going to be losers and winners all over the place.
It's that unknowing that makes people much quicker to pull the trigger.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, the tech sell-off resumes. Equities adding to losses following the biggest weekly decline since November. Investors piling into bonds, sending yields down to new lows for the year, looking for somewhere to hide as AI disruption is upending the outlook. We're picking up where we left off following the long weekend.
Here's a problem that a lot of people are trying to grapple with. Is this a question of just AI fears and disruptive potential effects? Or is this recession fears, right? If you look at the utilities that are outperforming, if you look at the fact that bonds suddenly are rallying to such a big degree, this could be a representative feature of some sort of fear about growth. And yet people are looking at the specific sectors within AI, still pointing to disruption as the main driver here.
Utilities record highs. Staples, all-time highs. Super defensive. Financials down every single day last week. The banks had their worst week of the year so far. Their worst week going back to April of last year. On the same week, we had a payrolls report that delivered the biggest payrolls growth we've seen in more than a year. So square that circle.
I can't square that circle. And if you want more confusion to make that a little bit more square rather than a circle, the Bank of America Fund Manager Survey came out, and the no landing expectations among the fund managers surveyed were at a record high. Fund manager optimism at the highest going back to 2021. Are they concerned that there's overinvestment? Yeah, but they're not necessarily voting in that kind of way. So in terms of recession fears, that doesn't seem to be anywhere on the table.
Lots to get into with the fund manager survey. This is one that jumped out to me. And at 57% of FMS investors expect higher long-term rates, the highest level since February 22. Just goes to show you how offside this market is right now, with yields at the lows for the year and 10s this morning down by 2 basis points to 4.0%.
Which is really a key question that a lot of people have. Is this a momentum squeeze? Is this an issue of everyone having been overweight the AI story, having been overweight the sort of short bond story, and suddenly it gets ripped on its side? I mean, is that essentially what we're seeing, or are we seeing a fundamental shift in sentiment? And I think that that's what people are parsing through. I saw a lot of notes over the weekend talking about the moats around software providers, the moats around companies to prevent them from AI disruption. There clearly is a nuanced look at what exactly we're talking about, not necessarily throwing everything away in terms of expected disruption. That said, you're not seeing it market performance. So what gives? This is a confusing market.
Remember all those outlooks that were written in October last year and published in November, December? Everything feels pretty stale 2 months into 26, doesn't it?
It felt pretty stale about 2 weeks into 2026. I think that they've rewritten it probably about 6 times. And anyone who really comes on and says that they're not confused, well, I don't know. I'm curious to hear why.
If you're just tuning in, welcome to the programme. Bond yields down across the curve, 10s down another 2, 30s as well, 30s at 4.67. Coming up this hour, we'll catch up with Russ Kostrick of BlackRock following 2 weeks of losses, Mo McHugh of PSP Growth on whether the tech slide has more room to run, and Stephen Juneau of Bank of America on why the bar is high for further rate cuts. We begin this hour with stocks pulling back as traders remain cautious on tech. Russ Kostrick of BlackRock writing, we have made changes to our equity composition, moderating our tech and AI overweight, and have also moderated the size of our US overweight. Russ joins us now for more. Russ, welcome to the programme. Let's take it from the top. How were you set up coming into 26? What have you changed, and why have you changed it?
Good morning, Jonathan. So coming into the year, we already made some shifts at the end of 2025. And I think most of those were in line with what everyone is referring to as the broadening out trade. We were bringing back some of our AI exposure. We were trimming our tech exposure, adding to cyclicals like industrials. And also because we were also bringing down some of the growth overweight in favor of a more balanced portfolio. If you're going to add a bit more value, have a bit less growth, one of the implications of that is you're probably going to own a bit more international and have a little less of a U.S. overweight. And that's exactly what we've been doing really since the back half of 2025.
So, Russ, many people describe this as a cyclical rotation, an improvement in cyclical appetite around the world, an improvement in so-called risk appetite. Yet, Russ, last week took on a bit of a different flavour. Lisa mentioned it, a recessionary theme starting to go into the sector price action. When you see staples at all-time highs, utilities at record highs, and the banks start to sell off. Russ, what does that tell you?
It tells me the market is confused. And I share kind of the questions around this very strange rotation. If you look at the best performing sectors year to date, you can be forgiven for kind of, being a little bit uncertain about what the market's thinking. You've got industrials, energy, materials, and then, as you and Lisa pointed out, you've got staples and utilities. So that combination of we love cyclicals and we're hiding out in defensives is very unusual. Now, my own view is I don't think we're looking at a recession. As you all mentioned before I joined, the labor market report was very solid. We're seeing manufacturing rebounding. In general, most of the economic indicators are fairly solid. And if anything, some of the concerns we had about the labor market 1 or 2 months ago, maybe they're a little bit less acute today. So instead, I think what we're seeing is a change in sentiment around the tech and the AI trade. You saw it during an earnings season. Rather than applaud these $120 billion CapEx announcements from the hyperscalers, the market actually punished them. So to my mind, this rotation and this odd coupling of cyclicals and defensives, more about a change in sentiment, more about a rotation out of tech, and less about an economic view.
Russ, can you see an overall index level rally if you don't have the participation of tech?
It's hard. And I think one of the reasons you're actually seeing this massive rally in sectors that have much smaller market cap is it doesn't take a lot if you're rotating out of tech, which depending upon how you want to define it, 35, 40% of the S&P 500, into much smaller sectors. That's a lot of money coming out, pushing some of those companies up very fast. But I do think it's a legitimate question, and this is why the U.S. market has actually been churning year to date. If we don't get some stabilization in tech, hard for the market to go higher. The good news is, for 2 reasons, I do believe that selectively there are names in tech you want to own right now. First of all, the valuations, particularly the mega cap tech, the Mag 7, have come down significantly. Second of all, this has not been an earnings problem. If you look at the Q4 earnings, you still saw very strong leadership, 25, 26% year-over-year growth in tech, much higher than the rest of the market. Again, I think this is more about sentiment than the fundamentals.
Russ, you said that the market is confused. We're certainly confused. This is a confusing moment. I wonder how much that confusion is why people are selling U.S. equities and U.S. markets more broadly, because the confusion is really rooted in the United States at pretty high valuations. Is that part of what's behind, I don't want to call it the sell America trade, but the diversify away from America trade?
There is a little bit of that. And certainly, again, as I said in the beginning, if you're more skeptical on tech, if you're more skeptical on AI, you've got a much higher concentration of those companies in the U.S. than you do in other parts of the world. So it does make sense you're going to see this shift in relative performance. But I do think there are a couple of other things going on as well. One, if you want to own cyclicals, if you want to own more value, we actually find that while the growth opportunities in the U.S. are generally the best in the world, often we find better value opportunities outside of the U.S. And the second argument is that there actually is or are a few fundamental catalysts that would suggest increasing your weight to other parts of the world, particularly in Asia. When you see what's been happening in Japan, the clarity after the election, the likelihood of more fiscal stimulus, the semiconductor rallies that are supporting markets in Korea and Taiwan, some of the rotations out of the U.S., I think they do make sense.
So, Russ, let's talk about something else that might be confusing for people. When they hear investors come on this program and talk about investing in more cyclical parts of the economy, more cyclical parts of the global equity market, and then they see bond yields dropping at the long end of the curve with 10-year yields at the lows of the year. Russ, they're confused by that as well. Just what is behind the move in the long end?
It is a confusing market. Now, I do think you've had a couple of data points that have helped support the rally. Most notably, the CPI print was very benign, and that has helped. We've also seen actually some modest improvement on the fiscal side. Now, there's a very fair debate about whether or not that's going to last. And I think that in the long term, I would be a little bit cautious about this rally in the 10-year, particularly as we get down to 4%. But, to go back to the original question, why have people been loading up on cyclicals? Most of the economic indicators, not just in the U.S., but globally, have actually been signaling that you're going to get a decent start to the year. And with that benefit of more operating leverage for cyclical companies, I think there is a reason the cyclicals have been doing well. Again, to me, the cyclical part of the trade is a lot easier to explain. What I'm struggling with is this combination, this odd coupling of cyclicals and defensives going up together.
So, Russ, the bond market's part of that story. It contradicts the whole story. In many ways, you're pointing to an ISM and better payrolls data, bond yields are lower. You can point to all of those things. CPI, the smallest downside surprise on CPI last week, unleashed a rally into the bond market. Now, Russ, people will be looking at that move today, looking at 10s around 4% and pushing back against all the people who said sell America and that maybe the bond market wouldn't provide that risk aversion in the equity market if we saw a sell-off. Now, do you think we have that reliable ballast back in the portfolio? Is that what the Treasury now provides?
So that's a great question. I wouldn't use the word reliable, but I'd say better. If you look at the correlation between stocks and bonds compared to where it was in 22 and 23, when inflation was a big concern, bonds were amplifying risk in a portfolio. They were not mitigating it. We've got back into an environment where we are seeing a little bit more of a negative correlation between stocks and bonds. I think that's reasonable, given not only the fact that inflation has come down, but also the volatility of inflation's come down. And historically, that has had a big impact on the relationship between stocks and bonds. Having said all that, and the reason I'm being a little bit trying to qualify my answer is compared to where we were 10 years ago, last decade, I don't think that correlation is as strong. So are bonds adding to risk? No. Are they as reliable of a hedge as they were 10 years ago? Probably not.
Russ, I'm just wondering if you put all of this together, how much it makes you uncomfortable to be part of the consensus. And I think about the consensus trade so far this year. It's overweight Asia, overweight ex-US, underweight long treasuries with a steepening yield curve, and overweight commodities. This is currently how the market is positioned. Then you have the market punishing people in those positions in short order as you get this sort of rotation of momentum. How much do you want to avoid some of these momentum trades because of what we're seeing in terms of the violent shifts, perhaps just on a technical level?
I think that's fair. And I do think you want to be cautious about the momentum exposure in the portfolio. We've seen the last couple of weeks, long, short momentum baskets have been crushed. High beta momentum has been crushed. So look, in an environment where you're getting these violent shifts in sentiment, particularly around what were previously crowded trades, I think it does make sense to bring in your risk. Now, having said that, I don't think a lot of these trades, particularly the tech and the AI, are as crowded as they were 6 months ago. Software, you're down 20% year to date, more if you add some of the losses from late 25. So the notion that AI and the hyperscalers are still as crowded as they were 6 or 9 months ago, I don't think that's quite right.
How much of a risk event is NVIDIA's earnings that come next week?
Well, I think the crossbar is a lot lower. And the truth is, NVIDIA is actually, it's been a little bit of a different story. But if you look at the semis in general, despite the fact that there are all of these concerns about tech and AI, those so-called pick and shovel trades, particularly the memory trades, they've been doing phenomenally well. And you look at the outperformance of semis versus software, really since the November low, semis have not been where the problem is. It's in other parts of the tech space.
Russ, it's good to see you. We'll leave it there. Thank you, sir. Russ Kostrick there of BlackRock. Russ, thank you. Plenty to chew on. The contradictions in this market. You mentioned NVIDIA. NVIDIA trading softer for 2 consecutive weeks. Now, to Russ's point, you'd expect the whole semis complex to rally off the back of the capex that's been announced. We've not seen NVIDIA participate in quite the same way.
Or AMD, or Qualcomm, or Broadcom, or any of these picks and shovels aspects of the trade, which, I mean, to Russ's point, how much does that lower the bar then for next week? I mean, NVIDIA waits about 4 months before they release their first quarter earnings. And when they finally do in, June or next week, we're going to essentially have a pretty low bar for them to say, we're the ones that are minting cash. So guess what? You guys can take your worries elsewhere.
Feels like 5 years at the moment.
Yeah, indeed.
The wait, at least. NVIDIA in the pre-market negative another 1%. With an update on stories worldwide with your Bloomberg Brief, let's cross over to Yahara Arnott for more. Hey, Yahara.
Good morning, John. President Trump says he's speaking with his Chinese counterpart Xi Jinping about weapons sales to Taiwan. Speaking aboard Air Force One, Trump said he would make a decision soon on the matter. China has previously warned the U.S. to handle arms sales to Taipei with the utmost caution. Meanwhile, Goldman Sachs is planning to remove race, gender identity, sexual orientation, and other diversity factors from the criteria its board uses to identify potential candidates. The Wall Street Journal reporting the decision follows a request from the conservative National Legal and Policy Center, which owns a small stake in the bank. And Apple is preparing for a major product launch in the coming weeks. The tech giant is reportedly preparing to announce several new devices following earlier reporting on new planned models, including new MacBooks, iPads, and the iPhone 7.
Taking place in markets today. And AI is chiefly responsible for that. The ability for this to create contagion and become a bigger financial event, I think, is relatively low.
A conversation up next with Mama Q of PSP Growth. Live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
So here is your week ahead. The next 48 hours interesting. Fed minutes coming this tomorrow afternoon, and then the main earnings report. Walmart up 20% So far year to date, a massive rally with a big multiple as investors crowd into this one. That's the one to watch this week on the earnings front.
What I want to hear from them is what they're doing on AI, how they're improving margins using technology and using the negotiating heft, and how much they're gaining share, not only from Target, but from Kroger's and all of the both grocery stores, as well as from Amazon, their main competitor, arguably, as they become increasingly a tech company.
You went straight to fundamentals, of course, and we'll talk fundamentals later this week. But
how could I?
How much of this move
Shame.
is about fundamentals over the last few weeks?
Well, I could argue, I could make a strong fundamental case, but frankly, I cannot answer that question after we just had confusion or confusing or some iteration of that in the past, couple of minutes. We said it probably 15 times, so I'm not going to give you an explanation.
Staples, record highs. Staples on the S&P 500, record highs. Equity futures pulling back this morning, down another 0.4%, down by 0.8 on the Nasdaq. Check this out. In the UK, it turns out if you tax jobs, you'll get less of them. Sterling, negative 1/3%. Unemployment, 5 handle in the UK. Really concerning stuff. They've raised the minimum wage. They've increased payroll taxes. And what's happened? The labour market has softened. That's not just my view. That's the view of Catherine Mann of the Bank of England and others too.
Well, look, you're seeing unemployment rates in the United Kingdom rise to the highest levels, going back to the height of the pandemic. In a worrying sign for men ages 18 to 24, the unemployment rate has reached 17%. That's nearly 1 in 5 young men. That is the highest in a decade, even as unemployment rates for other cohorts remain somewhat below that. This is a concerning backdrop on a multitude of levels.
135.88 on cable this morning. Under surveillance this morning, big techs, big sell-off.
A lot of the risk is concentrated in one segment of the market. I see this as a repricing in a segment of the marketplace that people are trying to get a handle on. There's a lot of creative destruction that's taking place in markets today. And AI is chiefly responsible for that. The ability for this to create contagion and become a bigger financial event, I think, is relatively low.
So here's the latest this morning. AI disruption rippling through markets with the Nasdaq 100 coming off 3 consecutive weeks of declines. Mermaid Q of PSP Growth writing the reasons causing the sell-off seems to be at odds with each other. Painting all tech with a broad brush is not rational. Mermaid joins us now for more. Mermaid, welcome to the program. Let's just take it from the top once again and think about what's been announced over the past few weeks. A massive amount of capex intentions across just 4 companies, and yet Nvidia started to trade softer over the past 2 consecutive weeks. Momo, what do you think is behind that? Why are we seeing a decoupling from one of the biggest picks and shovels and the capex intentions of some of the biggest companies on the planet?
Yeah, good morning. There's definitely a lot of fears in the market right now, and not everything's really rational. So if you look at some of the main reasons for the sell-offs last week, in the weeks prior, I think some of them are actually at odds with one another. You're seeing softness in some of the Mag 7 due to the massive spending in CapEx and the concern that maybe those investments are not going to make a return. But yet at the same time, software stocks are being hit because of the exact AI disruption that's happening that might threaten them. So in my head, those two are actually at odds with one another, which makes me think that there's a broad fear in the market that's not very rational. So I think if you look at NVIDIA with the other bigger companies, there's probably a lot of not rationality in those either, in that people might think NVIDIA has been overpriced. People are already thinking the promises have been made too high. So as of now, NVIDIA can beat earnings, they can do everything right, but yet the expectations are so high that the market is not being very rational right now.
Mama, let's take those 2 extremes. Either it's going to disrupt everything and crush a lot, or it's a waste of money. Do you pick one or the other, or is there something in between?
I think it's something in between. I think one of the fears that's causing all this fear in the market is I do think there's going to be quite a few losers in the AI race. You're not going to have every company become the next big giant in AI. But I do think painting everything with a broad brush is also not rational. If you look at sectors that have more verticalized knowledge, that have more verticalized processes, those are not going to be disrupted the same way as the rest of the market. For example, we see that Procore and Autodesk has been hit pretty hard in the construction software stock. We own 2 construction tech companies in our portfolio, OpenSpace and HiArc. They're doing quite well. They're very resilient. We're seeing the customers, they have general contractors on the job sites. Those general contractors working every day is not going to all of a sudden wake up and find a way to find engineering talent to work with OpenAI and Anthropic and build their own AI tools. So we think for some of those industries, you're going to be a little more shielded than the rest of the market, and painting them with a broad brush is not rational.
Momet, how do you know, though, what's rational and what's not rational? On one hand,
ये नेचुरल गैस देखो पॉइंट ऑफ इंटरेस्ट की रेजिस्टेंस पे पहुंच गया ये वैसे है रेजिस्टेंस ही कैंडल क्लोजिंग मैंने जैसा मॉर्निंग पे बताया था उस हिसाब से हुई नहीं थी जिस हिसाब से उसको हम डायरेक्टली मेजर रेजिस्टेंस कहें बट या इट इज़ अ रेजिस्टेंस एरिया वी कैन एक्सपेक्ट सम सेलिंग बड़े क्वांटिटी या बड़े लॉट के साथ मत ट्रेड करना बस क्योंकि यहाँ पर एसएल का कुछ एग्जैक्टली फिक्स नहीं है कैंडल क्लोजिंग बेसिस पर ही एक के ऊपर एक कैंडल क्लोजिंग के बेसिस पर ही एसएल रख सकते हैं सो उस वजह से थोड़ा सा बिकॉज वो जो कैंडल यहाँ पर क्लोज हुई थी रिसेंटली जब प्राइस आया था गैप डाउन से पहले वो क्लोज नहीं हुई थी प्रीवियस कैंडल के ऊपर दैट्स वाई बाकी क्रूड ऑयल मॉर्निंग से एक मोमेंटम डाउन साइड अपसाइड वॉलेटाइल है एक्सपायरी है ध्यान रखना ऑप्शन की क्रूड ऑयल की MCX परसों जो सपोर्ट एरिया से बाइंग आई थी वो स्टिल अभी भी कंटिन्यू ही है इसी तरह से मूव करता रहा तो लगता है पॉसिबिलिटी है वही 5850 5900 तक जा सकता है उस केस में वहीं पर एक नेक्स्ट रेजिस्टेंस है अभी के लिए इसमें और कोई नया सपोर्ट तो बना नहीं है बाकी ईरान और यूएस के बीच में जेनेवा में ऑलरेडी टॉक स्टार्ट हो चुकी है देखना पड़ेगा वहां से क्या इम्पैक्ट आता है अगर टॉक सक्सेसफुल नहीं हुई तो वेरी हाई चांसेस क्रूड और ऊपर जा सकता है गोल्ड भी पूरा साइडवेज ही है शायद लग रहा है मुझे ओवरऑल फॉरेक्स चार्ट में देखोगे मॉर्निंग पे अर्ली मॉर्निंग फॉरेक्स चार्ट में सेल ऑफ जरूर आया था प्राइस जब ओपन हुआ था फॉरेक्स चार्ट में यहाँ पे बट इंडियन मार्केट के बाद देखोगे इंडियन मार्केट की ओपनिंग कैंडल है मार्केट उसी लेवल के आसपास उसी रेंज के आसपास चल रहा है इससे बढ़िया सिल्वर ही लग रहा है ये $75 का जो लेवल है मैंने थोड़ी देर पहले ही बताया था ये काफ़ी टेस्ट हो गया है 5वीं बार टेस्ट हुआ है लेवल नीचे ब्रेक डाउन करता है तो मज़ा आएगा $60 के आसपास 59 to $60 के आसपास आ सकता है उस केस में एंड देन फाइनल टारगेट ऑफ $50 मतलब यहाँ से 10% और फॉल होने का पोटेंशियल है होगा नहीं होगा दैट इज़ अ डिपेंड अपॉन द कैंडल 4 आवर टाइम फ्रेम पे होगी तो क्योंकि ये लेवल पे प्राइस इतने बार टेस्ट हो गया फर्स्ट टाइम सेकेंड टाइम थर्ड टाइम फोर्थ टाइम फिफ्थ टाइम और यहाँ पर कंटिन्यूसली लोअर हाई ही बन रहे हैं बस थोड़ा से गिरे नीचे आए $58 के आसपास यहाँ से सपोर्ट ले हाँ ये ब्रेकडाउन थोड़ा ब्रेकडाउन वाला नहीं होना चाहिए कि ब्रेकडाउन और रीटेस्ट वाला फिर उस केस में रेजिस्टेंस बन जाएगा नॉर्मल ब्रेकडाउन होना चाहिए सो दैट इस लेवल को रिमूव कर दें 4 आवर में एंड देन अ फाइनल टारगेट ऑफ $50 उस केस में ओवरऑल ऑल टाइम हाई से 50% करेक्शन दे देगा ये अगर ब्रेक करके नीचे आता है 58 to $60 के अराउंड 59 to $60 के अराउंड तो 50% ऑल टाइम हाई से तो ध्यान रखना सिल्वर में सपोर्ट पे रुका हुआ है काफ़ी टाइम से ब्रेक हो तो मजा है अदरवाइज ये कैंडल क्लोज होने वाली है, 10 सेकंड रह गए हैं। ज़्यादा बड़ी क्वांटिटी से मत ट्रेड करना नेचुरल गैस में। क्योंकि यहाँ पर एसएल फिक्स नहीं है, जितना लगाया है ऐसा नहीं है कि 3 पॉइंट का ही रख सकते हैं, बिकॉज वहाँ पर कोई पर्टिकुलर पॉइंट नहीं है बिकॉज ऑफ द प्रीवियस कैंडल क्लोजिंग। तो यहाँ पर एसएल कैंडल वाइज ही होगा, एक के ऊपर एक कैंडल क्लोजिंग होती है अगर प्रॉपरली ब्रेकआउट के बाद, तभी वो ब्रेकआउट माना जाएगा। नहीं तो ऐसा हो सकता है बड़ी विक बना के ऊपर जाए, क्लोजिंग ना दे और फिर नीचे आ जाए प्राइस वापस से। सपोर्ट भी देखोगे नेचुरल गैस में तो बीच में कोई सपोर्ट है नहीं, एक मेजर सपोर्ट अब 270 275 के आसपास है। नया सपोर्ट क्रिएट करे तो बेटर। नेचुरल गैस में ध्यान रखना गाइस, बड़ी क्वांटिटी मत ट्रेड करना, टारगेट बड़ा रख सकते हो, क्वांटिटी कम ही रखना, पॉइंट ऑफ इंटरेस्ट का लेवल है। नहीं to Trump. They keep saying we sent an aircraft carrier towards Iran. Well, an aircraft carrier is certainly a dangerous tool. But more dangerous than the aircraft carrier is the weapon that can send this warship to the bottom of the sea.
Who has a moat around them that can be protected from AI disruption?
Very clear. About the consequences, and that's very similar, I think, to the old Manhattan Project days. Kind of damn the torpedoes. We're going to go forward and deal with this and figure it out because we've got existential problems if we lose.
Terry, until their jobs are threatened, because this is a democracy. TikTok was once a national security threat, and then their jobs were threatened, and quickly their minds started to change down in Washington, D.C. Now, I want to understand from you, a man who has lived and breathed Washington for decades, what would happen and how they'd respond if the Microsoft AI chief is right and what he told the FT materializes, that in the next 12 to 18 months, as quickly as that, we can automate basically all white-collar jobs. And you started to see the unemployment rate go through 5 and approach 6, and people leaving university, like right now. They can't get jobs. Terry, how would they respond down in Washington?
Well, I think two things, John. One is that putting aside the self-promotion of the Microsoft AI guy, Washington has two reactions. One is to treat with great skepticism whatever the perceived crisis of the moment is in the markets. What Washington sees, frankly, is the longer game, where there have been huge upticks in the markets, and now you see a little bit of wobble. Washington saw a wobble in tech stocks last November for different reasons, but it did. So they'll let that play out a little bit. Firstly, secondly, it's going to get a whole lot more worse. A whole lot worse before Washington reacts at all. And then the playbook always is, what I view as kind of scraps, retraining programs and the like, that didn't really move the employment needle a lot in the 90s for blue collar jobs. But Washington, I will tell you, generally speaking, particularly in an election year, is not going to shed a single tear for white collar jobs going away. That's not beneficial to either party. And, they will look at it as an outlier compared to the kind of things that happened over the last half century.
Terry Haynes of Pangea Policy. Terry, appreciate your opinion. Thank you, sir. Down in Washington, weighing in on the prospect of maybe the most extreme example developing in the next 12 to 18 months.
Yeah, although this is the confusion part, right? Is this self-promotion, or is this a true warning shot about some sort of dystopian future that we have waiting for us? I mean, ultimately, we don't know, and that's the reason why there are these sort of confusing crosswinds. Do you hide in toilet paper and crackers that can survive 10 years, or do you go into some of the disruptors that potentially could benefit?
Is it just a marketing story? We talked about this with Anthropic. Are we just trying to justify very lofty valuations ahead of some big IPOs later this year?
And maybe it would take disrupting the entirety of white-collar America in order to justify some of these valuations and some of the capital expenditure plans that some of these companies have.
Equity futures this morning slightly softer. We're down by 1/3 of 1% on the S&P. With an update on stories worldwide with your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. UK unemployment reaching its highest level since the pandemic and wage growth falling to its lowest level in more than 5 years. Youth unemployment bearing the brunt of the hiring slowdown, the data prompting traders to raise bets on BOE rate cuts. Meanwhile, President Donald Trump praising Vice President J.D. Vance and Secretary of State Marco Rubio, the president stopping short of saying he would support either one of them to lead the Republican presidential ticket in 2028. The questions coming after Rubio received positive reviews at the Munich Security Conference and even a standing ovation after his speech. And Jesse Jackson, one of the most prominent U.S. civil rights leaders, has died at the age of 84. The two-time presidential candidate was a Baptist minister who advocated for equal employment and opportunities for Black Americans. Jackson was a longtime crusader in the U.S. and abroad, advocating for the poor and underrepresented. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, the Fed's rate debate.
The real debate this year on the Fed is where neutral policy is going to be. They're at 3.5 now, so that implies 2 more cuts. Getting another one in would, be the result of more disinflationary pressure.
Up next, Stephen Juneau of Bank of America, live from New York City. You're watching Bloomberg TV.
Crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The equity market coming off the worst week of the year on the S&P 500, adding to the losses this morning following a long weekend. We're down by a third of 1% on the S&P. On the Nasdaq, we're down by 0.8. Under surveillance this morning, the Fed's rate debate.
The real debate this year on the Fed is where neutral policy is going to be. They're at 3.5 now, so that implies 2 more cuts. Getting another one in would, be the result of more disinflationary pressure. We're looking for inflation to moderate back to target this year. So that, in our view, would be consistent with the Fed that's easing somewhat.
So here's the latest. Check out the bond market this morning. Yields heading for lows of the year with another busy week of data on deck. Investors betting cooling inflation will ease the path for the Fed to cut interest rates with core PCE due on Friday. Stephen Juneau of Bank of America writing, Fed officials really need to see the data weaken or it's going to be really hard to justify cutting. Stephen joins us now for more. Stephen, good morning.
Morning.
You say fade any signs of weakness. Ultimately, at Bank of America, you and a team are super bullish growth. What underpins that?
Well, I think, plenty of tailwinds. So we have fiscal stimulus this year. If you think about what the Fed's done over the past 2 years, they've cut rates by 175 basis points now. So that should be supportive. We're of the view that they're actually a kind of near neutral, if not accommodative territory. Of course, you have AI still. That's a tailwind, we think, for investment. And we think we're going to start to see that spill over to other sectors. And generally speaking, when you have an improving economic outlook, you start to see better investment come not only just from AI, but from the breadth of the U.S. economy.
Is GDP decoupling from payrolls?
A little bit, for sure. But our expectation is that over the course of this year, that can't last, right? So last year, I think, was a story of the wealth effect, of the K-shaped economy. This year, I think we're going to see that relationship reaffirm, realign, where we do start to see job growth move higher. It's not going to be the 200,000 jobs that we had over the past couple of years when we had that positive immigration boom. It's going to be closer to, say, 60,000, 80,000. But it's going to get nearer to where GDP is and help us to.
You say that can't last. Why can't it last? What changes? It's a new year, different number, 25 versus 26. But what's changed?
What's changed in terms of the job growth numbers, I guess? So what's changed this year, I think, in terms of last year, in terms of the wealth effect, I guess what you're saying is that I just don't think you're going to see AI drive, say, 20% returns in equities, something like that again this year. We're expecting something more typical. Savita Subramanian of our team, of course, is looking for something like 5 to 7% return on equities. So you're not going to get that significant of a wealth effect this year as you did last year. So you need to see that job growth pick up in order to see the economy run closer to, say, 2.5%, which is what we're predicting.
Well, it could run much hotter if
Absolutely.
the Fed would just cut rates significantly. And everyone says that the bar, and you just said that the bar got a lot higher because the data isn't cooperating. Well, does the data have to cooperate with a Kevin Warsh Fed?
I think it does. Because Kevin Warsh is just one person, right, when you think about it. We haven't seen a big shift. Of course, the Lisa Cook case, I think, was a positive for Fed composition, for Fed independence. You're not going to see a lot of turnover unless you see people kind of voluntarily leave at this point. So then you're swapping maybe Warsh for Myron, maybe Powell retires. And then how do you get enough votes to actually just engineer cuts without having the economic justification for it?
So you're saying right now that the market is completely offsides. The market now is pricing in almost 3 rate cuts for the remainder of this year. You have a 2-year yield that's now close to the lows that we've seen going back to 2022. This is a market that's pricing in a very different Federal Reserve than what you have envisioned. Is that correct?
I wouldn't say completely offsides because I say all this and I would say we're still penciling in 2 cuts. So we do think Warsh probably can get a couple through. The Fed's long-run estimate of neutral is at 3%. We think they can basically cut to that long-run estimate of neutral today. But I do think the window's closing a little bit more and more because we got a very positive jobs report. We got an inflation report that is fine. It's not too hot, not too cold, obviously, but core PCE is likely going to be at 3% in December and January. That's not a number that the Fed really wants to embrace, right? So, and you have a lot of hawks on the committee right now who aren't supportive of lowering rates. So you need kind of that economic justification. So we do think the risk around our forecast is towards fewer cuts, not more cuts, if the economy holds up as we predict.
Why do you believe the data? And this is people probably are rolling their eyes. Are you a conspiracy theorist? But so many people said 130,000. It looks good, but look under the hood, it's terrible. How many different research items did we read on that? Why are you pushing back and saying if it looks like a duck and it quacks like a duck, guess what? It's a pretty good jobs report.
I think it's the full spectrum of the report. The unemployment rate was down. Yes, jobs are better. Even manufacturing jobs were positive for the first time in a very long time. So you got a little bit more breadth. Hours worked was up. Income was up. So the breadth of the report was very positive. Now, I will say that January is always a very messy report. So we want to see February. We want to see March. So what it did for us was basically reaffirm that, at least under Powell, we're not going to get a cut. And then we think if you shift towards, say, Warsh's FOMC, I think you're going to have to see some data kind of green light cuts at this point.
So tax refund season. You're right in it. People are expecting the numbers to be quite big. Where you're maybe different versus others is that a lot of people think the effects are going to fade pretty quickly and the second half's going to be weaker than the front half. What separates you from the pack?
Well, I think it's all those other tailwinds, so it's not just that. So the tax tailwind should really be more of a 2Q story, I think, in terms of consumption. You're absolutely right in thinking that spending from tax refunds, it really has a short lifespan. It gets spent relatively quickly. What doesn't get spent, well, it gets paid towards debt or it gets invested. But it's those other tailwinds that start to pick up. It's that breadth emerging from investment. It's the fact that the Fed's easing last year keeps financial conditions very accommodative. So all those factors start to kick in the second half of this year.
So by the time we get to the second half, we're not just hiring in healthcare.
Exactly.
You actually see us beyond healthcare.
Yeah. We think we could see it in construction. We could see manufacturing have a little bit of a renaissance, and some other sectors too.
So you'd call it a real economic boom then, potentially, by the back end of this year?
Potentially. I think you're going to see it throughout this year. Looking back at last year, despite the uncertainty shock that the economy faced, we grew, at 2%? We're going to find out on Friday this week what exactly we ended up at. That's despite a very big shutdown, a 6-week shutdown. So why can't we grow at 2.5% this year?
Stephen, it's good to see you. Stephen Juno there of Bank of America. It's so odd to have this conversation with a bond yield of 4% on 10s and threatening to break into the 3s later today.
Well, I would like the Microsoft AI chief executive to come on and face off with Stephen Juno about what the potential is for a potential broadening boom in employment later this year. On one hand,
so many contradictions out there.
But this is exactly what I'm coming to. This is a reason why this is such a confusing market. On one hand, all white-collar jobs are dead in the water. On the other hand, we're entering an economic boom. Pick one.
Construction, manufacturing, all of the above right now, which is why people are hiding in Walmart. Basically, that's the story, and hiding in bonds too. Hiding from a lot of things, and a lot of things don't make sense. Mama Q was talking about this, the Nvidia trade. If you believe all this money is going to be spent, why isn't Nvidia winning? Why is that trading softer over the past 2 weeks? So much of this doesn't stack up.
How do you discern narrative versus the momentum trade that's unwinding? Technical versus a narrative that is actually sustainable? That is the difficult thing. And then how do you have the discipline to push through any kind of momentum unwinds and have conviction? That right now is the challenge.
Nvidia down by another 0.8% in the pre-market. The broader stock market on the S&P 500 down by about a quarter. The conversation continues. Up next, we'll catch up with Dan Skelly of Morgan Stanley Wealth Management, John Lieber of Eurasia Group, Carly Kohut of Jefferies, and Earl Davis of BMO on a bond market that's on quite a rip-roaring rally at the moment. Yields are lower once again this morning, down by 2 basis points across the long end of the curve. From New York City, the second hour of Bloomberg Surveillance. Up next.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Affordability issues are at the forefront right now.
We are seeing disinflation kind of gradually unfold across the economy.
If you're at 2.5%, you're basically at your target.
Ultimately, we think growth is going to be okay this year.
The economy is fundamentally healthy, and I think it is going to accelerate.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
There is a big divide on Wall Street at the moment, that's for sure. Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures resuming losses. We're down across the board. Negative 0.3 on the S&P, negative 0.7 on the Nasdaq. In the bond market, switch at the board. Yields lower across the curve. We're down 2 on 10s, 4.02%. New lows for the year. Going into this later this week. Fed minutes tomorrow afternoon. Look out for that. Plus, earnings from Walmart on Thursday following a major rally for consumer staples.
Yeah, how high is the bar at this point for Walmart based on valuations, and how high is the bar in order to determine, typically when Walmart reports good earnings, people say, oh no, the sky is falling. That means the economy is bad and people are piling into staples. When they report bad earnings, oh my goodness, not even the biggest retailer in the country can actually perform well. The sky is falling. Has the narrative shifted around Walmart as it shifts to the NASDAQ, as it talks about some of the tech advancements? How do they become a tech name that's not going to become disrupted, but will be ultimately the disruptor at a time when people are looking for safety? How high have we just pushed that bar?
At a 40-50 multiple.
Yeah.
The PE is wild on that name. We'll get to that story later this week. We need to talk about the great contradictions both in the equity market and in the economics profession right now. We just spoke to Bank of America, talking up a boom in the economy, and later this year, a broadening out of the labour market beyond just healthcare hiring. And yet at the same time, to your point, you've got the Microsoft AI chief speaking to the Financial Times saying all white-collar jobs in the next 12 to 18 months could be automated. Which one is it?
Well, we can get the Anthropic AI researcher who's off in the UK, who's doing poetry right now, writing and studying poetry. Please write in and let us know what you're thinking about. Look, we have a bifurcated kind of messaging coming out. Either it's going to make us all more productive and open the next nirvana of human existence, or it's just going to destroy human existence as we know it. And ultimately, you've got these two polarities and no way to counterprove either of them. So it's a very difficult moment, and that's the reason why there are so many contradictions in the markets. There is an effort to seek safe havens. The idea that, if you mentioned this many times, that treasuries are that haven, notable. The fact that the dollar is not, also notable. The fact that gold is acting as though it's just simply on a swing going up and down gives you a sense of just how much volatility has been embedded here. People don't like uncertainty, and that is the defining characteristic of what this is.
After all that, poetry in the UK sounds pretty good, doesn't it?
I get it.
I'm on board.
So
retired to the British countryside.
I mean, you're pushing me into an open door.
Into the Cotswolds. I can write some poetry. Would you like to read that?
I would love to.
Would you come to my recital? I'll find a quaint British pub.
I would love to.
We can stream it.
I think that this sounds great. I think that you will
there
be gone
go.
next week.
We can make this happen. Coming up on the programme, we'll catch up with Dan Skelly of Morgan Stanley as equity search for a bottom, Carly Coho of Jefferies as investors pile into Walmart ahead of earnings, and Earl Davis of BMO with bond yields hitting new lows for the year. We begin this hour with stocks lower following 2 straight weeks of losses. Dan Skelly of Morgan Stanley expecting more churn, writing, "We are watching closely for signs that indiscriminate AI-related selling is beginning to slow. Until then, we remain relatively defensive." Dan joins us now for more. Dan, good morning.
Morning, John.
Are you seeing that indiscriminate selling over the last week?
We sure have, and it's been across a host of different categories, whether it be insurance, wealth management, trucking, logistics, you name it. And I think beyond that, John, we have 2 things going on. First is we have this global reflation trade going on where the U.S. has ceded leadership for the first time in over a decade overseas. You have Korea, Japan, LATAM, other parts of international up a lot this year on continued momentum and fiscal spending over there. And then you have this AI disruption trade. It feels like the S&P bull market has paused, and the bull market in AI disruption and hysteria has really taken off.
Which bits of the AI disruption bull market don't make sense?
Yeah.
What calls it indiscriminate? What labels that? How do you define it indiscriminate at this point?
There's just a tremendous amount of dissonance right now. When I think about dissonance, it almost always happens in market cycles around innovation, whether it be internet, mobile, cloud, GLPs going back several years ago. Today, the dissonance is around AI. You have both market discounting AI counterparty risk in terms of the model makers and software. You have AI, you have large cap quality leaders lagging. You have small caps leading. Isn't it the small caps that are going to be the most disintermediated by AI and who can't invest in the tools themselves? So you have a tremendous amount of indiscriminate selling at the moment.
So it sounds like at the moment you're hands off. You don't want to step in. But have you got the itch to step in? And which pocket of the market do you want to lean into ultimately when it comes to that moment?
So that's a fabulous question, John. And we are, in fact, telling people to be proactive. On the first front, we are telling folks that international can continue to catch up. We think that goes on. And then secondly, we would just argue large cap quality across financials, number one, healthcare, and industrials seems to be a place to lean in right now.
There was a really interesting post of Nicholas Bustamante. He's the CEO of an AI company that advises different financial assets. And he's talking about how there are certain moats that can be established around software companies. I just wonder if you've established some sort of test of what kind of moats would have to go into place to be a positive for a company and make them undisruptible.
Sure. Number one, are the AI model providers themselves a partner and using you? And when you look at behind the onion at some of these different models, they're using the SaaS companies. They're partnering with them already. They're customers of them. I highly doubt that these private AI model makers who are coming public, widely discussed later this year, entire business plan is to put some of their big, large, liquid sectors of the market out of business. Who will be left to pay for them in the future? And so I think when you think about moats, number one, who's being utilized already within the AI ecosystem, who has proprietary and highly regulated data, and that might be within healthcare or financials. And then secondly, who's embedded in the workflow and who isn't standing siloed on an island. Those are some of the attributes that we're looking at.
So if that's true, how as an investor do you view some of the warnings coming from the C-suites of some of these big tech companies saying that all white-collar work is going to be eradicated in the next 5 years?
Sure, I think you've heard that from a more isolated set of individuals who candidly have their own biases in trying to provide certain niche product. I think when you look more broadly, look at the macroeconomic data over the last 2 weeks. We had a surge in job growth. We had a dip in the unemployment rate. What people aren't talking about is this broader reflation and economic broadening that we're seeing. And in the longer run, Lisa, to your question, we think AI is more complementary of jobs than replacing. It's essentially going to replace a lot of the lower value-added tasks in a day and not at the moment be replacing roles holistically.
Ramo's not buying it.
Well, it's not that I'm not buying it. It's just that either you get that broadening out or you don't. If you get that broadening out, then it actually makes sense for some of the valuations to be coming in and deflating a bit in the big tech sphere. If you don't get that broadening out, maybe it justifies those valuations, but it certainly doesn't justify the sort of scope of how much people are going into that. It just goes to another contradiction, fundamental, endemic in this market.
So it's a great point. And I think the number one thing the market, the S&P 500, let's remember, is a liquid large cap index, is waiting for is when do the highest quality names that are the adopters start to monetize AI. I think the market, rightfully so, is taking a bit of a breather on spending. Right? The Mag 7 had spent wildly the last 2 years. It even upped its CapEx expectations again this year to over $700 billion. And so I think the market, efficiently and rightfully so, is taking a breather on spending and waiting for the adoption phase to start to see monetization in the earnings. And I think that's when the broadening can actually start to go into this new phase, right? At the moment, everyone's saying the adopters are going to be those who are most disrupted. That's the point that makes no sense at the moment.
So, Dan, listening to you and knowing your work, you believe there's a little bit of a spread right now between fundamentals and the narrative.
No doubt.
And clearly the earnings are holding up, without a doubt. But the narrative is really compressing the multiple. And the narrative is difficult to prove, difficult to disprove. And we've been talking about this over the last several weeks. How do you prove the negative, disprove the negative and say these things won't happen? What's going to make that cloud, that very dark cloud, drift away from these multiples? Because that's what's holding the whole software complex back at the moment.
You know, it's such a good point, and there's an index level perspective, and then there's underneath the index. Underneath the index, for those subsectors that were most indiscriminately sold in the last month or so, they need to prove themselves out in terms of empirically, how are they utilizing AI to get more efficient and not being disrupted? And then secondly, at the index level, the market mathematically has to regain confidence in Mag 7. I mean, period, end of discussion. Mag 7 is 40% of the index. And so for the market to regain that confidence in the Mag 7, again, it needs to see the Fortune 100 quality names start to show AI in the earnings upside.
And we're not seeing that right now.
Not yet.
Amazon super weak. Apple hammered last week. Apple was down, what, 7% in 2 days last week?
And Apple was the one Mag 7 not spending on AI.
So make sense of that. So again, I'm going to ask you a different question. Same question, but on a different part of the market. The Mag 7 right now, and I know you can't do single names, but the kind of companies you'd want to buy, given the indiscriminate selling across the biggest names in this market, what would you be buying?
Yes, I think there is room right now to pick off software. We've got the space down 20%. So again, looking for those leading software names that have software and cloud, that have other upside optionality related to AI, number one. Number two, we would say look at some of the industrial names that are providing power. You've got this huge spread, to use your phrase, in terms of semiconductors and some of the new winners. But when I look at some of the old winners in terms of industrials, utilities, et cetera, who are powering AI, they look cheap as well.
You know, I was listening to a podcast over the weekend about technological revolutions and the influence on inflation. And there is a feeling that all of this will be disinflationary down the line. If you go back in history, the theory does not hold. Essentially, they have all been hyperinflationary periods of time for other reasons, and also because of some of the economic influence and the acceleration in the economy. Why is this time different that's giving people such conviction to go into long-term bonds to the degree that they are?
Such a great question, and amazingly, so that historical data, why should that matter today in markets? What a crazy thought. But another example, yet again, of dissonance, where you have this global reflation trade, you have mining and metals and gold, to your point earlier, all running wild, and then people just presuming we're not going to have any inflation. There's an article in the papers this morning talking about companies raising pricing again. And so, look, I would just argue, I think there is kind of a mountain and a near-term catalyst that you have to get over, and that does seem inflationary in the near term before you get to the disinflationary AI productivity nirvana. So we're in agreement with you.
So does that mean that right now you are aggressively taking action on some of these distortions, or are you simply saying ignore it all and go away from the United States because it's just too confusing to invest in right now?
We're saying a number of things. So number one, we don't want to be on the sidelines right now, just to be clear. We want to be proactively invested. And secondly, we've been recommending gold for over 2 years. We still like that trade. Number two, we have been saying to folks it is okay to stick with the international trade, particularly in parts of Asia that are benefiting from the new memory and CapEx spend in chips. So that's Taiwan, Korea. We also like parts of Latin America and Japan, based on some of the new fiscal initiatives we're going to see with the super majority from Takaichi and her party. So we're saying to do all of those things. And then lastly, in the U.S., the number one thing we're saying is don't forget about the top 100 companies in the U.S. across varying sectors that are incorporating AI into their business model right now, have yet to show the evidence, but where we are confident, again, looking at historical cycles, whether it was internet or mobile or social media or cloud, you go through 30 years of innovation cycles, it's always the large cap quality names that figure out how to monetize.
The move in Asia, Nikkei up by 12%, the Kospi up by 30% year to date. Wild. Dan, good to see you.
Likewise.
Thank you, sir. Dan Scully there of Morgan Stanley Wealth Management, breaking down this equity market with an update on stories elsewhere. Your stories worldwide, your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. We're seeing Paramount shares rising in the pre-market. Warner Brothers has agreed to return to the negotiating table for 7 days to iron out the details of Paramount's most recent offer, which was raised to $31 per share. Warner Brothers is still recommending shareholders vote for its binding agreement with Netflix. Meanwhile, Iran says it's conducted Navy drills around the Straits of Hormuz, the vital waterway that ships about a fifth of the world's oil. President Trump has threatened to strike the Islamic Republic unless it agrees to a deal curbing Tehran's nuclear program in exchange for sanctions relief. The U.S. and Iran are set to resume talks today in Geneva. And Anthropic's talks with the Pentagon about extending a contract have hit a snag due to disagreements on guardrails. Sources telling us here at Bloomberg that Anthropic wants to put limits in place to prevent its Claude AI tool from being used for mass surveillance or for developing weapons that could operate without human involvement. That's Bloomberg Brief. John.
Hey, Yahara, thank you. Appreciate the update. Up next on the program, pressure building for results.
Prices are down, way down. We inherited a mess, and we've brought our country back very, very powerfully. Our crime numbers are way down. The country's doing very well.
John Lieber of Eurasia Group joins us next, live from New York City this morning. Good morning.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Stocks are negative. We're down by 0.2 on the S&P, recovering slightly on the Nasdaq 100, down by 0.6% in the bond market. Notable bond yields at new lows for the year, down 2 basis points on the session, 4.03%. A fair bit to look ahead to. It's not a major week ahead. It's a shortened trading week ahead of us. But we've got this. Fed minutes on Wednesday, Walmart on Thursday, a sprinkle of Fed speak, and I think maybe more focus on jobless claims. Just how well is this labour market holding up, even rebounding, based on the data we saw just last week?
Did we get confirmation of messy January-influenced and weather-influenced data? Do we get a confirmation that things are holding in? Or is there this sort of pernicious difecta if we get increasing jobless claims and then a core PCE that looks something like 3%? How do you deal with a dual mandate in conflict at a time where people have existential concerns? We might be getting back to that. And then the Rorschach test that is Kevin Warsh.
It would be nice to have a ruling as well on tariffs later this week too, wouldn't it?
Sure.
Keep getting to those dates and we pass them by. Let's see if we hear anything going into the weekend. Under surveillance this morning, pressure building for results.
Low inflation, very low inflation. Prices are down, way down. We inherited a mess, and we've brought our country back very, very powerfully. Crime numbers are way down, despite the fact that they let in 25 million people, many of whom should not have been allowed into our country. The country's doing very well.
So here's the latest this morning. The president touting his accomplishments ahead of next week's State of the Union address as a new AP poll shows his approval sliding to 36%. Bloomberg's Tyler Kendall has more. Tyler, good morning.
Hey, John, good morning. Well, there does appear to be that gap between public sentiment and what has been relatively positive economic data for this administration. But according to polling, the White House has been firmly on the defense when it comes to the issue, as we know that price levels in particular have been a big driver of affordability concerns. And that's why we're expecting President Trump next week during his State of the Union address to tout what has been a flurry of new economic policies, not yet enacted and will likely face any pushback in Congress, but takes that more populist tone that the president has been trying to push forward. Now, of course, we've also seen the White House push ahead with policies that have already been enacted, trying to tout the fact that there will likely be larger refunds under the One Big Beautiful Bill this tax season and their push to onshore domestic manufacturing. But the question really becomes how much ground can they make up between now and November? Now, to be sure, of course, there are many months and anything could happen, but we did see two significant counterweights to the administration's agenda emerged last week. One is that the president himself authorized a pullback in federal agents on the ground in Minneapolis, seen as part of a bid to move negotiations along to reopen the Department of Homeland Security, which is currently shut down. And two, as you well know, and we covered on this program, we saw 6 Republicans cross party lines and vote against President Trump's signature tariffs targeted specifically against Canada. And those 6 Republicans, many of them represent key battleground districts, which is underscoring that some Republicans may feel that they need to go against the White House's agenda to advance their standing come November. John, it's really the House that we're closely watching here. Keep in mind, Democrats only need a net gain of 3 seats in order to flip that chamber, and we are currently seeing a historic number of Republican retirements, which could hurt that incumbency advantage.
Tyler Kendall with the latest in Washington. A note for Democrats at the moment, maybe avoid talking about foreign policy. Governor Whitmer and Congresswoman Ocasio-Cortez over the weekend at the Munich Security Conference absolutely bombed. Forgive the pun. But seriously, bombed.
Well, a lot of people were saying this, that AOC, this was her first international event on the world stage, and definitely hit a note that was not appealing and seemed to turn a lot of people off. So it does raise a question. Can that be really the front runner kind of vibe coming from the Democratic Party?
How did they go to a conference like that and appear on panels so ill-prepared for such obvious questions about foreign policy? Wasn't that shocking?
It was shocking, and it raises issues of are people not challenging them in the same kind of way in the United States?
Precisely.
In asking hard questions that really need to be answered.
Spending too much time on home turf and getting very comfortable interviews. Joining us now, John Lieber of the Eurasia Group. Now, John, I imagine that doesn't really matter when it comes to the midterm because foreign policy doesn't seem to be the big issue at the moment. Is that fair?
Yeah, that's right. I mean, well, to some extent, it's correct for the midterms. Donald Trump's big issue in his presidency so far, however, has been foreign policy. And even though they'd probably like to be talking about domestic policy and like to be talking about job creation and economic growth, foreign policy keeps dominating the news because Trump's been extraordinarily active on that front. Venezuela, Iran, Greenland, it's everywhere. So for the midterms, yes, foreign policy doesn't matter so much. But for the presidential primary and for President Trump himself, foreign policy is the key defining issue of this presidency so far. And I think it's going to be a big issue in that primary, like you heard these two talking about it in Munich.
On an international level, I read the Munich Security Report. It was quite the read. The headline was, "The world has entered a period of wrecking ball politics," talking about how the United States is no longer the shepherd or really the overseer of the world order. And I just wonder how that's resounding in the United States. I mean, is that resonating, or is domestic focus on completely other things?
I think that Donald Trump ran on a platform of isolationism from the rest of the world, saying that this system that the U.S. had created over the last 80 years was fundamentally broken and had betrayed American workers. So I think that some guys in some country most Americans have never been into, writing a report that says that system, that Donald Trump has now fundamentally broken that system and there's no going back, might not be that bad of a thing for Trump himself or anybody else running for president. So I think that in a way, from a domestic political stance, it's an endorsement of his policies. Now, I don't think voters want to see chaos, and I don't think they want to see, things like invading Greenland. They probably don't want to see invading Iran, and they probably aren't that excited about invading Venezuela. But he's getting targeted wins here, and he's keeping Americans out of long-term entanglements, which was a huge problem during the Bush and Obama administrations. So in many ways, I think that this reordering of the system is probably a good thing for Trump, and I think it's probably a political victory.
It might be a political victory in terms of messaging on one hand, but on the other hand, a place like Canada, which is the biggest importer of U.S.-made vehicles, talked about how a greater proportion of the population than not would be okay buying a Chinese electric vehicle right now for a cheaper price, which seems to be more feasible considering that they're lowering tariffs than, say, a year ago when that wasn't the case. I mean, how much do you think that it's going to shift some of the trade partners and some of the export lines that the United States has?
Yeah, that's absolutely the case. I mean, the problem with alienating your allies is that they look for new places to get their security from, and they look for new places to trade with. The issue is they just don't have a lot of places to turn, particularly Canada. So they can shift around their alliances. They can look to the EU. They can look to China. But the U.S. is going to be their largest trading partner. Trump knows that. He's probably overplaying that hand and alienating some of these people. It is starting to cost Americans in terms of export destinations and potentially jobs. I think that's one of the reasons you saw those Republicans, those 6 Republicans in the House last week, vote against the Canadian tariffs because they recognize that this is a sensitive issue with voters and it potentially costs jobs in their trade-exposed districts, given how many exports end up going into Canada as part of the automobile supply chain or in other areas.
Hey, John, it's good to catch up as always. Thank you, sir. John Lieber there of Eurasia Group. This from Politico over the last few days on Canada and Prime Minister Carney. The Canadian Prime Minister is spearheading discussions between the EU and a major Indo-Pacific trade bloc after calling on middle powers to join forces. Right to your point.
There has been a coalescing of other alliances in order to get around the U.S. influence because the U.S., as the Munich report laid out, is now viewed as increasingly fickle and non-committed to this alliance. So, you know, it's sort of a question of how this bears out in terms of trade, how this bears out in ultimate alliances, and whether this is longer lasting. But this was really prime reading. This Munich security report in 2026. I rarely read these types of communiques. I mean, this isn't exactly how I spend my weekends all the time. Sometimes maybe more than I would like to admit.
Do you put the link into an LLM and just say, you know, summarize for me in 100 words, or do you read the whole thing?
I read the whole thing.
Good, good.
No, I actually wanted to hear how they wrote it. It was important to understand how they wrote it and what was signed off on. It is pretty stark reading. I recommend it.
Standing ovation for Secretary Rubio.
Yeah, interestingly.
Very, very different to what we heard from the Vice President 12 months ago.
Was the content
different style?
Yeah, but was the content different? It was a different style, but was the content different? It was sort of interesting that way.
I'm clarifying very quickly.
Very
I'm
good.
right there with you. Up next, Carly Cohu of Jefferies as investors rush to Walmart ahead of earnings from New York City. You're watching Bloomberg TV.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The opening about 2 hours away. Futures softer. We're down 1/3 on the S&P 500. On the Nasdaq, we're negative again. We're down by 0.7, coming off the back of the worst week of the year. On the S&P 500, the losses continue. In the bond market, new lows for the year. On a 10-year bond yield, down another 2 basis points, just above 4%, 4.03 as things stand. As we count you down to the cash open, let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John. It's the deal that will forever be happening, and that is Netflix, Warner Brothers, and the most recent turn with Paramount. Warner Brothers reopening the conversations, the negotiations with Paramount, giving them a week to give their best and final offer. Apparently, they're willing to go up to $31. Currently, they're at $30 a share, but that might not be their best and final. So again, 7 days for that transaction to maybe take place. Paramount goes up 2.7%, Warner Brothers just under 3%. We've also had a lot of activist news this morning. I'll just go on one of them. Norwegian Cruise Lines, Elliott, reportedly by the Wall Street Journal, taking a more than 10% stake. It thinks that it can push this company to turn around its efforts and catch up to its rivals, which it has been lagging. It's also been working on adding a board seat to Norwegian Cruise Lines. Finally, some deals news. Hapag-Lloyd, the German shipping giant, will be buying Zim. This is an Israeli shipping company listed here in the U.S. This gives Hapag more exposure to Asia. $35 a share is what they will be buying it for. About a 50% premium. Shares go up 35%, trading just under $30. John?
Hey, Danny, thank you. Thanks for the update. More from Danny in the next hour. On our radar this morning, Anthropic's contract talks with the Pentagon hitting a snag over additional protections for its Claude tool. The company wants to prevent the AI bot from being used for mass surveillance or developing autonomous weapons. Elsewhere, Iran and the U.S. meeting for a second round of nuclear talks in Geneva today. Iranian officials willing to discuss their nuclear enrichment activities, but are pushing for the potential easing of American sanctions. And finally, new polling, finding more than half of Canadians are willing to buy an electric vehicle made in China. The Prime Minister, Mark Carney, reducing levies on Chinese EVs, allowing as many as 49,000 into Canada each year at a 6.1% tariff rate.
Just compare that to 2024, and this is an important reference point. We're seeing now more than half of Canadians okay with the idea of buying a cheaper EV. Doesn't really matter to them. In 2024, 61% of Canadians said they would be less likely to buy a Chinese electric vehicle than others, simply because they were worried about the origins of that vehicle, even if it were less expensive. Only 25% said it wouldn't make a difference. So clearly, the zeitgeist has shifted, the emotion has shifted in Canada, and that's resulting in what they're willing to buy. This really goes to a question. How much is the United States pushing former allies or erstwhile allies into the arms of some of their major antagonists simply because they're not necessarily as reliable in some of the tariff issues? And this, to me, is a real question. And I'm wondering how this is received in Washington, D.C.
It's a real question, and you're right to point it out. It's not just that the U.S. is losing Canada. It's who is losing Canada to. That Canada is cozying up with China. Now, we'll see how this works out for Prime Minister Mark Carney, but he's not going to stop there. Based on the reporting coming from Politico, and I mentioned it moments ago, and if you missed that, I'm happy to share it once again, that the Canadian Prime Minister is spearheading discussions between the EU and a major Indo-Pacific trade bloc after calling on middle powers to join forces. How much further can he push this?
You know, this ultimately is a question, and is President Trump overplaying or correctly playing his hand in terms of how much the U.S. is the major trading partner with Canada? At the same time, if Canada has become the punching bag for the United States, what are they supposed to do? Their economy has been flagging, their currency has been declining, their debt has been increasing, and a lot of people are seeing themselves out of work and in a worse position. People are angry, and they're looking to an alternative, and clearly they're not alone. We're seeing similar rhetoric coming out of the Munich Security Conference. How much does this actually result in long-lasting action does remain to be seen.
The talks around USMCA becoming more and more contentious by the week at the moment. Let's turn back to financial markets. Futures a bit softer. We're down 1/3%. Investors looking for a safe haven, and they've been pouring into consumer staples. The sector outperforming tech and financials so far this year. Staples are at record highs. Amanda Mull of Bloomberg joins us now for more. Amanda, what is behind this massive drive into staples and into Walmart in particular?
Well, I think that as investors look around at some of the potential impacts for AI, especially on the software business, is they believe that perhaps these software products are more fungible than we previously thought. They're looking for opportunities to put money into consumer staples. Over the past year, we've seen consumer retailers be more consistent than perhaps expected, even as consumer prices rise. And retailers that are known for good deals and their value proposition are doing particularly well. Walmart has increased its market share, particularly with households earning over $100,000, and those are the biggest spenders in our economy.
Amanda Moe with the latest. Amanda, thank you. The earnings from Walmart come in later this week. Look out for that on Thursday. Jefferies raising its price target on the stock to $225 as the retailer prepares to report fourth quarter earnings later this week. Carly Coho of Jefferies joins us now for more. Carly, good morning.
Hey, good morning. Thank
what
you
a
so much
run
for having me.
we've seen in that name. How unusual is it to see it with a 50 PE?
I mean, we've never seen it before, truthfully. I think what's really happening is we're seeing an influx of tech investors. So one of your previous guests was talking about how it's going to really be these top 100 companies. They're going to figure out how to really monetize AI. And we think that Walmart is best positioned to do this. Walmart's been leading retail for years upon years. I mean, we think about things that are simple as barcodes. Walmart was one of the first movers in those type of things. So we do expect them to continue to lead the way in how retail specifically will adopt AI and how that's going to really evolve their business model, both in terms of advertising as well as just data monetization.
So this is Lisa's point. And she's been raising this question repeatedly over the last week when we've seen this stock at all-time highs. Some people have characterized this as maybe just a distorted risk aversion trade. You think it might be something else?
I think it is. I think it is really a change in business model, what the P&L is doing itself, right? So Walmart, we're expecting, sales, EBIT to outpace sales by almost double. I mean, that's not really what you hear of in these retail type models, right? Normally it's, slight low single digit growth and then slight operating margin. What Walmart's able to do is really get back more gross profit dollars by having these different revenue streams that are helping support drive its retail business, specifically gaining with that higher income customer above $100,000, getting share both in food and non-consumables.
Yeah, I mean, the idea that Walmart has gone into high-end consumer goods, has gone into entertainment with Walmart Plus, has gone into more effective ad placement akin to what Meta is doing with respect to its AI and its data usage. I mean, I just wonder who its main competitor is anymore, who it's gaining market share from. Because people talk about Target. Okay, well, we've gone past that. How about Amazon? Well, we might have gone past that. Is this now an entertainment company? Is this a data company? Or is this a retail company? Or is it getting a lot of market share from all three areas?
I think it's that all three areas, right? So what they're doing is they're not trying to be the next Amazon. They're not going to develop all these type of data centers and kind of get into the back end of all this. What they're going to do is they're going to be a forward-leading retailer that's going to partner with the best of the best, and it's going to find use cases for all these different AI cases. So really, what we're seeing is they're doing it all, but remaining true to their EDLP and remaining true to, the U.S. consumer and trying to keep prices low. All of that working together is doing really well. We're talking about multiples being stretched relative to Walmart's historical norms, but if we look at someone like a Costco, they're actually trading below peak Costco levels, and Costco's never really been a tech leader, right? Costco's just been a solid executor and has, gained market share consistently. So even with this tech bend and retail landscape, Walmart's valuation actually isn't looking as crazy as it might on its face.
If Walmart can get money from its streams of revenue of data, from its entertainment side of Walmart Plus, maybe acquire some more media properties to boost that effort, and then they can lower prices. What chance does a Target have? What chance does a mom and pop store have? I mean, aren't we seeing the disruption before our eyes in some ways in the retail sector? And couldn't that bifurcation become much more palpable as the year goes on?
Absolutely. I mean, we've seen this. It kind of started even more with the pandemic, and it's just continued to roll and roll and roll, especially as we're seeing, price increases from, CPG. They're trying to get margin. It's kind of this delicate balance, and really it's Walmart right now in the marketplace, in our view, that's saying, hey, we're not taking any more prices. and you're not going to either.
Do you cover Mattel?
I do,
and
yes.
Hasbro too, right?
I do,
Can we
yes.
finish there and talk about pricing?
Of course.
Are we going to start to see high prices this year? There was a story in the Wall Street Journal in the last few days that a lot of people are quoting and citing and saying that this is the year that actually we will see high prices. If you've been waiting for the tariffs to be passed on, this might be it. Where are you on all of that?
So we did actually see quite a bit of pricing come through the toy space specifically, really in this Q4. Let's call it mid-single digits on some items. Other items, it was double digits. So really what they've done is played around with elasticities. And yes, what we're going to see is kind of this higher for longer prices on these toys. So they're still kind of playing around, and I think right now we're going to see what's kind of considered steady state, whereas before, we already had our 2025 lineup, and then they had to react and change prices. What they're doing now is they now have toys that are designed for tariffs, and so there's going to be a little bit maybe stronger pricing on some of these. But overall, I don't expect it to be that much incremental in toys from what we saw over holiday.
And demand didn't fall off. What did you see? You mentioned elasticities. What happened with demand?
Demand wasn't that strong, truthfully. We're seeing kind of a little bit of that with Mattel and their stock price. They end up missing on the Q4 report. But it ultimately, toys did grow in 2025. It was just more in those key categories, not what I'd consider to be broad-based strength.
Kylie, good to see you. Thank you. Kylie Cohu there of Jefferies. Two different stories there, one on pricing, the other on Walmart, connected, of course. But the Walmart story, to your point, you've been saying this for a while. It is a mistake in the minds of many, including Kylie's, that ultimately just to dismiss this as some kind of risk aversion distortion, that there's something more than just that going on with that name.
They're able to monetize a whole host of data, and they're able to capitalize on how big they are to negotiate different contracts. They have a bunch of different things going on. The key test for Walmart, in my mind, will be if they get to a place where, like the banks, they can start to see some of their headcount shrink. That's when it's going to start to get really spicy, and that's what I'm really curious about. But until then, I think that this is a story that has legs just simply because of all of the changes that have happened in terms of their business model.
That multiple is eye-catching, though, going into that earnings release.
Maybe it's just because they went to the NASDAQ and then people said, tech company.
Hey, maybe.
That's what they wanted.
Maybe. We'll see. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. SpaceX and xAI are competing in a secret Pentagon contest to produce voice-controlled autonomous drone swarming technology. Sources telling us here at Bloomberg the companies are among only a few selected to compete in the $100 million prize challenge. Meanwhile, Hyatt Hotels executive chairman Tom Pritzker is retiring from his position and won't stand for re-election. Pritzker citing his association with Jeffrey Epstein for his decision to step down. Pritzker says he deeply regrets his association with Epstein and Ghislaine Maxwell. And President Donald Trump warning the federal government won't cover any cost overruns on a $16 billion Hudson River Rail Tunnel project. The project, known as Gateway, would add train capacity between New Jersey and Manhattan by building a new tunnel and upgrading the existing North River Tunnel. The president offering meetings to ensure the project does not go above budget. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the programme, driving the bid into bonds.
Inflation fears are overblown. We think that's part of the reason we've seen such a strong rally from the US. 4% 10-year and a front end moving towards 3 cuts. We can start to lighten up.
That conversation up next with Elle Davis of BMO, live from New York City. You're watching Bloomberg Surveillance.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've immune the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now off age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Development, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Further Wave by empowering our customers across all our segments?
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Live from New York City, welcome back to the show. Equity futures on the S&P, negative by 0.4. An update on the price action this Tuesday morning. Lower again on the Nasdaq. This session lows were down by 0.8%. In the bond market, here's a headline for you. Lows of the year. The 10-year down 2 basis points, 4.02%. Under surveillance this morning, driving the bid into bonds.
The market's kind of ahead of the Fed dots, given everything that we know today and the fact that the growth is likely to be front-loaded because of the one big beautiful bill and the rate cuts are likely to be back-loaded. Yeah, we just think at 4% 10-year and a front-end moving towards 3 cuts, we can start to lighten up. Ultimately, we think the inflation fears are overblown. We think that's part of the reason we've seen such a strong rally from the US.
So here's the latest this morning. Bond yields heading to the lows of the year. Cooler than expected inflation. Raising bets the Federal Reserve will deliver more interest rate cuts through the year. Earl Davis of BMO writing, we believe that yields will remain in the 2025 range and growth will continue to surprise to the upside. Earl joins us now for more. Welcome back to the program. Let's get the update from you. I know you're bullish on the outlook. What are yields doing down at 4% on 10s?
Well, I'll start by saying I love the smell of napalm in the morning. Meaning, this risk off, this fear is providing us with opportunities as active managers to position for the medium to long term. So as you put on the screen, our view was 10-year bonds will stay in a range of 390 to 480 in 2026, midpoint 435. As we approach 390, we go more and more underweight. Can it go past 390? Yeah, sure. It could go to 375 if you have military action in Iran or an acceleration of the AI fear. Having said that, when it gets to that level, it's like being in a doctor's office, getting the rubber hammer on the knee. Will the knee stay up? No. And the only thing that will make the knee stay up is QE, and you're not going to get QE at bond lows. You'll get QE at bond yield highs. So we like going underweight duration there.
So what is it about 390 that makes it difficult to sustain life at those levels?
Well, there's a few things, as you get further out the curve, 10-year bonds, 30-year bonds, and I'll come back to that in a second, there's less and less influence of the U.S. on yields. It becomes more global influence the longer maturity you have. And the weight on global yields is Japan. Japan, the largest buyer of international bonds. As their yields go higher, it's a substitute, not for international buyers, for Japanese buyers, which means you have to find a price level that sustains or that new people want to come into the market. And we don't believe it's 390 to 375. So that's the magic thing there. Coming back to your point, even though that's our trigger level, 390, 375, we're actually going underweight the 30-year bond because there's so much duration risk and there's so much more international influence on that part of the yield curve.
Torsten Slok just put out a note minutes ago talking about how 90% of the global bond market, the public bond market, is trading below a 5% yield. At a time when people are starting to worry about inflation being persistent, I just wonder, can you fight this? Do you understand it in terms of why people are going so much into bonds if this fear of inflation has been persistent for years?
Very easy answer to that. The answer is 5% still above inflation, which means you're getting a real yield of, call it 1.5% to 2% right now, which means if you invest the bonds in 10 years, that real yield, like a TIPS or whatever, you're going to realize that. So that gives you a little bit of margin of safety. Why people are still buying bonds at these levels is because it's 150 basis points to 200 basis points over inflation.
Is your bet, Earl, that the growth portrait of the United States and more broadly is much higher than people are currently expecting? So you want to be in risk assets and you want to be underweight duration. Is it fair to characterize it in that kind of way?
I would say there's a number of people who anticipate growth. We anticipate it for longer than the market's anticipating. And that's because we haven't seen the flow through of retail spending from the tax refunds. There's significant amount of tax refunds going to the lower and middle income class in February, March, and April. They have a lower and middle income classes have a higher propensity to spend a higher amount of those tax receipts. So we do expect to see some growth surprises based off the tax receipts over the next 3 months, which again, buoys are a reason for going underweight duration. And I'll come back to going overweight credit now. We especially like credit because the spreads are widening, and they should widen with all this supply coming through this year. So it makes us much more comfortable going overweight credit at wider spreads.
So, Earl, I just want to get to the bull thesis on the economy, and it kind of connects to what you're talking about in credit, and it's the risk factors. You noted one, you alluded to it. One was geopolitics and the prospect of military confrontation. The other was an AI meltdown, and I think that's how you phrased it coming into 26. Yep. What is an AI meltdown, and does it look like this?
Yeah, this is how the start of it would look. We don't think it'll be an AI meltdown, but the AI meltdown comes from, can the revenues being generated by future AI support the spend right now? We've seen a little bit of a shift in regards to it's not going to be all bonds. We saw that with Oracle, where they're issuing more equity. As a bondholder, that makes us more comfortable buying those bonds. And to speak of Oracle, for example, those bonds trade about 200 basis points over 30-year bonds. We're comfortable with that. They also trade 100 basis points over Meta, equivalent to AI bonds. So we believe that whole spread complex is going to go higher, which we were underweighted last year. We're starting to buy into AI now because we don't believe the sphere is going to be sustainable.
How insulated do you think that part of the market is from some of the software fears that have really started to bubble up over the past few weeks?
It's a great question. I would... how we look at it, it's not how insulated is it over the period of the bonds right now. We believe it's insulated for 2026. We believe spreads could widen further because there's a lot of issuance coming. But a lot of these companies that we're investing in still have a revenue producer. So that's what makes us comfortable. Where it gets risky is once the expectation of spend is over revenues, and we don't expect that to fully change. Maybe it narrows a bit, but we don't expect that to fully change, at least not for this year and for next year, which makes us comfortable owning these bonds at wider spreads. We feel we're starting to get rewarded for the risk involved in owning those bonds.
Are you getting rewarded yet, Earl, for owning the risk involved with lower rated bonds and loans, for that matter, that are more leveraged to, say, software sectors that are at risk of being disrupted?
So great question, and it totally falls into our strategy. Right now, we're 1/3 overweight. So if we have 3 risk units, we're at 1/3 overweight, 1 risk unit. It's all in IG right now. We don't feel that we're adequately rewarded for, call it high yield bonds at this point in time. We do like it because the underlying growth dynamics are supportive there. The spreads are too tight. So our 2/3 risk unit, if we get further weakness, will go in IG, but the last unit goes in high yield, and we'll start switching some of our investment grade bonds to high yield. Once we feel we're at a spread level that's adequately rewarding us, we're probably about 100 to 150 basis points away on high yield.
Oh, good to see you. As always, thank you, sir. Earl Davis there of BMO, breaking down his views on the sovereign and corporate debt markets. Jim Caron of Morgan Stanley caught up with us at the back end of last week. He said this about contagion risk. A lot of those bigger risks were diversified into the private markets, so the ability for this to create contagion and become a financial event, a bigger financial event, is relatively low, and you're speaking directly to the software concerns people have.
Yeah, and a lot of people have argued that, if anything, private credit actually is a buffer to a lot of market risk because some of the higher leveraged loans were over there. That said, if you take a look at U.S. tech-focused leveraged loans, you can see the distress level rising to 15% of all loans in that book. So clearly there is a public market that is feeling some of this distress, and I would argue that not all public markets are really invested concretely in some of this stuff. It's not like we can isolate and sort of ring fence all of the toxic debt in one place or another. The question is where the pockets are going to emerge, and are they going to be in public or private?
His point on treasuries was interesting.
Yes.
Something to think about, at least. You've got the risk aversion trade driving yields lower, down to 4% on 10s. But to sustain life around 375 to 390, he believes is difficult because the foreign buyer is going to step back away. And we've got a lot of supply to clear over the next year, I guess.
A lot of people would agree with him. What I'm not understanding right now is based on the fact that the consensus trade right now on Wall Street, according to the Bank of America Fund Manager Survey, is a steepening yield curve. And is this idea that the long end of the yield curve is going to continue to rise and inflation fears haven't gone away. My question is, why is that not working? Why is that violently being disagreed with in markets? Why is that JP Morgan Asset Management comes in and says we're buying hand over fist because ultimately people have gotten ahead of their skis? Is this a trade? Is this Japan? That's what I'm really trying to wrap my head around.
30s are now where people thought 10s would be. Things have changed pretty quickly. 466 on 30s and 10s, just north of 4%.
Maybe it's the Fed Treasury Accord. They're going to get together. They're going to do yield curve control under a
lot about
name.
that, and then everyone's got a different description of it.
I heard 5 different takes on it this weekend, and there were about 6 different ideas in there.
A lot of speculation about the future of this Federal Reserve and the kind of relationship it'll have with the Treasury. Coming up next, Ed Yardeni of Yardeni Research, Ed Ludlow of Bloomberg News, Stephanie Roth of Wolf Research, Krishna Mamani of Lafayette College. The third hour of Bloomberg Surveillance just around the corner.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
There's a lot of creative destruction that's taking place in markets.
Some of these things are overdone. It's about valuation.
The stress within the AI and the software names is still very, very concentrated.
There are going to be losers and winners all over the place.
It's that unknowing that makes people much quicker to pull the trigger.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. Check it out. Equities negative by 0.5% on the S&P, down by 0.9 on the Nasdaq. In the bond market, money rushing into bonds, yields lower across the curve. We're down by 2 on 10s to 4.03%, down by more than that on 30s to 467. So what's happening? This is super defensive. Risk aversion dominated the market over the last week. This is not just the rotation of the previous few weeks where we were talking about going into financials, banks, small caps. Things changed last week and became much more defensive. And the bond market move speaks to some of that.
What we got from the labor market wasn't necessarily definitive one way or another in terms of the strength of the existing U.S. employment backdrop. At the same time, what everybody could agree on when they looked into the internals is that this did not show evidence of an accelerating labor market. This didn't show signs of some sort of reacceleration that most investors had priced in as their base case heading into 2026. So it's important to understand the positioning coming into this year. And then what we're getting from the data, which is downside surprises in a sense that maybe things really aren't taking off and broadening out in the way that some people would like to see.
Earlier in the program, we played some sound from James Athey. James Athey, an old friend of this program. He said something a few years ago. He talked about narrative ping pong. Remember narrative table tennis? Yep. That's what it feels like over the last several weeks or so. Everyone's super bullish on the rotation, then things become super, super defensive. Think about how quickly the narrative has changed around CapEx. We've had decades, literally decades, of investors telling companies they've not been investing enough. And then just like that, fund manager survey, Bank of America, investors saying corporations are over-investing. That's at a new record high.
They're talking to a number of the hyperscalers that just announced $650 billion of CapEx this year. And it's not just the overall scale of that. It's the pace of increase year over year, 100% increases that you're seeing. And this question of what is it going to that's actually going to be productive? Are we just trying to create bots for ourselves to replicate humanity? Or is this going to go toward creating some sort of better future for all of us? I mean, not to get existential, but the tail risks right now have never been fatter. And the uncertainty right now has never been greater. That's what a lot of people are saying at a time where valuations are very high. So people are selling. And it's the reason why I do wonder how much the sell America trade and go into other countries is right now sell uncertainty and go to something that's less high priced because guess what? It's got to be a better bet. And how much is that what's underpinning a lot of this trade?
Well, to that point, sell America, the bonds don't work. Remember that? The bonds don't work.
I think I vaguely remember that.
Yields of 4% on 10s. The bonds look like they work.
Yeah.
Now, maybe that's going to change. I don't know. But that South America trade was only a month ago.
Yeah. But is that because of some policy or is that thank you, Bank of Japan? Thank you, Sanai Takaichi. I mean, again, talking about the confusion of the swirling trends when you get to the long end of the yield curve, this is determined as much by international factors as it is by domestic ones at a time where no one can agree who the real Kevin Warsh really is. So it really speaks to a moment of ultimate churn.
Yields down by 2 basis points. The narrative table tennis continues back and forth, week to week. Day to day. Coming up, Ed Yardeni of Yardeni Research with stocks adding to losses. Stephanie Roth of Wolfe Research looking ahead to the inflation data later this week. And Krishna Mamani of Lafayette College breaking down the shift in market leadership. We begin this out with stocks edging lower as AI concerns weigh on Wall Street. Ed Yardeni of Yardeni Research remains bullish. He writes the following. Investors are rotating among sectors of the stock market rather than moving from stocks to cash. The bull market should remain strong as it broadens. Ed joins us now for more. Ed joins us now for more. And Ed, I've got to pick up on the question that Lisa and I were talking about. Ed, sure. The rotation, is it more than just that now? Is it becoming just a little bit more defensive?
Well, I think, if you played day by day, it certainly felt like it last week, as you said. I think some of this is just AI fatigue. People are just totally tired of the AI concept. They don't know whether they're coming or going with it. They don't know whether it's going to be wildly profitable or not. And I think another thing that's entered here is, Elon Musk has been talking about how deflationary the combination of AI and robotics is going to be. And so we've got all that happening. And as you folks were saying, the geopolitical situation is also quite volatile. We've got a situation in Japan where the government wants to stimulate and have a larger deficit, and yet the Bank of Japan is tightening. And then, oh, by the way, let's not forget there's a possibility here of a war between the United States and Iran. And that could obviously push oil prices higher, but the bond market's kind of taking it as maybe it's time to look for a safe haven from all these various concerns.
So, Ed, let's talk about the havens and where we're fleeing. So the money is leaving tech. The Nasdaq's down by about 1% this morning. The money is going into staples, into utilities. Those two sectors at all-time highs. Right. Where do you think the bigger risk is at the moment? Where people are leaving or where they're going to?
Well, at this point, I think the uncertainty in AI suggests that that entire trade is going to remain challenging. And meanwhile, I think investors will continue to go basically from the virtual theme to the physical theme. They're getting confused with all the digital technology, and they're going back to the old-fashioned analog world, the physical world. And that means materials and energy and, as you said, consumer staples. I think financials is one area where it's getting overdone. I think they're clearly the large banks and even the regional banks are going to do just fine in this environment. And I think healthcare, which was a laggard last year, is also an area that's going to clearly benefit from AI technology. I don't see a situation where AI robots do surgery, though. Elon Musk has been talking about that as well.
Is there a contradiction, Ed, in the idea of materials, metals, commodities, the idea of the physical world continuing to gain favor, and also liking government bonds that are somehow implying inflation remains subdued?
Well, I think, Lisa, the thing that's important to recognize is things do change. And in our world, their wealth has increased rather dramatically. There's a lot of wealth that needs to be, that creates investment demand. And a lot of it does want to be diversified. And so it's perverse. As the stock market's gone up, people have felt a little bit more anxious about it and said, well, maybe it's time to rebalance. So that's why I recommended rebalancing in early December of last year. I actually said it's time to underweight the Magnificent Seven because I felt that there was just too much uncertainty related to their capital spending, their rate of return, the arms race that they were engaging in. And I did, for the first time in many years, suggest maybe it's time to look overseas. Maybe there's, I don't know, safe havens, but there's cheaper havens overseas. And that worked out very well last year. I only jumped onto it in December, but I think it's going to continue to jump to do well.
Are international stocks a better diversifier than U.S. bonds?
Well, I'm not going to answer your question with either or. I think gold has been the really good diversifier for the stock market. If you put the S&P 500 on the same chart as the price of gold, same scale, you'll see that they're inversely related on a cyclical basis. So it's really gold is a very good diversifier. It's inversely correlated with stocks, but the trends are the same. So if I'm right, and we're still very much in a bull market in stocks, just rebalancing diversification is going to benefit gold. But I think it's also, we're seeing here, it's benefiting bonds and it's benefiting emerging markets. Look, the MSCI US got to be 65% of the market cap of the global MSCI. And that's, it's hard to overweight something that's already so overweight. And so that's a good reason for diversifying globally. And a similar story can be told about
information technology and communication services, they got to 45% of the market cap of the S&P 500. And maybe that's it for a while. And we are seeing rebalancing. So I think the rebalancing trade is a sensible one. I would stick with it.
So, Ed, what's the argument for the index, for the S&P, for the market cap S&P 500? What's the bull case?
Earnings have been phenomenal. And they're going to be at a, when all the data comes in for the fourth quarter earnings reporting season, it's going to be at an all-time record high. I thought that we're going to get something like $310 a share for the S&P 500 this year, but the analysts are already up to about almost $320 a share. And then for next year, I thought $350, and the analysts are already talking about $360. So the analysts are getting pretty whipped up about the outlook for earnings. And it's not just technology, which I think will continue to be a very profitable area, notwithstanding the concerns about return on capital. But it's broader than that. And not only that, but I think the fact that revenues of the S&P 500 are all-time record high speaks to the fact that the global economy is doing remarkably well. I mean, it's really quite amazing given the stress tests that the global economy had with the tariffs last year.
Ed, you nailed it when you called this the Roaring 2020s. We're already in 2026. Does it still feel like the Roaring 20s to you, or does it feel like it's kind of entering its later stages?
Well, I don't think so. I'm already starting to think that, if this works out, I'll talk about the Roaring 2030s. The 2030s are going to be a little bit tougher because the 1930s were really just plain ugly. But let's stay on the decade that we have right now. And as you said, we've got a few more years into the Roaring 2020s. I don't think that it's showing signs of fatigue. I think the Roaring 2020s is still very much intact. We've got the economy doing extremely well, real GDP all-time record high, consumption spending all-time record high, capital spending all-time record high. Stock market not too long ago was at an all-time record high, and I think now is just a pullback. So I think it's still very much the Roaring 2020s, and it's earnings-led, which is a good way to keep it going. If it was all valuation, I'd be concerned, but I think the fact that earnings are validating this bull market, that's a good thing.
We're fatigued, Ed. Even if your thesis isn't, we are. Ed, thank you, sir. Ed Giardini of Giardini Research. I can't get past Q1, never mind the 2030s.
I don't think I can get past last week, let alone the year. I mean, truthfully, it feels like in terms of narrative ping pong, it's been relentless. And everyone who comes in is like, oh, are we done yet with this year? I mean, that's pretty much every guest.
It's pretty exhausting stuff. We're down another 0.6% on the S&P 500. The opening bound 1 hour and 18 minutes away. Let's get you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Apple is revamping its podcast platform as interest grows in incorporating visual elements. The company aiming to make it easier for audiences to shift between viewing a video podcast and listening to audio only as the industry shifts toward video. For example, YouTube is the #1 podcast consumption platform in the U.S., according to Edison Research. Meanwhile, Paramount shares are rising in the pre-market. Warner Brothers has agreed to return to the negotiating table for 7 days to iron out the details of Paramount's most recent offer, which was reportedly raised to $31 per share. Despite returning to the table, Warner Brothers says its shareholders still unanimously recommend sticking with its binding agreement with Netflix. And activist investor Elliott Management is building a more than 10% stake in Norwegian Cruise Line. That's according to the Wall Street Journal, and it's planning to push for changes at the struggling cruise ship operator. The company has lagged behind competitors, including Royal Caribbean and Carnival, and Elliott believes Norwegian could make changes to catch up to those rivals. That's your Bloomberg Brief. John.
Yahara, thank you. More from Yahara later this hour. Up next, the morning calls, plus Bloomberg's Ed Ludlow with futures pointing to another tech-driven sell-off for Wall Street. The Nasdaq down by more than 1%. Live from New York City this morning. Good morning.
गाइस नेचुरल गैस में यहाँ पर ही हाफ प्रॉफिट बुक कर सकते हैं, ठीक है। बुक द हाफ प्रॉफिट इन नेचुरल गैस एंड ट्रेल द रिमेनिंग क्वांटिटी। 630 कैंडल ऑलरेडी बन चुकी है, लेट्स सी कितना और मोमेंटम करता है। फर्स्ट टारगेट है, वैसे देखोगे फाइनल टारगेट ये है। यहाँ पर कोई सपोर्ट नहीं है, ओके, देयर इज़ नो सपोर्ट ओवर हियर, अभी तक तो नहीं है, बन जाए तो बात अलग है। तो एक्सपेक्ट है ये फॉल पूरा होना चाहिए, टारगेट तक आना चाहिए प्राइस को, बट वी नीड टू सी प्राइस किस तरह से मूव करता है। तो बुक द हाफ प्रॉफिट ओवर हियर एंड रिमेनिंग क्वांटिटी को ट्रेल करना, ठीक है। 1:5 का टारगेट है समथिंग अप्रोक्सीमेटली। ओवरऑल 5% का सेल ऑफ एक्सपेक्ट कर रहे हैं, तो 2.5% सेल ऑफ ऑलरेडी हो चुका है, 2.5% और है। ओवरऑल देखोगे तो लगभग 15 पॉइंट टोटल, बट बुक द हाफ प्रॉफिट एंड ट्रेल द रिमेनिंग क्वांटिटी, ओके। पूरा क्वांटिटी बचा के मत रखना, प्रॉफिट आप बुक करके ट्रेल करना। यहाँ पे फाइनल टारगेट ये है हमारे पास, यहाँ पर आएगा तो फिर बाइंग का प्लान करेंगे वापस से। बाकी क्रूड ऑयल में कोई ट्रेड नहीं चल रहा है अभी, परसों से अगर कोई रनिंग ट्रेड में है तो बढ़िया है, होल्ड करके बैठे रहो। थोड़ा सा और है, अभी टारगेट आया नहीं है, बीच में आज कोई एंट्री नहीं बनी है। अभी भी प्राइस अपने सपोर्ट और रेजिस्टेंस से फिलहाल तो दूरी है। मुझे लग रहा है मार्केट नॉर्मली वॉच कर रहा है यूएस और ईरान के बीच में जो अभी जेनेवा में मीटिंग चल रही है उसको, वहाँ से कुछ अपडेट मिलता है तो देखते हैं, ठीक है। तो नेचुरल गैस में आप प्रॉफिट होकर के ट्रेल करना अगर फाइनल टारगेट के लिए जा रहे हो तो। बाकी यहाँ पर अभी कोई बाइंग नहीं है, देयर इज नो सपोर्ट ओवर हियर। वैसे तो देखो हाई चांसेस है प्राइस फॉल होना चाहिए 270, बट देखना पड़ेगा डायरेक्टली फॉल करता है या फिर पुल बैक के बाद आता है प्राइस फ्रॉम दिस लेवल। क्रूड ऑयल में ओपन इक्वल टू लो कैंडल बनी है, वाओ, ओपन इक्वल टू लो। वैसे क्रूड ऑयल ने जो आज लो बनाया था 5715 के अप्रोक्सीमेटली, वो एक सपोर्ट बन सकता था वैसे देखा जाए तो। अब एमसीएक्स में कैंडल क्लोजिंग उस बेसिस पे प्राइस एक्शन पे हुई नहीं है, नहीं तो जरूर एक सपोर्ट बन सकता था, बट फिर भी प्राइस यहाँ से रिवर्स किया है थोड़ा बहुत। बट क्या ये सिर्फ ट्रैपिंग है, बिकॉज मोमेंटम में तो प्राइस अभी भी देखोगे वापस 15 मिनट की कैंडल के अंदर ही है। नीचे अगर आता है 5700 के आसपास, वहाँ कहीं एक प्राइस एक्शन बिल्डअप करे अगर ना, दैट विल बी अ वेरी गुड साइन फॉर क्रूड ऑयल रिवर्सल फ्रॉम दोज लेवल एज वेल। फिर प्राइस को यहाँ आने की ज़रूरत ही नहीं पड़ेगी, क्योंकि अभी ये लेवल काफ़ी दूर है। इंट्राडे में इन लेवल पे आके फ्रेश ट्रेड बनेगा, इसके चांसेस कम होते जा रहे हैं जैसे जैसे टाइमिंग निकल रहा है, फॉर टुडे ओनली। कल से फिर चार्ट भी चेंज कर देंगे तो ये नेक्स्ट मंथ का फ्यूचर का चार्ट यूज़ करना पड़ेगा। उसको बुक कर लो हाफ देन ट्रेल। Wow, Iran partially shuts Strait of Hormuz as US-Iran hold nuclear talk. Two killed in blast at military facility in Russia's Leningrad region. Mass report. Negotiation between Russia, Ukraine and the US now underway in Geneva. अच्छा ये second negotiation भी है. दो मीटिंग है आज mainly. रसिया यूक्रेन और यूएस के बीच में एंड यूएस एंड ईरान के बीच में. बोथ आर इन जेनेवा. लग रहा है यूएस प्रिपेयर कर रहा है अगर ये ईरान और यूएस के बीच में टॉक प्रॉपरली नहीं होती है या फिर ईरान नेगोशिएट में नहीं करता है. देयर इज अ चांसेस बिकॉज ये कल एक रिपोर्ट भी आई थी पेंटागन के एक ऑफिसर्स की ओर से कि यूएस प्रिपेयर कर रहा है अगर ये टॉक फेल होती है प्रॉपरली फेल हो जाती है तो एक लॉन्ग लास्टिंग मिलिट्री कॉन्फ्लिक्ट ईरान के साथ करने के लिए वो अपने एसेट्स को मिडिल ईस्ट में कंटिन्यूसली डिप्लॉय करे जा रहे हैं जिसमें दो एयरक्राफ्ट कैरियर ऑलरेडी डिप्लॉयड हैं अभी इस वक्त. एंड पिछले काफ़ी टाइम से हम देख रहे हैं यूएस कंटिन्यूसली अपने F-15 एस F-16 हो गया F-22 रैफ्टर हो गया वो कंटिन्यूसली मिडिल ईस्ट में डिप्लॉय करते जा रहा है. आज ही 36 F-16 और 12 F-22 राफ्टर उन्होंने डिप्लॉय करें तो इट इज़ नॉट अ नॉर्मल. अगर वॉर नहीं करनी है तो इतना डिप्लॉयमेंट. एक दिन में तो ये ईरान का कुछ कर नहीं पाएंगे तो लॉन्ग लास्टिंग एयर बम्बार्डमेंट करनी पड़ेगी इनको अगर कंप्लीटली ईरान को डिस्ट्रॉय करना है इन केस जैसा इन्होंने यूएस ने इराक में किया था 2003 इराक वॉर के दौरान. हो सकता है उस केस में फिर क्रूड ऑयल के प्राइस आपको 7,000 8,000 तक आराम से जाते हुए दिख जाए यहाँ से लगभग 30% और. 48 US Air Force fighter jets including F-16 and F-22 are either airborne or preparing to deploy towards the Middle East. 48, almost 1.5 squadron. Iran Supreme Leader Ali Khamenei says he will not accept US demand to limit Tehran's ballistic missile range. IRGC linked media warned parts of the Strait of Hormuz will be closed today for several hours. The closure, they say, is part of a strategic exercise for the intelligence control of the Strait of Hormuz to maintain safety and navigation. Wow, Warner Bros reopens deal talk after Paramount raises bid. इनका भी अलग ही चल रहा है. The move set to stage for a potential second bidding war with Netflix.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We want to begin this morning with the death of civil rights leader Jesse Jackson. He was 84 years old, and Bloomberg's Alexis Christoforous has the latest. Alexis.
Karen, Jesse Jackson's death was confirmed by his family in a statement which said the famed civil rights leader died peacefully but did not give a cause. Jackson's activism spanned decades, including 2 runs for the Democratic presidential nomination in 1984 and 88.
I see the face of America, red, yellow, brown, black, and white. We're all precious in God's sight, the real rainbow coalition.
In 2000, President Clinton awarded Jackson the country's highest honor, the Presidential Medal of Freedom. Jackson revealed in 2017 that he had Parkinson's and had been hospitalized since November after being diagnosed with a degenerative condition. Jesse Jackson is survived by his 6 children and his wife of 60 years. In New York, Alexis Christoforous, Bloomberg Radio.
All right, Alexis, thank you. Warner Brothers Discovery has agreed to temporarily reopen sale negotiations with rival Hollywood studio Paramount Skydance. It's setting the stage for a potential second bidding war with Netflix. Warner Brothers negotiated a waiver with the streaming giant that will allow it to engage with Paramount for 7 days about the terms of its most recent offer. The decision came after a Paramount banker told a Warner Brothers board member that Paramount would offer at least $31 a share if the company agreed to reopen talks. That's $1 a share more than Paramount's latest proposal, and the company also said the current bid is not its best and final offer. The U.S. and Iran set to meet meet for a second round of nuclear talks as they seek to avoid renewed conflict in the Middle East. On Air Force One, President Trump said he will follow the talks closely.
So I'll be involved in those talks indirectly, and they'll be very important, and we'll see what can happen. I mean, it's been typically, Iran's a very tough negotiator. I think they want to make a deal. I don't think they want the consequences of not making a deal. They want to make a deal.
And as the talks began, Iranian media announced that Iran had fired live missiles toward the Strait of Hormuz as part of a maritime military exercise. Secretary of State Marco Rubio said he is hopeful Tehran and Washington can broker an agreement, and he spoke with Bloomberg News editor-in-chief John Micklethwait on the sidelines of the Munich Security Conference.
I think it's pretty clear that Iran will never be allowed to have a nuclear weapon, that poses a threat not just to the United States, to Europe, to world security, and to the region. There's no doubt about it. The second is we obviously want to have forces in the region because Iran has shown the willingness and the capability to lash and strike out at the United States presence in the region. You know, we have bases because of our alliances in the region, and Iran has shown in the past that they're willing to attack us and or threaten our bases. So we have to have sufficient firepower in the region to ensure that they don't make a mistake and come after us and trigger something larger.
And Secretary of State Marco Rubio was speaking with Bloomberg News editor-in-chief John Micklethwait. Iranian officials have expressed willingness to discuss their nuclear enrichment activities, but have tied any concessions to the potential easing of American sanctions. The Department of Homeland Security is still shut down amid a congressional funding impasse. According to an aide to Senate Minority Leader Chuck Schumer, the Democrats have sent a counteroffer on limits they are demanding on immigration enforcement activities to the Republicans and the White House. The lapse in funding could last for weeks with Congress on a recess. It's now been 2.5 weeks since Savannah Guthrie's mother, Nancy, went missing from her home in Arizona. Investigators are working with Walmart executives to come up with leads. The backpack that the suspect was wearing on surveillance video from Nancy Guthrie's porch is sold exclusively at the retailer. Richard Frankel is a retired FBI agent.
There is something that would lead, the normal person to think that possibly that person who is purchasing items at a Walmart is connected to this case. And again, that's a lot of the leads that are probably coming in.
And that's retired FBI agent Richard Frankel. The Pima County Sheriff also says investigators have ruled out Nancy Guthrie's family as suspects. He says the Sheriff's Office and FBI have fielded 40 to 50,000 leads in the case. A shooting during a Rhode Island youth hockey game has left 3 people dead, including the shooter. Pawtucket Police Chief Tina Gonsalves says that 3 more victims remain hospitalized in critical condition. Authorities say they believe the shooting was a targeted attack stemming from a family dispute. There's more fallout from the Jeffrey Epstein files. Hyatt Hotels executive chairman Tom Pritzker says he's retiring from the company and will not stand for re-election to its board, saying he exercised terrible judgment in maintaining contact with Epstein and Ghislaine Maxwell after his 2008 plea deal on sex crime charges. The files, along with emails from Epstein's Yahoo account, also show the disgraced financier described himself as a Davos concierge and helped his friends and associates navigate the World Economic Forum. Those emails include conversations with WEF President Borga Brenda. Brenda says he had been completely unaware of Epstein's crimes. Thrive Capital, the venture capital firm founded by Josh Kushner, has raised more than $10 billion, its largest fund ever, giving the firm an expanded war chest to invest in areas ranging from artificial intelligence applications and infrastructure to space, robotics, and life sciences. And turning to the medal count, Norway has the most golds and the most overall medals in the Olympics with 12 and 28 respectively. The U.S. has 6 golds and 19 medals overall. Taking a look at futures this morning, they are moving lower with S&P futures down about 1/3%. Dow futures are down 0.2%. NASDAQ futures down 0.8%. Concerns about artificial intelligence weighing on sentiment. 10-year Treasury yield 4.03%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
As a place to do business, the UK stands apart, not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day.
discussion around this. It does seem unthinkable. That said, you keep pointing to the data as showing strength. You can point to the data and show anything you want. I mean, you got Andrew Hollenhorst out this morning talking about 130,000 jobs, looks great, 4.3% unemployment rate, and then he goes into all the reasons why this actually isn't as good as it looks. So you can look at the data and you can come up with very different conclusions, and that's what we're hearing from Wall Street analysts across.
You sound super excited about the debate for the year ahead.
Well, it's just, you can make an argument on either side, and I will nod along with you, and I will agree. I just don't know which is right.
Stephanie Roth of Wolf Research writes the following. Last week's data does not give the Powell-led Fed a reason to cut. We're tracking core PCE at 0.32% month over month, roughly where we expect it to remain through the first half of this year. Stephanie joins us now for more. Stephanie, good morning.
Good morning.
So the Chair Powell Fed is done. You've said that a few times. Where does it leave the Walsh Fed later this year?
I think the conversation around hikes is probably not something that's going to happen. So it's going to be a question of whether he can get cuts done. We think he probably will, but it will be a tough call, especially at the beginning. In the first couple meetings, inflation's going to be running at 3% year over year, and growth is going to be pretty good. So it's going to be very difficult for him to cut right away. Now, later in the year, we should start to see inflation cooling again, talking about inflation that's sequentially starting to look more like a 2% run rate, in which case you'll probably see them be able to actually get a couple cuts done.
So,
but
Stephanie, that's the question, I think, the important one. What's going to give them the space to move? Is it the labour market data that gives them a reason, ultimately the data's too weak, or the inflation data that gives them the space to reduce interest rates? You've got a bias on either side of the dual mandate at the moment?
I think it's going to be more inflation giving them the space, and they still want to get a couple cuts done. The labor market will probably just fine. We're talking about the unemployment rate remaining roughly where it is, and perhaps taking down a little bit in the next couple months, and then kind of remaining around 4.2, 4.3 for the bulk of the year.
Does it matter where the inflation is coming from? Let's say we do get a 3% core PCE, but it's not being driven by wage gains. We've seen that wage gains have cooled. We saw the ECI coming in lighter than expected in last week's data. I just wonder if you have Fed officials, including the likes of Mary Daly, who's going to be interviewed on Bloomberg TV by Ed later today, who's talking about structural scarring during times of technological transition. Couldn't people dismiss that type of inflation as not as sticky as if it were coming from something more like wages?
I think that's fair, although if inflation's actually running at 3%, you kind of have to ignore where it's coming from. Later this year, once you actually start to get some deceleration in parts of the parts of the inflation basket that are tied to tariffs, then that gives more of that space for the Fed to be able to cut, and also to be able to discern where the inflation is coming from. When you're actually sitting here with 3% inflation, you can't really pick apart the data.
Are you frustrated by this, that we get data and that two people will tell two completely different stories, and that you could say, yeah, 130,000 looks good, and someone will say, no, it's not, you're just totally wrong, and you've got that for pretty much every single data point that you have coming out, and then you've got someone who comes out and says, can you trust it anyway? I mean, isn't this a bit frustrating for you?
Yes, it's frustrating, but you often have that in January.
Sounds like it's more frustrating for you than it is for Stephanie.
I'm trying to
But I'm pleased she's sort of like, was that a cathartic moment for you?
Well, it's just very difficult to know even what we're talking about when people question every aspect of it, and they're just coming through the nose. Hey, carry on, please.
So when we get data like this, it's helpful to really take a step back and look at what is seasonal, what is changes to methodology. When we do all of that, then it's easier to see a clearer picture. And our sense is that the jobs number, 130,000, was overstated to some extent by birth death. So the adjustments to the model, probably about 50,000. So we'd strip out about 50,000 from the number. There's also some seasonal impact. So our sense is that labor market is running at around 75,000 a month, which is a decent place, kind of in line with where the supply is. So that should keep the unemployment rate steady. The unemployment rate has been driven by the government shutdown, by seasonal issues. So when you smooth through all of that, you can see a decent picture where the economy's fine, the labor market is not stressed, nor is it overheating. And that's a decent place. It's kind of a Goldilocks position at this point.
Do you see that confirmed by other data points elsewhere? Soft data or hard data?
Yeah, I mean, unemployment claims are a nice place to start. They haven't been rising. You don't see the jolt openings, did look kind of soft. Quits rates look kind of fine. You're not really seeing a big rise in layoffs from that perspective. I would dismiss the challenger data that a lot of people gave attention to. So when you look at the broad set of labor market indicators, then when you match that with spending, which looks fine, the labor market kind of is consistent with all of that.
Just out of interest, why would you dismiss the challenger data? What about it would you dismiss?
Well, one, they're looking at headline announcements, and For example, UPS had a similar announcement last year, and they did a lot of those layoffs through attrition. We knew that Amazon had made these announcements a number of times. They employ a large number of people, so 30,000 people here and there doesn't compare to their workforce that's over 1 million. So when you look at the layoff numbers, they're not actually that scary. January, you often have layoffs. That's a seasonal time where companies tend to do layoffs. So even if you look at on a year-over-year basis, it's kind of hard to look at it that way. But it's a period of time where January you often get big layoff announcements, and that spooks the labor market, that spooks people concerned, forecasting the economy, and then it tends to go away in future months.
This has been a very refreshing conversation. We haven't mentioned AI once. We haven't talked about, the Armageddon of the white-collar worker class and how that's going to lead to some sort of civil war. I'm just wondering, from your perspective, do you just ignore all of the discussion? Do you ignore Microsoft's warning that AI is going to eradicate white-collar work in 12 to 18 months? I mean, do you just sort of take that out of the models and say, that's noise for now, and that everything that previously worked still, to some degree, is working?
So we try to parse the labor market data into what it seems to be AI-driven versus cyclical, because that is going to help to gauge what extent is going to last into the future versus what could pick up if the economy actually improves this year, which is what we think. So our sense is the unemployment rate, about half of the rising unemployment rate came from AI, so that is sticky. And then the rest appears to be cyclically driven, which is why you could see a little bit of downward pressure this year. Do we ignore it? No, but it doesn't appear like AI adoption rates are high enough such that it will really destroy labor, at least for the next 1 to 2 years.
Stephanie, good to see you. Thanks for dropping by. Stephanie Roth there, Wolf Research, another counterpoint to the Microsoft AI chief. In the Financial Times there for you, a bit of pushback once again.
Yeah, well, and I just heard 1 to 2 years. We're safe, John.
We're safe for another 24
We're safe,
months.
although I think that you kind of are interested in your poetry career. I think I would come to your recital, very much so, in the Cotswolds. I think that it would be fantastic.
I can have a great time, yeah.
Roses are red, violets are blue.
I'm hoping for something more than
This
that.
Bloomberg chart is fantastic.
For you, something like that. Let's move on very quickly. I think we can do better than that, Bramo. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. SpaceX and xAI are competing in a secret Pentagon $100 million prize contest to produce voice-controlled autonomous drone swarming technology. Well, it's already possible to fly multiple drones at once. Developing the software to direct multiple drones, which can move autonomously in pursuit of a target, remains a challenge. Meanwhile, President Trump says U.S. officials, including Secretary of State Marco Rubio, are in discussions with Cuba's government. The president told reporters that Cuba should make a deal because its economic conditions are a, quote, humanitarian threat. Cuba lost its primary subsidized oil source after the capture of Venezuelan President Nicolás Maduro. And President Trump warning the federal government won't cover any cost overruns on a $16 billion Hudson River rail tunnel project. The project, known as Gateway, would add train capacity between New Jersey and Manhattan by building a new tunnel and upgrading the existing North River Tunnel. The president's offering meetings to ensure the project does not go over budget. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, Chris Lamamani of Lafayette College joins us, breaking down the shift in market leadership. With equity futures near session lows, the S&P down by 0.4% and the Nasdaq 100 down by 0.8%. From New York City, you're watching Bloomberg Surveillance.
in case you missed it on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
There's a number of people who anticipate growth. We anticipate it for longer than the market's anticipating. And that's because we haven't seen the flow through of retail spending from the tax refunds. Lower and middle income classes have a higher propensity to spend a higher amount of those tax receipts. So we do expect to see some growth surprises.
That was Earl Davis of BMO. He is bullish on the outlook and he does not think the 10-year bond yields remain around 4%. That is exactly where they are because of this. Equity futures pulling back on the S&P, negative by a few tenths of 1%. Likewise on the Nasdaq, down by 0.8, driving risk aversion and putting a bid into bonds. 10-year bond yields right now lower by around about a basis point to 4.0368%. Earlier on this morning, 4.01, very close to breaking into the threes. Going into this week, here's the trading diary for you. This is how things are set up. This is the schedule. Later on today, Fed speak from Barr and Daly. Tomorrow, the latest Fed minutes. Thursday, Walmart earnings and another round of jobless claims. Plus on Friday, core PCE and UMich sentiment and I stress a possible Supreme Court decision on the president's tariffs, because we've been waiting for that one and the dates have come and gone a few times.
We once built it up all day. This is going to be it, guys, and then it didn't come out. So we're not that excited. We've been fooled, fool me once, shame on you, fool me twice, shame on me. We're kind of there.
You almost butchered that one, didn't you? Came close. I always get that one confused too.
I didn't, though.
Something
Come on, give me credit.
I don't know if you did or not now. I need to.
No, rewind it. I actually got it right.
You nailed that. Okay, good. I trust you.
Yeah, thank you.
Yes, nailed it. Good. Yes. I trust you. All right.
Thanks.
Let's turn back to our top story on Wall Street. Not that. Nasdaq futures weighing on stocks as AI fears pick back up where they left off. Krishna Mamani of Lafayette College writing stocks are going through their turmoil more due to sector rotation, due to valuations and run-ups than anything fundamentally different. Krishna joins us now for more. Krishna, good morning.
Morning.
Is software dead?
Well, software is not dead. I think if you you really have to define what dead means in that context. Has software come down a lot? Absolutely. Software going away as a service? Absolutely not. So the valuations and the multiples were too high, and because the terminal value is being questioned, it is appropriate to kind of take them down. And it's not that the business itself is going away or revenue is going to be zero tomorrow. It's just that the valuations that people are willing to pay are just not as fancy.
This is no longer a high multiple sector.
Exactly.
Is there a sector now that does take on that higher multiple because of the disruption we're discussing?
Well, so I think it is really going to be more about the sectors of the economy, like banking, for example, where you have substantial tailwinds, deregulation, capital relief, and things like that, where you don't have headwinds like software has from AI and all the other market narratives. So I think more fundamentally driven businesses where multiples are low probably get to a higher level, and that sort of helps the index investor.
What is this? Is this what a soft landing feels like?
Well, that's exactly the point. I mean, we have been waiting for this soft landing for 3 years, and it is arriving, and we can't just take it. If you look at inflation has been going down, it's stabilizing. Probably not. It will probably continue to go down, albeit slowly. Growth is decent. The tariff picture is it was last year's thing. It's kind of getting rolled back slowly but surely. I think things from an economic standpoint are probably as good as they have been in a long time. Along all the attributes, and we just don't like it.
If this is a soft landing, then isn't there a discrepancy between assets that are priced for reacceleration and a reality, which is something that looks very different?
Well, so I don't think assets are priced for significant reacceleration. I think because if you look at cyclicals, they aren't as kind of high multiple as they should be if we were really looking for 4 or 5% type growth. So I think those are the stabilization of the economy probably helps those types of assets. It's not that we are going into a recession that we have been awaiting for 3 years, or inflation is going to spike up that we have been talking about for a long time.
Every time we get a sell-off, we worry about how that translates into the economy. How are you thinking about that? The wealth channel, the contagion you could see from the move in financial markets through risk assets and into the real economy?
So, if you, let's kind of break it down. Deficit, is it 2% or is it 5%? And how does that impact the economy? You look at where S&P is today. Is it at 4,000 or 6,000? How does that impact the economy? You look at what the inflation picture is looking like, and is the Fed going to tighten or potentially ease? Maybe not today, maybe in some future. So I think if you put all of that together, there's really no significant headwind to the economy. And, employment is good, claims are not rising, growth overall is decent with a good handle, nominal growth is pretty good. So, there's really no significant issue.
Does that keep the Federal Reserve a boring story for 2026?
Exactly. I think the Fed, we talk about the Fed as if Fed can divine the economy and kind of drive it. That's just not the case. I think Fed on a go-forward basis is probably in more of a reactive mode rather than a proactive mode, as they had been when they raised rates significantly and then cut rates significantly in anticipation of a particular outcome.
If that's the case, are you casting some shade on the rally that we're seeing right now in bonds that we have been seeing over the past couple of weeks?
Yes, I am. So the point of this would be we have been in a 4 to 4.5% trading range. And if we get close to 4%, I think thinking that it is going to 3.5%, I don't think the data would kind of get you there. And similarly, when it gets to 4.5%, thinking that it'll go to 5%, data probably doesn't get you there either. So it's a trading range, and trade the range.
So given the fact that you're chief investment fund officer for a fund for a college, you have to think longer term, and you have to think about the offsets and what the havens really look like. We've talked with people about how one haven is diversifying outside of the U.S. In years past, people would talk about private credit as sort of a ballast. How are you thinking about the offset of private credit, given the fact that some of the disruption really is happening there?
Well, so we are not an investor in private credit. We are an investor in private equity for sure. And I think, but that is part of our overall equity allocation, which is a very diversified global pool of assets, across the world. So I think what kind of the price action over the last, say, 6 months, when, if you look at international equities, what happened in Korea and things like that, I think diversification is a good thing. Whether that continues to be the trend for the next 2, 3, 5 years, because I'm not so sure, because, performance of something like Korea is really driven by an AI trade, which is really a U.S. theme rather than a Korean theme.
30% move in a cost fee. I keep going back over that. Year to date, which is just unreal. We've known you a long time. I've known you quite a while. You've got a good BS radar. I know that from private conversations as well. Can you help us understand and help the audience understand as you navigate this mass disruption? What is BS and what is real? When you see these headlines about what could and couldn't happen to software names, to the white-collar workforce, what's real?
Well, so I would say Dario and other folks have learned a lot from Elon Musk in terms of kind of dazzling their audience. If they were them, you would expect them to say that because they are spending trillions of dollars. And so in their mind, and therefore they expect in everyone else's mind for it to be justified. I think the reality is probably, the uptake is slow and it happens over a decade or two rather than 12 or 18 months, half of the workforce being on the dock. I think that's just not in the context of anything that I see out there.
There's a lot of people watching right now nodding and saying, yes, Krishna, we hope you're right. Krishna Mamani of Lafayette College. Krishna, thank you. Of course, there's a lot of tech people who are sitting there banging the table saying, no, Krishna, you are wrong.
Yeah.
And they've got a big valuation to justify at the same time.
Yeah, well, that's the issue. Is it a marketing ploy or is it real? Is it something that actually will cause white-collar work to get decimated in 12 to 18 months? I mean, look, this is the argument around why office space is suddenly decimated in valuation, because people think, oh, the end of the worker. Then you start to wonder, well, what's the flip side of that, the political side? Look, it's clearly somewhere in the middle. And people right now are struggling to figure it out. And it is a messy moment in markets.
Arguing to work from home at the moment is probably an uncomfortable situation to be in, though. Given this backdrop, right?
I think it's an it's a situation that's happening less and less.
You think Jamie Dimon thinks he's got a bit more leverage now over at JP Morgan
I don't
to make
think
all
he
that
thinks
happen?
it. I think
he knows it, without a doubt. Coming up tomorrow, Keith Lerner of Truist, Jim Zelter of Apollo, Alicia Levine of BNY, Nancy Lazar of Piper Sandler from New York City. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
The long weekend is over, starting this week how we ended last week with declines. 30 minutes ago into the start of cash equity trading, I'm Danny Berger. Matt Miller is off this week. Bloomberg Open Interest starts right now. Coming up on the show this morning, Warner Brothers reopens talks with Paramount, a move that could set the stage for another bidding war with Netflix. Activist Action, Starboard targets TripAdvisor, Elliott builds a major stake in Norwegian, and Jonna pushes for change at Fiserv. Plus, Anthropic and Pentagon hit a snag in contract talks over mass surveillance and security concerns. All right, some of the stocks we have our eye on in the pre-market trade. It's the deal that won't go away. It's Warner Brothers and Netflix, and now Paramount is back in it. Warner Brothers reopening negotiations with Paramount Skydance. Remember, Netflix already struck a deal with Warner Brothers, but Paramount has vowed to pay the $2.8 billion breakup fee. They now have 7 days to give their best and final offer. Let's discuss it with Bloomberg Tech co-host Ed Ludlow. Ed, here we go again. Another bidding war, I guess, we have on our hands.
Yeah, at least there's a sort of chronology to this, which is, you're right, it's a 7-day waiver through February 23rd. The waiver comes from Netflix to Warner Brothers Discovery so that they can review any updated Paramount bid. Our understanding is that one of the Paramount bankers went to Warner Brothers Discovery's board and said that Paramount would be willing to go up at a minimum to $31 a share, an increase of $1. Remember, they want to buy the entire thing, and we can get into the other specifics. But they have 7 days to do something, and like the indication from the reporting is that, Paramount has not yet made its final offer, and you're absolutely right in the outcome. So let's say Warner Brothers Discovery says, okay, yeah, that's a much better offer, and they decide to terminate talks with Netflix, then Netflix gets the fee. But at least the clock is on.
The clock is on, Ed, but is $31 enough to move the needle? As you just mentioned, that might not be their best and final. What is it going to take for Paramount to actually be the attractive bidder for Warner Brothers?
Part of this is that the 7-day waiver also gives Warner Brothers Discovery and Paramount time to talk about the issues that the boards had with the Paramount bid, which were wide-ranging. The valuation, right, remember, Paramount proposes to buy all of Warner Brothers Discovery, including legacy network and cable, whereas Netflix would only buy the studios and the streaming business, spinning off the legacy networks into a standalone company. And that dollar, basically, Paramount had, to the market's mind, undervalued the legacy networks and given them an essential valuation of like near zero, which people either agree or disagree with. So that will be a part of it, along with, there is still in the background the specter of antitrust on both. But, Netflix, again, this morning issuing its own statement saying that, they feel very confident in their existing bid.
I was going to say, Ed, it feels like we've gotten caught up with the bidding war and kind of forgotten about what regulators are going to do here. The president himself had expressed skepticism on Netflix and specifically zeroing in on CNN. Does either side seem like it has a better chance of getting through regulators, of allowing this to pass antitrust hurdles?
Again, where we've got with it is a Capitol Hill hearing, which does not amount to regulatory review, right? It's an opportunity for lawmakers to pass view. And in that case, both potential combinations are under the microscope. The only other thing is to say, well, how has industry viewed this? And if you go back to Disney's earnings, Disney's CFO, also weighing in, well, Warner Brothers Discovery and Netflix would be very large. That's few words, but the insinuation being that, that would need as much review for just the studios and streaming X the legacy networks as the whole enchilada would if it were Paramount. We just don't know. It's codified, right? There is a precedent and rules-based approach to antitrust in this country, and that's, until the deals proceed, we don't know.
Ed, thank you very much for your reporting on this. Bloomberg Tech co-host Ed Ludlow, who will be covering more of this at 11 a.m. on the Bloomberg Tech Show. Elsewhere, activist investor Elliott has built a stake of more than 10% in Norwegian Cruise Lines, with plans to turn around the struggling cruise ship operator, releasing a letter on that just moments ago. Bloomberg's Crystal C joins me to discuss more. Crystal, what do we know about the stake that Elliott's taking?
Elliott is here pushing for a board overhaul. Norwegian Cruise Line is a really interesting company because it's one of those companies that were hit really, really hard during COVID. And then when you remember the whole revenge traveling, they really did come back. And it's something probably that had been looked at in the 2019 era where there were a lot of problems with cruise line, the way that people travel were different, but then COVID kind of stalled some of these activities. And now you're finally seeing activists are coming back saying that this can be improved. There could be monetization, there could be value creation, and most importantly, board overhaul at Norwegian Cruise Line.
There's a lot of activism news this morning. Some of it varies between reports and confirmed, but from Starboard, from JANA Partners, looking at TripAdvisor and Fiserv respectively. Crystal, is something in the water at the moment, or is it just because we're starting to approach the start of proxy season that we're seeing more of these reports crop up?
I think it's a little bit of both. Definitely the seasonality here makes sense. Like you said, the proxy season is about to start. A lot of companies that have kind of April, May, June voting season or annual shareholder meeting calendar are going to have a nomination, board director nomination opening in the coming weeks or even like now. So you see the activists take aims now just so they could sharpen the tools and see if when the time comes, if they think it's necessary to nominate directors. And more importantly, that's just been, sell off kind of everywhere. TripAdvisor is one of those, names that have been looked at in the past. Fiserv is kind of a hedge fund hotel. So you do see a lot of these kind of between like market value and seasonality of corporate calendar. This is probably a really good time for activists to come out and attack.
How much of this do you also think is about the return of M&A and private equity being more active? Because I'm looking at Starboard, for example, what they're doing. They're pushing TripAdvisor for an outright sale. Is part of this because activists maybe can have an easier time of finding buyers for some of these assets?
Yeah, actually, that's a really great point. And I want to point out two other deals today that also got announced. Massimo Danaher that got announced. Massimo also had been a target for activists. Politan Capital had been there for a long time. And then you saw that Genuine Parts announce a split today, which we reported, and Elliott had been in that company and involved for a long time. So you do see activism, leading to M&A has always been a bit of a thesis. And like you said, with the return of capital, kind of the availability of capital with private equity player coming back, you definitely will see activists pushing more aggressively for M&A thesis versus the operational changes or leadership management changes in the past year or so.
Crystal, thank you so much for bringing us this reporting. That's Bloomberg's Crystal C. And tune in, by the way, to Bloomberg Deals. The show airs tomorrow at noon on Wall Street. It airs every Wednesday at noon. So a show you don't want to miss. We might just talk about all the deals that Crystal was mentioning. We're also closely following the meteoric rise of CEO pay on Wall Street. CEOs at top banks were paid at least $40 million last year. Their total pay surpassing records set both in 2006 and 2021. Bloomberg's Catherine Doherty reported on this and joins me now for more. The 2006 compensation analogy, I think, is an interesting one because the banking environment was so different then, and you could have banks being more aggressive. What does it mean now to have pay that rivals those levels, if not surpassing it?
Yeah, I mean, 2025 was a banner year for the banking industry. So that's why you're seeing these CEOs compensated in the way that these levels, they're surpassing records that were set in 2006 and 2021. So we're really at this new era for at least the banking industry and across finance, really. You have both record market revenue that's coming into these big banks. The trading desks, both in fixed income and equities, have benefited from the volatility. You've seen a resurgence in M&A. So the CEOs, and of course there's other businesses beyond just the core Wall Street operations. There's the consumer businesses and there's wealth management. There's so many other aspects that a lot of these CEOs, when we're talking about the big 6 U.S. banks, it's not just the trading and investment banking that is increasing their profit share, but it doesn't hurt.
Does it even just boom from here, considering there is some expectation that this is a White House that's more friendly to the banks and more friendly to regulation, that they'll allow for an even widening out of profits from the banks?
I do think that 2026 has been a pretty positive year thus far, with a lot of question marks about what's ahead. So there's still some uncertainty with regards to how tariffs are going to play through of some of the smaller businesses, and that could end up hurting the consumer. You hear the CEOs, they're saying that right now the consumer is healthy, but in the future, they're still looking out for signs that stress might start to show up, whether it's pulling back on spending. You might see that discretionary spending starts to change. These are all signs that we haven't really seen in terms of showing cracks that need to be thought about or worried about at the moment. But this is really too early to tell whether or not a year from now we're going to be having the same conversation, saying, are the CEOs receiving an even a bigger compensation in the form of not just their base salary, but it's their bonus at the end of the day that is shaping up to be quite large.
Yeah, it would be super awkward if they got paid this much and then everything cracks. That would be unfortunate. Catherine, thank you so much for joining us. Catherine Doherty on the latest on banking. Let's get a check on your future market this morning. About 20 minutes to go until the start of trading. We are down about 0.25% for the S&P. The NASDAQ underperforms after 3 consecutive weeks of losses, down 0.6%. Russell 2000 underperformance not as bad as the equal weighted index is just inches away from a new record. There has been somewhat of a broadening out. Staples, utilities, all of those safety type sectors have been doing extremely well, just giving you a sense of where sentiment is in this market right now. As for some of your other movers in the pre-market, healthcare manufacturer Danaher will buy medical technology company Masimo in a $10 billion deal. Crystal was just talking about this. Also, activists involved in Masimo pushing them to a sale. ServiceNow CEO has canceled plans to sell shares of the firm. Instead, Bill McDermott announced that he will buy $3 million shares of ServiceNow, which has gotten beaten up in the AI software sell-off. Shares are up nearly 5% this morning. And Anthropic partnering with Infosys to bring AI products tailored to specific sectors, including telecom and financial services. Those shares up 3.5%. Coming up, we're going to talk more about Anthropic, specifically their clash with the Pentagon over how its AI can be used. We're going to explore what it means, the future of AI in the military. Not the most comforting topic, I suppose, but stay with us for that after this commercial break.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Bringing
up-to-the-minute global news whenever and wherever it happens. I'm Anne-Marie Hodern in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Let's get to high interest, a look at what's making headlines around the world. Iran said its diplomats are prepared to stay in Geneva for days or weeks to finalize a nuclear deal with the U.S. According to Iran's state-run Press TV, negotiations are expected to continue in the near future after the two sides return to their capitals for consultation. Meanwhile, the Islamic Revolutionary Guard Corps has resumed Navy drills, which would partially close the Strait of Hormuz. Oil prices, little change over the past 2 days. Meanwhile, Josh Kushner's Thrive Capital just raised $10 billion. That's its biggest fund ever. It also doubles its last raise. The heavily oversubscribed Thrive X will double down on artificial intelligence, space, robotics, and life sciences. Thrive's high conviction bets on OpenAI, SpaceX, and Stripe have paid off big, and the firm says the AI boom is just getting started. Speaking of the AI boom, Anthropic is arguing with the Pentagon over how its AI can be used. The AI company wants rules that would stop its chatbot, Claude, from spying on Americans or developing weapons that can be deployed without a human involved. The Pentagon says it should be allowed to use AI as long as it doesn't break the law. The fight could shape the future of military AI deals. Let's dig deeper into this story. We're joined now by Mandeep Singh. He's the global head of technology research at Bloomberg Intelligence. Nothing to make you feel like end of times doomsday, like an AI military story. Just how involved, because I know already you have some military suppliers like Palantir doing stuff like this. What is the crossover, the relationship right now between AI and the U.S. military as it stands?
Yeah, I mean, look, Palantir was using a lot of data and they were visualizing it using the GPS coordinates. LLMs give you another dimension to that intelligence layer where you can basically query trillions of data points to find that needle in the haystack. And in this case, you could apply that to surveillance. You can apply that to use cases that go beyond, just security in terms of the level of details it can go into. And look, things like that are already happening in China. When you look at, how they are building their drone technology, how they are doing their surveillance, a lot of these are being implemented over there. So I think that's where the government wants to really leverage the LLM companies, because the likes of Palantir, yes, they gave you some benefit in terms of the use of data. LLMs give you the ability to interpret that data in a totally different way.
There was, I believe it was a journal story also talking about how the administration is trying to push into robotics to keep up with China. Are we going to get in this place where, yes, everybody wants guardrails, but it's a government that kind of says, forget your guardrails. We need this because of national security interests, that we have to keep up with China, because even if we put guardrails in place, China's not going to.
Yeah, and look, we've always had backdoors with software companies, when it comes to government specifically and national security interests. So in this case, the fact that obviously in a geopolitical context, this is huge. And LLMs are trained on data. So we have already used all the data that's available on open internet. The drones or the robots allow you to capture new types of data. Obviously, you have to look at the end goal in terms of what you're trying to accomplish around surveillance. But there's no doubt that technology can be used where you capture the data using drones, and then you mine it using LLM technology.
Well, okay, something like a Palantir, I mean, we're not going to be interacting as everyday consumers with Palantir every day. Anthropic is a different story, though, because they want everyday people to be using Claude. So does Anthropic need to approach this differently for fear of backlash against an American populace or a global populace if there are concerns about what they're doing with the military?
Yeah, you're right. Anything that's consumer-facing, I mean, whether it's, Claude or OpenAI or Gemini, you're learning a lot more about individuals when you have a consumer-facing technology. Same thing with enterprise, but you're doing it at a completely different scale when it comes to consumer-facing products. And so from that perspective, you've got a lot more data when it comes to consumer usage and how they're using and their personal information if there is an AI agent attached to it. So there's certainly that aspect.
I guess what's the bigger risk? That sort of backlash or losing a government contract? Because presumably these things are very valuable for the companies too.
They are, but then Anthropic has talked about their AI constitution and guardrails from day one. That's been their big differentiator. So they probably will do it, but they will do it, in accordance with the guardrails that they have.
But can you also say, okay, who cares if Anthropic has guardrails? If OpenAI is not going to, are they just going to miss out and we'll still get the AI dystopia regardless? Yeah, look, all these models have their sort of capabilities where they're really good at something. Obviously, Anthropic models have proven to be good at, coding agent and that sort of functionality. So that's where, just because Anthropic is not doing it doesn't mean OpenAI or Grok would be able to fill in that gap, because these models have their layer of intelligence where they really differentiate themselves. What did you make of the news of Anthropic partnering with Infosys and starting to build more of those applications for different industries?
I mean, these companies have to look for distribution, and IT services is a big industry. So you can't have an army of people deploy your LLM. Even if you have the best LLM, it has to interface with existing software. So that's where a company like Infosys or any of the IT services companies, Accenture,
et cetera. Also argue that this doesn't necessarily take away from jobs, because when you have these integrations, you need people over the top doing the things and giving it the right prompts and all of that. Doesn't this, in some ways, maybe, I don't know, create more jobs? I'm trying to look for something optimistic after talking about AI and military use.
I think there is a bridge that they have to cross when it comes to automation, where you really need the software to interface with the existing paradigm and the way things are done in the world right now. And that will require a lot of people who have an understanding of business processes. So I think they're doing the right thing by partnering with services companies.
Mandeep, thank you so much for joining this morning. Always a pleasure. That's Mandeep Singh of Bloomberg Intelligence. Coming up on the show, Investco's Brian Levitt sees the rotation from AI stocks as a healthy foundation for broader market gains. He's going to be joining the show next. Stay with us on Bloomberg Open Interest.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask
interesting questions.
Bloomberg Television. Top experts, great questions.
The uncertainty in AI suggests that entire trade is going to remain challenging. And meanwhile, I think investors will continue to go basically from the virtual theme to the physical theme. They're getting confused with all the digital technology, and they're going back to the old-fashioned analog world, the physical world.
Ed Yardeni speaking on surveillance. Let's add to that conversation. Joining me now is Invesco Chief Global Market Strategist Brian Levitt. Brian, great to see you this morning.
Nice to see you too.
What a ride it's been over the past 2 weeks. I think easily over $1 trillion in equity market cap has been erased because of the AI concerns. It's hit basically every single industry. How are you viewing it right now? Are you finding winners, or is this a market you want to stand on the sidelines until we get any sort of clarity?
Yeah, and yet the market is a stone's throw away from its all-time high.
Yeah, that's a weird part of this too.
It is a weird part of it. So it's really all been this idea of rebalancing portfolios. And we knew that investors had gotten heavily concentrated to the big tech sector, and parts of it were overvalued. And so what you want to do is build a better value portfolio. The challenge has been for a while is where's the pickup in economic activity? Where's the policy support? So the good news is this is all coinciding with fiscal stimulus in a lot of parts of the world. Potentially more monetary policy easing in the United States. So what it's doing is it's shifting markets over to things that you would view as more cyclical, even semiconductors remaining a part of that.
Well, one analogy I've heard a lot, though, that maybe sprinkles some cold water on that is a repeat of 2000s, not necessarily in the tech bubble, but when you have the market leadership disappear, sometimes you can have other things come and take its place. And we saw that for about 6 months around the bubble burst of the dot-com bubble. And then gravity hits and everything falls if you don't have that pillar. Is it a problem if you have a rotation at the same time tech is falling? Do you need that to play along in order to not see a wider sell-off?
It's a great analogy. The challenge is 2000, you had much higher valuations. You had stocks that had really deviated meaningfully from their fundamentals. So that's a bubble. I don't think what we're dealing with here is a bubble. And one of the things I think investors could look at is you've seen pretty big moves in parts of the tech space, some of the AI trade. The world hasn't collapsed. Yep. Household net worth is still near an all-time high. This isn't a bubble. You have some companies, and, I don't want to always,
Brian, just hold that thought because we've got to go to commercial break. We'll continue this conversation. Brian Levitt's going to stay with us after the opening bell.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Just seconds away until the start of cash equity trading. I'm Danny Berger. Matt Miller is in Disney World hanging out with Mickey Mouse somewhere. Here's how we stand in this market. We had a decline last week, the worst decline of the year. We're headed for another one, at least so far today, down 0.25% for the S&P. NASDAQ, that underperforms 3 weeks of declines for the NASDAQ, the most since late last year. And the Russell 2000, not as bad, still down about 0.25%. The bell ringers, we got USA Today. That's wonderful. Down at the New York Stock Exchange, they are ringing the bell. But the most important thing is this little guy or gal here, this dog. I mean, that's the star of the show. 21 shares, a crypto company. I believe their ticker is T-Dog. So why not have the Doge mascot brought with you? Like, what a well-behaved dog. I want to interview them just so we can talk to that dog and look at all of its glory. Anyway, some of the stocks that we were watching this morning. We're watching the latest drama between Warner Brothers Discovery, Paramount, and Netflix. Warner Brothers has reopened negotiations with Paramount Skydance. Netflix already struck a deal with Warner, but Paramount has vowed to pay the $2.8 billion breakup fee. Netflix says that Warner Brothers should keep in mind that the risk that comes with Paramount's $84 billion of debt. So that's the latest there. Let's get back to these overall markets. Let's get back over to the desk where Invesco Chief Global Market Strategist Brian Levitt is still with us. So, Brian, we were talking about this idea of like where valuations stand and how maybe it's not necessarily an AI bubble. So valuations, are you comfortable with them, of where they stand for the big tech players that you can continue to add? Especially after this most recent sell-off?
I would be very selective in it, but there's certain companies that are going to grow at a pretty significant clip or generating free cash flow and are now trading at much more reasonable valuations than they were even a handful of weeks ago. What I also like is this ability to rotate into other parts of the market where valuations are not as excessive, into places like mid-caps, into non-U.S., You need a catalyst for those things, and for 15 years we didn't have much of a catalyst, short of maybe a 2001 or 2021, I should say. But what we have now is improving economic activity, fiscal stimulus, and a weaker dollar for most days.
If we are going to see outperformance led by the stimulus coming in, why is it then that things like utilities and staples have done so well? Because that just feels extremely defensive positioning from this market.
Yeah, there's some cross currents going on here. You also see treasuries rallying pretty significantly. So there are mixed signals. Gold up, treasuries rallying, but at the same time, equal weight, S&P 500 near an all-time high. So, and you've got energy up significantly, industrials up significantly, semiconductors. So there's cross currents. It's one of these moments as an investor, you have to look through all of this and say, what are the signals that I believe in most? My opinion, I've got credit spreads still tight, tells me the cycle's likely to continue. I've got leading indicators picking up. It was only a couple of weeks ago we got the ISM Purchasing Manager Index at 52. That's expansionary territory. New orders within that survey rocketed higher, and prices paid was relatively flat. To me, that's a conducive backdrop for risk taking.
The whole narrative, though, that like AI is going to disrupt everything and it's going to take jobs and it's going to replace things, it feels like it's been a very Wall Street narrative. What is the risk that it becomes a Main Street narrative, that some of the economic boom or at least uptick that we're expecting has a ceiling on it from people who are scared they're going to lose their jobs and start saving more and stop spending as much as
you're seeing it in surveys? I mean, some of the surveys on employment are about as bad as they get. They're like near recession levels. And yet, if you go out on the weekends, everything is packed, right? You can't get into shows. You can't get into restaurants.
Yeah, but maybe that's a New York thing, Brian.
No, yeah, I travel this country.
Okay.
So I try to make it very clear that that's not just a New York thing. I see
You're not
it
in the bubble.
I hope I'm not in the bubble. I mean, the reality is household net worth's near an all-time high, so people are feeling good. The unemployment rate is still historically low unless you're ages 15 through 24. So my thought on this is that you want to be a shareholder because corporate profitability to the number of employees just keeps climbing. I also think we're probably overstating, at least over the next year, what AI is going to mean on employment.
That I think is so important because how are we even going to know how this thing shakes out a year from now, 5 years from now? I mean, we're talking about such big concepts. Can you actually have conviction in any of the AI disruption at this point? Whether it be on one side that the companies are spending too much or the other side things are going to get disrupted, how easy or difficult is it to have really strong opinions about that?
Well, there's some challenge around the timing of the investment versus when revenue appears for a lot of the providers of it. So I think that's a challenge. What we do know is that the investment is going to continue. You see it in the Amazon report. You see it in the Alphabet report. So, Yardeni coming into this segment talking about the physical of it. We know the demand for chips is going to be there, for memory is going to be there, for the build out of the data centers is going to be there, the support of the industrial businesses. So that's all part of this rebalancing. It was my idea around, or what I was saying earlier, that you want to be able to rebalance, but you need growth somewhere for there to be a catalyst for what had been better value in the market. And that's a likely better way to play it. The other thing is, who are the businesses that are going to benefit from all of it?
How are you viewing that, by the way? Which businesses benefit from this?
I think there's going to be a significant number of business. I think companies across the S&P 500 are going to benefit from it. One of the great examples that I was thinking about recently is just think about glass, which is an old economy type of business.
Right.
If you're going to put AI in everything, think about the amount of glass you're going to need, right? To robots. New phones, car, right? So these are the types of things that I don't think investors are thinking about. I also look at it, hopefully it's not coming from my job yet. I also look at how much more productive we can be. That MIT study said it does 12% it could take 12% of the workforce. No, that's not what it said. It said it does 12% of your job. And so, yeah, it probably does do 12% of my job. What does that free me up to do? What opportunities does that give me to see more clients, to help solve some of the challenges that they're facing? To me, that's really exciting.
But are there companies out there who are kind of like chasing the shiny future of AI and it's a distraction? And maybe they're letting go employees prematurely, or they're investing money in AI where maybe it should be invested in other things. Maybe the old software is where they should be investing. Is there an issue where they get too distracted and maybe it's a shareholder base that's forcing them to do this when the core of the company, perhaps it would be better spent concentrating on other things?
You're not seeing it significantly in the data. So if you look at jobless claims on a weekly basis, the number of people filing for unemployment still remains relatively low. So you're not seeing hiring to the extent that you would want to see it, which is probably why you get Fed rate cuts. But you're also not seeing jobless claims pick up significantly. So businesses are kind of caught. A lot of the investment being done by cash flow generative businesses, right? The big mega cap growth names. And for years, we've been wondering where that investment goes. Now, as an investor, you need to look at the so-called hyperscalers and say these were companies that had near monopolistic characteristics and were not making big investment. Now they are, and they're all competing in the same space. So you may want to debate more than you had in the past, the Mag 7, the so-called monolith that all goes up and down together, which of course it doesn't. That's all part of the rebalancing, thinking about businesses that are going to utilize this rather than those that are making substantial investment.
So it sounds like maybe a healthy rebalance that's happening, a healthy rethink we're having on this market.
I like the S&P 500 equal weight near an all-time high, right? To me, that's better than 2024. There's an irony in it in 2024 when only 7 stocks won. People didn't like that either. So now you're having broader market participation, different sectors, non-U.S. commodities. To me, that feels healthier.
And I believe there's some nice Invesco funds where you can play those trends too. So,
what a coincidence!
What a coincidence, Brian. Thank you so much for joining this morning. Great to see you. That's Invesco Chief Global Market Strategist Brian Levitt. Let's get a check on your equity market right now. About 9 minutes into your trading day, we're just barely hanging on to gains. So a nice little turnaround from the pre-market session where it was losses after last week's losses. Financial companies having a very, very strong day. So Apple is at the top. I should start out with that, up 1.3%. Those shares have been beat up as of late. JP Morgan, Berkshire Hathaway, Citigroup, Visa, Wells Fargo, Bank of America, Goldman Sachs. So yeah, you get the flavor. It's a good day if you are invested in one of the Invesco ETFs on financials and banks. Meanwhile, to the downside, Alphabet, Tesla, Microsoft, Alphabet, NVIDIA, I said Alphabet twice. Forgive me, it's listed twice, the two class shares. So some of the big tech is not doing well today. Caterpillar, the old economy company, that's down 1.7%. If you look at the indexes, as expected, it's going to be financials at the top, up 0.8%. Utilities have been on an absolute tear. That sector has done so well, trading around new highs, as is staples, which is just barely hanging on to gains. It is materials, which is underperforming alongside energy after the volatility in oil markets over concern about those talks in Geneva happening with Iran. Coming up, Paramount is back in play for its Warner Brothers bid. We're going to discuss of what that means next. Stay with us. This is Bloomberg.
गाइस नेचुरल गैस में पूरा प्रॉफिट बुक कर लेना बुक द फुल प्रॉफिट इन नेचुरल गैस एंड एग्जिट कर सकते हैं यहाँ से अब ठीक है अभी कोई फ्रेश ट्रेड नहीं है बाइंग के थोड़ा सा वेट करेंगे यूएस मार्केट ओपन हुआ है एक्सपेक्टेड है थोड़ी लिक्विडिटी मिलनी चाहिए अब इफेक्ट फॉल ऑलमोस्ट 5% एक्सपेक्टेड आई होप अच्छा प्रॉफिट बुक कर लिया होगा दोबारा मत सेल करना अभी ऊपर लेवल पे ठीक है नीचे देखते हैं बाइंग का अगर ट्रेड बनता है थोड़ा सा प्राइस और फॉल होना चाहिए तभी बाइंग करेंगे अदरवाइज नहीं ऑलरेडी एक बार बाइंग हो गई है तो ये सेकंड टाइम का लेवल रहेगा नाउ इन नेचुरल गैस क्रूड को भी देखोगे सुपर वॉलेटाइल मॉर्निंग पे ओपन हुआ सेलिंग देन बाइंग अगेन सेलिंग एक्सपायरी स्पेशल है वॉलेटाइल कंप्लीटली Iran foreign minister says progress made in nuclear talk with the US in Geneva. Iran and the United States reached an understanding on the main guiding principle in a second round of nuclear talk in Geneva, but work still need to be done, Iranian Foreign Minister Abbas Araghchi says. ओके इस स्टेटमेंट की वजह से थोड़ा बहुत सेल ऑफ देखने के लिए मिला है नेचुरल क्रूड ऑयल में. देखोगे ऑलमोस्ट 2.5% फॉल कर चुका है इंट्राडे में फॉरेक्स में. सिल्वर भी 3.5%. ठीक है, मेजरली थोड़ा बहुत सेल ऑफ आ रहा है बिकॉज ऑफ पॉजिटिव न्यूज़ जियोपॉलिटिकल फ्रंट पे. पहला अभी जो स्टेटमेंट आया है ईरान के फॉरेन मिनिस्टर का, ईरान और यूएस के बीच में जो बातचीत हुई है. सेकंड आज यूएस और यूक्रेन एंड रसिया के बीच में भी बातचीत होने वाली है. तो ऑल दीज आर द सिनेरियोज जिसकी वजह से थोड़ा सा गोल्ड इंट्राडे में वापस बेरिस होता हुआ लग रहा है. 2.41%. सिल्वर थोड़ा सा ज़्यादा फॉल कर गया 3.5%. $75 के नीचे आ गया ब्रेकडाउन का लेवल. क्रूड में अभी कोई ट्रेड नहीं है. ठीक है, अभी आया नहीं है लेवल पे, वो थोड़ा वेट करेंगे. कॉपर 4% डाउन. फॉरेक्स एमसीएक्स कॉपर 4% डाउन. $97 के ऊपर चला गया. ठीक है, यूएस डॉलर इंडेक्स भी $97 के ऊपर चला गया फिर से. लेट्स होप ये सस्टेन करता है नहीं करता है. जा तो रहा है $97 के ऊपर, सस्टेन नहीं हो रहा है, काफ़ी टाइम हो गया. करीब पहुंच गया ब्रेकडाउन के सिल्वर. 4 आवर टाइम फ्रेम पे देखोगे, मॉर्निंग से मैं जब बता रहा हूँ ये लेवल पे मल्टीपल टाइम टेस्ट हो गया है. अभी भी ब्रेकडाउन हुआ नहीं प्रॉपरली. ब्रेकडाउन इन द सेंस अब ये नहीं कि एक कैंडल, प्रॉपर ब्रेकडाउन चाहिए. 4 आवर में होता है तो मुझे लग रहा है फॉल आना चाहिए. फर्स्ट टाइम बाइंग आई थी मार्केट ने, काफ़ी अच्छा मोमेंटम दिया था. सेकंड टाइम बाइंग भी ठीक ठाक ही थी यहाँ पे. थर्ड टाइम एक फेक ब्रेकडाउन करने की कोशिश करी. यहाँ पर देख पा रहे हो एक कैंडल नीचे क्लोज भी हुई, पर उसके नीचे एक और ब्रेकडाउन कैंडल बनी नहीं, वापस रिवर्स कर गया. तो फर्स्ट टाइम, ये सेकंड, ये थर्ड, ये फोर्थ टाइम बाइंग आई थी, ये फिफ्थ टाइम है. तो ज़्यादा नहीं, अगर ये कैंडल 4 आवर की क्लोज करता है एक के नीचे एक तो बेटर रहेगा. ब्रेकडाउन मेरे अकॉर्डिंग हो जाना चाहिए. उसका मतलब ये नहीं कि यहाँ से पुल बैक नहीं आ सकता, बट उस केस में ये सपोर्ट फिर बाई करने के लिए अवेलेबल नहीं रहेगा. और ना ही ये लेवल फिर हम एज अ रीटेस्ट सेल करने के लिए यूज़ करेंगे। सो लेट्स सी, क्लोजिंग दे तो रहा है, अभी तो टाइम है वैसे 3 घंटे हैं। $72.81 के नीचे, एक के नीचे एक कैंडल क्लोज 4 आवर की, तो ये कैंडल क्लोज होती है और उसके नीचे एक और कैंडल क्लोज आती है इस लेवल के, तो फिर ये लेवल सपोर्ट का रिमूव करना पड़ेगा। फिर नेक्स्ट सपोर्ट सीधा $58-59 है। मैं एक्सपेक्ट करूंगा प्राइस वहां तक जाए। अगेन ज़रूरी नहीं है प्राइस यहाँ से ब्रेक डाउन करके सीधा ही चला जाएगा, क्योंकि अगर यहाँ से अब ब्रेक डाउन होता है इन केस, तो फिर ये रीटेस्ट की तरह यूज़ नहीं कर पाएंगे इस लेवल को। ठीक है, रीटेस्ट की कंडीशन ही अलग है, तो ये तो यहाँ पर रीटेस्ट नहीं होने वाला मोस्टली। अगर ब्रेक डाउन होता है सक्सेसफुल, तो ये लेवल सपोर्ट के तौर पे अब काम नहीं करेगा। We can expect $58 to $60 लेवल, मिडिल लेवल का हो तो $59, $59 तक सिल्वर फॉरेक्स में उस केस में जा सकता है। हो सकता है डायरेक्टली जाए, हो सकता है थोड़ा सा यहाँ से पहले पुल बैक आए, ऊपर कोई नया रेजिस्टेंस क्रिएट करे और फिर फॉल हो। लेवल पे देखोगे प्राइस वैसे लॉजिकली तो एक बार भी नहीं आया है, एक बार ट्राई जरूर किया था, रह गया था, $60 को टच किया, बस $58-59 को हिट करने नहीं आया। सो $58 to $59 नेक्स्ट सपोर्ट, अगर ये लेवल प्रॉपरली ब्रेक डाउन करता है 4 आवर में। इंटरेस्टिंग चीज़ है, ऊपर से ये सपोर्ट ब्रेक होता है तो रेजिस्टेंस की तरह काम नहीं करेगा, बट कोई ऊपर नया रेजिस्टेंस भी क्रिएट नहीं है नियर बाय में सिल्वर में, एटलीस्ट 4 आवर। हायर टाइम फ्रेम का कह नहीं सकता, स्मॉलर टाइम फ्रेम पे जरूर होगा इंट्राडे के लिए। अच्छा साइन है, एटलीस्ट 4 आवर में सिल्वर में ऊपर कोई रेजिस्टेंस नहीं बने अभी तक। ऑल टाइम हाई से देखोगे यहाँ से फॉल जो आया है, देयर इज नो सच रेजिस्टेंस इज फॉर्मिंग, कोई भी रेजिस्टेंस कहीं पर भी नहीं है अभी तक 4 आवर में। तो इन केस अगर ये यहाँ से फॉल करके और नीचे चला जाता है नेक्स्ट लेवल पे 59 $60 के आसपास, और वहाँ से लेटर सपोज कोई बाइंग आती है, तो अनटिल अनलेस कोई नया रेजिस्टेंस बीच में कहीं क्रिएट करता नहीं है फ्रेश, अपर लेवल काफ़ी ओपन रहेगा। लेट्स होप आज कल में पता चल जाएगा ये ब्रेक कर रहा है नहीं कर रहा है। ऐसे फॉल करते करते एक बार नीचे आ जाए $49-50 तक, आई थिंक बेस्ट रहेगा रीटेस्ट लेवल के लिए भी। कि $58-59 के नीचे एग्जैक्ट लेवल देखोगे तो 58.90, उसके नीचे भी अगर ब्रेक डाउन कर देता है सिमिलरली इस तरीके से, एक के नीचे एक कैंडल क्लोज 4 आवर की, तो फिर ये लेवल ही ब्रेक डाउन माना जाएगा। बट अभी मुझे लगता नहीं इतना इजी रहेगा वो लेवल डायरेक्टली ब्रेक करना। फेक ब्रेक डाउन जरूर करने की कोशिश कर सकता है, जैसे यहाँ पर ट्राई किया हुआ है मल्टीपल टाइम ये। अभी तक आया नहीं है, तो हाई लिक्विडिटी होनी चाहिए उस लेवल पे सिल्वर में, तो रुकेगा $58-59 के अप्रोक्सीमेटली, $58 to $60 राउंड नंबर। ये गोल्ड में भी डायरेक्टली बाय मत करना, थोड़ा सा वेट करना कैंडल क्लोजिंग कैसी हो रही है, वो कहीं ऐसा ना हो ओपन इक्वल टू हाई बना के सीधा ब्रेक डाउन ही कर दे प्राइस। देखो ये क्रूड ऑयल थोड़ा सा नीचे क्लोजिंग दे देना एक एटलीस्ट 5660 के नीचे 15 मिनट टाइम फ्रेम पे, तो यहाँ पर जितने भी बायर अभी भी रोके हुए हैं प्राइस को निकल जाएंगे, फिर लोअर एंड से बाइंग करना थोड़ा बेटर रहेगा। प्राइस बार बार स्टक हो रहा है बिकॉज एक पॉइंट ऑफ इंटरेस्ट लग रहा है यहाँ पर बना हुआ है 5680 टू 5695 के बीच में 15 मिनट टाइम फ्रेम।
Bloomberg Intelligence, and we're talking about Anthropic in the news a lot here today. What does it mean for the AI space? And David Dassey, global co-head of sports investment banking at Goldman Sachs. We're going to talk to him about the continued surge in valuations of sports around the globe. So that'll be a fascinating discussion. So we got a lot coming up over the next couple hours. And we're going to kick it off today with Nathan Hager down in D.C. Nathan, what do you got for us?
Well, we're kicking off with a tech-led sell-off once again. Sounds familiar, doesn't it? The AI tech trade continuing to lead the losses as we start this holiday shortened trading week. Looking at the NASDAQ composite right now, it is down 1%, down 230 points, 22,315 the NASDAQ level. The S&P 500 is down 0.6%, trading just shy of 6,800. The Dow Jones Industrial Average is lower by 1/3%. The Russell 2000 Index of small cap stocks down 0.8%. Call it AI disruption, call it AI scare. Ben Laidler, head of macro and equity strategy at Bradesco BBI, calls it premature and overextended.
The pain is being borne by relatively small bits of the market, but I think the importance here, I think it comes on top of a broader rotation that we're seeing in markets, away from tech, away from the US, to international, to cyclicals, to value, to small cap, which ultimately I think is this broadening is very positive.
But as we look at the market right now, the broadening is going into treasuries. The 10-year is up 132nd. The yield little changed at 4.04%. Yield on the 2-year, 3.42%. Bitcoin is lower by nearly 3%, trading just shy of $67,000 a token. 7 of the 11 main industry groups in the S&P 500 are in the red, led lower by materials and communication services. Financials are leading the stocks in the green this morning. Biggest gainer in the S&P 500 right now, Norwegian Cruise Line. It is up 8.3%. Elliott Investment Management's got a more than 10% stake in the company. It's urging the board to make changes that Elliott says could unlock 150% upside for shareholders. Biggest laggard in the S&P 500, Genuine Parts, down 12%. Onward, it is splitting in two. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager in Washington. That is a Bloomberg Business Flash. Scarlett and Paul.
All right, Nathan Hager, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and at Bloomberg.com as well. Boy, big sell-off in the marketplace here, as Nathan was just going over. Let's take a look at some of the stocks on the move today, and we're joined by Bloomberg's Bailey Lipschultz. Bailey, what are you looking at today?
I want to start with a small company now below $1 billion in market cap, but has a name that, or is backed and founded by some names that you guys may know. Cameron and Tyler Winklevoss, the Winklevi twins. Their Gemini space station crypto exchange down 12%. This comes after the exit of the CFO, the COO, and the COO.
Well, you don't see
who's left.
Yeah, the brothers, I think, are really running the company at this point. You don't see that often. And I also want to call out that this is a company that IPO'd back in September. So down about 75% from its IPO price. Trades under the ticker GEMI for Gemini. One of the Winklevi is going to actually step into one of those roles. Certainly going to be something to watch, but this does also come just a few days or weeks after they cut as much as 25% of their workforce and wound down operations in the UK, European Union, and Australia. So all the hopes that the Bitcoin revival, Bitcoin crowd would lead to a rush of public companies, this is one of those big losers so far.
Since Facebook, have the Winklevoss twins created value for themselves or shareholders anywhere?
They've been for themselves.
I was going to say, for themselves, they've been long Bitcoin for a while.
Okay.
So, I mean, if you bought it back when it was trading at like 2000, I mean, you're up a lot.
Yeah.
Not that
Okay.
investors who backed you are doing well. But,
all right, very good. All right.
All right, what's next for you?
Start with the best performer in the S&P 500. Some good news, at least for today. Norwegian Cruise, ticker NCLH, right now up 8%. This comes after activist investor Elliott said it built more than a 10% stake in the company, said a letter in presentation to the management board, believes it can unlock more than 150% upside. Big numbers, potentially. The reason they are taking an activist stake, though, on a trailing 12-month basis, Norwegian has returned 12% losses. That compares to 24% returns for Royal and Caribbean and a 48% return for Viking.
Wow.
So.
All right. Yeah, that calls for some action, I guess, from activist investors. All right. And it is Monday, so there's some M&A news.
Some M&A news starting in the medical space. Danaher, ticker DHR, acquiring medical technology firm Masimo, ticker MASI. Call it a $10 billion deal, $9.9 billion. We'll round up and give them the double digit. Danaher down, maybe a bit of that arbitrage or maybe questions around how the deal will be implemented. Down about 3.5%, had been down closer to 5.5%, trading at the lowest level since mid-October. Massimo, meanwhile, up more than 34%. Best day ever, on pace to close at its highest since June 2025. But this does seem to be at least a merger of equals. If you remember, Massimo has the patient monitoring technology, so they measure blood oxygen levels. So they were tied back to that lawsuit around the Apple Watch. If you remember, one Apple Watch feature was able to register your oxygen levels. Massimo sued them and was successful, basically saying no. So it does seem like this will be a fold-in acquisition that analysts, at least on the high level, seem pretty bullish on.
All right, good stuff. Bailey Lipschultz with our stocks to watch for. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It is Monday, and we talked about M&A. And
of course, Tuesday.
Oh, shoot, it's Tuesday. You know, in my world, it's Monday, Paul, because we had yesterday off. All right, thank you for that correction. It is Tuesday, but there's still a lot of M&A to talk about.
Merger Tuesday.
Yep, Merger Tuesday. Although this one's been like in the works for so long now. Warner Brothers, Paramount, Netflix. Looks like Warner Brothers is now open to a Paramount bid, a little bit more open than it was before. It is reopening talks with Paramount as Paramount signals a higher bid, but has not actually raised
I'm glad you reported it correctly, because they haven't raised their bid. They're saying,
They said, you know, we could.
Yeah.
So I guess that's good enough for them to reopen discussions. Stephen Flynn is our senior credit analyst on this developing story. So, Stephen, how are you looking at this development?
Yeah, so you think back a couple of weeks ago, on February 10th, Paramount actually came out. They reiterated a $30 per share cash offer for the entire Warner Brothers Discovery, but they did add in a few other things. Number one, they said that they would pay the $2.8 billion termination fee that Warner Brothers would owe Netflix for breaking that deal. They said that they'd help with the $15 billion of bridge loan that Warner Brothers has outstanding from a bond tender deal that they did mid last year. They'd also fully reimburse Warner Brothers Discovery for a potential $1.5 billion fee that Warner Brothers could owe certain bondholders if they do not do a debt exchange by the end of this year. So this is a complicated story that keeps getting more and more layers of complexity on top of it.
Remind us, Steve, if Paramount were to win this deal for Warner Brothers, this would be a very highly indebted company. You guys don't like that, do you?
Correct, yes. So Warner Brothers Discovery would have about $85 billion of total debt pro forma for this deal, a combination of Paramount and Warner Brothers, right? So Warner Brothers has about $31 billion of debt. Paramount has about 15. This deal would add about 39. So you're talking about 85 billion. If you just look at the combined EBITDA for both Warner Brothers and Paramount for 2026, combined, they're about $12 billion. You know, just basic math, you're talking 7 times leverage. That's obviously huge. But Warner Brothers, Paramount expect about $6 billion of cost synergies. So if you give them credit for that, that gives you about $18 billion of EBITDA. It still gets you well over 4 times.
Synergy credit. You guys are pretty stingy.
Well, yeah, we could give it, but we give you a certain amount of time to actually show it, right?
Okay.
So, and this is really important because what will the rating agencies do? And for the $54 billion of debt financing that they have in place to support this deal, to what extent will it be ahead of the other debt through either guarantees and or security? So if you could argue that it is ahead of all the other debt and you give them pro forma credit for the synergies, you're talking about 3 times leverage through that $54 billion, which could potentially get you IG credit ratings, right? So if we look at Charter as a comparable. So Charter, for many years, had a total net leverage target of 4 to 4.5 times, but they had a split capital structure. The secured bond debt was IG, the unsecured debt was high yield, and the secured debt, they kept that a little bit over 3 times. And so if you use that as a comp and give them credit for the synergies, you know, you could say that
there's a lot of ifs there.
Yes, there is. There's a lot of ifs
Plus,
there.
I like Charter's cash flow better than I like.
Yeah, but you know, pro forma Paramount, Warner Brothers should generate a lot of free cash flow, and they, you know, they should. I assume they will commit to use all that to reduce the debt. And typically, rating agencies will give the company a few years to kind of hit their targets and show the deleveraging.
So Warner Brothers, when it merged with Discovery, also took on a lot of debt. How does this potential Warner Brothers and Paramount debt profile look compared to what Warner Brothers looked like after it merged with Discovery?
In total, when thinking about the leverage, it's not too different, but let's hope that this works better, right? So, because
that's the question, right? Last time it didn't work so well, and Zaslav was kind of just preoccupied with bringing down the debt for years.
Correct. So when they merged Discovery with Warner Brothers, they purchased it from AT&T effectively, and it had a high leverage, and they promised to delever, and it did not delever as quickly as anticipated. So then that's when last summer you had the whole announcement of the split, and they decided to launch a tender offer where they got some new financing in place and told the existing bondholders, we'll buy the bonds back from you. But, you know, you're taking some pretty big haircuts to the amount that you're owed, and they still had very good participation. So that helped them delever a little bit, and then all the, you know, then they put themselves up for sale, and we've had all the mergers since then.
Let's load up on debt again.
Let's load up on debt again. We've seen this play before. Steve, thanks so much for joining us. Steve Flynn, senior credit analyst for Bloomberg Intelligence, covering the whole tech, media, telecom space. And again, Warner Brothers presumably opening up for a period of 7 days, more negotiations with Paramount. Scott, and to see if they can improve their deal here. And there's still the deal on the table from Netflix, and they haven't budged, I don't think, since the initial deal
And
talk.
a Paramount banker told a Warner Brothers board member that Paramount would offer at least $31 a share, but that actually hasn't happened yet. So we're waiting for that to come through.
Right, and I can definitely see that conversation taking place. Hey, we'll do this, but we're not going to put it on paper, so we'll see how that goes. All right, we'll take a look at these markets. Again, a rough day out there. The S&P is off 35 points. That's a 0.5%. A little bit tougher out there in NASDAQ. The NASDAQ's down 0.8%. And the Russell also down about 0.8%. Calling out Bitcoin for Tom on the Upper East Side, just below $67,000 per token. Metals also trading a little bit lower here. We've got gold down by 2.6%. This is big.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm Nathan Hager in Washington with this Bloomberg Business Flash with red headlines crossing the Bloomberg terminal from Bayer. The German drug maker is preparing to announce a $10.5 billion settlement push on current and future cancer lawsuits tied to its top-selling Roundup weed killer. Sources tell us that includes a $7.5 billion settlement through cases filed in Missouri and another $3 billion in settlements in which former Roundup users blame the herbicide for causing their non-Hodgkin's lymphoma. Bayer shares in Germany are higher by nearly 6%. As for the broader market, tech stocks are leading declines this morning. The AI disruption trade continues, and we check the markets for you all day long here on Bloomberg. The NASDAQ composite is down 0.8% or 180 points. The S&P 500 is lower by 0.5%. The Dow Jones Industrial Average is down nearly 0.4%. That's a decline of 177 points. 6 of the 11 main industry groups in the S&P 500 are in the red, led by materials. Financials is leading the gainers. We did get a bit of economic data on this relatively light week for that. Home builder sentiment fell to a 5-month low this month on the National Association of Home Builders and Wells Fargo Index. The 10-year Treasury is little changed right now. The yield, 4.04%. Yield on the 2-year, 3.42%. Will it be bidding war part 2? For Warner Brothers Discovery, the studio has agreed to reopen sales talks with Paramount Skydance for 7 days. That's after a Paramount banker told a Warner Brothers board member they'd up their offer to at least $31 a share if they did. Paramount Skydance shares right now among the biggest gainers in the S&P 500, up 5.5%. Netflix is lower by 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That is a Bloomberg Business Flash. Paul and Scarlett.
All right, very good, Nathan Hager. Appreciate that. We got Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and streaming live at Bloomberg.com as well. Anthropic's PBC talks about extending a contract with the Pentagon are being held up over additional protections the artificial intelligence company wants to put on its Claude tool. Absolutely no idea what that means. But Mandeep Singh does. Mandeep Singh, Global Tech Research Head for Bloomberg Intelligence. What's going on with our friends at Anthropic? Because I know they do a lot of work with the U.S. government.
Yeah, and look, I think Palantir is the company that really made a name for themselves in the kind of work that all these LLM companies are being tasked to do for the Department of War.
Yep.
And look, it's going beyond analytics now. So what Palantir did was you could look at, unstructured data like the GPS coordinates, tie intelligence in terms of, finding about some source or some entity. And that was heavily used in a variety of use cases. Now I think these LLMs are trained on, 15 trillion tokens. And they can ingest large amounts of data and do analytics at a level that, we have not seen. So in this case, the company Anthropic has talked about their AI constitution, or in other words, putting guardrails around the kind of surveillance activities they want the LLMs to do. Mm-hmm. And obviously, from a government perspective, they want to do whatever it takes from a national security perspective. So I think that's where there is a discussion going around the kind of guardrails that they want to see and the level of, I guess, work that the government wants them to do.
Okay, so the Department of Defense, or Department of War, as it's now known, this relationship with Anthropic, it's not limited to just using Anthropic's models, is it? Because it wants to make sure that it's got kind of a wide source of AI, large language models to draw from. So what is that relationship like with, I don't know, ChatGPT or Gemini or even Grok?
Yeah, all of these companies have a contract with the Department of War. And like, for example, xAI's Grok, it has a $200 million contract. So, the department is using all the possible tools that are available. And from that perspective, Anthropic is one of them. But no one else, like ChatGPT, hasn't talked about, guardrails in such a big way as Anthropic has. So that's the big distinction. And obviously, SpaceX is a defense contractor for the department. And now with xAI merger, I think they can do more work around the drone side. So at the end of the day, I think you have to think of it from a geopolitical standpoint, what China is doing, with that infrastructure and similar concepts, and what I think the U.S. defense is looking to do in terms of surveillance and national security interests. And these LLMs will play a pivotal role because, as I said, they can help you find that needle in the haystack that the current technology wasn't able to do.
Who is Anthropic? Who are these people?
Well, they just raised $30 billion in their latest funding round.
So they're good fundraisers.
They're good fundraisers.
And they'll most likely go public this year. There is a very high likelihood of both Anthropic and OpenAI going public. And that's why, they're out there in terms of establishing the use cases and the utilities, not just a coding agent. They want to show, that they are addressing a lot more areas in terms of, where these models are touching and the companies that they are interfacing with. So there is a very high chance that we'll see IPOs.
All right, Mandeep Singh, keeping us up to date on what's going on with Anthropic. It's certainly the AI company of the moment here, disrupting every sector in the market. Mandeep Singh is our global tech research head here at Bloomberg Intelligence. All right, let's shift gears and talk about the business of sports. The Olympics are on right now. World Cup is next this summer. We already had the Super Bowl. There's lots of investment dollars going into sports and different parts of sports, whether it's professional teams or sports adjacent industries. So I'm pleased to welcome Dave Dassey. He is a partner and global co-head of sports investment banking at Goldman Sachs, and he joins us in studio today. Dave, good to speak with you.
Great to be here.
So it feels like every private capital fund and their mother is trying to get into sports. We talk about how sports is an asset class of its own. And I know there's a lot of growth potential here, but how do you think about whether things feel bubbly?
It's an interesting question. We think of sports as an asset class. It's $1 trillion plus asset class, well on its way to $2 trillion. If you take the sports adjacent companies you talked about or referenced, it's easily $2 trillion broadly. What's interesting is historically, institutional capital, no other capital has had the ability to get into sports. Sports is, the returns have been very, very strong over the course of the last couple decades. People have noticed that. The returns have generally been uncorrelated with the broader market as well. And what's unique and distinctive about sports is it's live entertainment, it's deep fan engagement, and that's highly, highly attractive because fans keep coming back. And so the stickiness around that business model is pretty significant. At Goldman, we're spending time, we really think of capital in four kind of buckets. So you have traditional sports owners, so billionaires who have historically owned teams. The family office business, which you've talked about a lot, is growing significantly truly on a global basis. The institutional capital, there's probably 15 to 20 global firms now that have raised capital for sports. They have dedicated teams for sports, which are going in. And then sovereign wealth funds, it's been less so in the US, but on a global basis, the ability to invest. And so across our firm, we think about those four buckets. We're seeing strong interest from all. But what you really haven't been able to see is, open, you were talking with your prior guests about potential IPOs, right? More liquidity. There's not a lot of secondary liquidity. And so that's one of the evolutions which sports really needs to go through.
Dave, it's been my experience, looking at the value of these franchises. It's been based in large part upon the rights fees that they've been able to negotiate with their rights holders, whether it's the traditional networks or satellite players. That business is changing, as you guys well know, and some of the streaming companies are becoming more and more. Can I expect the Amazons of the world and the whoever to spend as heavily in terms of rights fees as maybe historically the broadcast networks have done?
Well, it's an interesting competitive dynamic, and we'll see ultimately how it plays out. But certainly the large broadcasters are still in the business in a major, major way. We have every expectation that will continue. The four largest streaming platforms, which you referenced, they are all in. Even companies like Netflix, which said for several years we're not going to get into live sports, have now gotten into live sports in their own kind of targeted, custom way. And so we have every expectation that will continue, and you will continue to see that demand.
You talk about secondary liquidity. Arctos, which is a leading sports investor, is trying to solve for that, and KKR just bought it in a $1.4 billion deal. What does secondary liquidity actually look like once we achieve it?
Well, it's interesting. You look at almost every other asset class that's evolved over the last 100+ years, right? You've driven more liquidity. You've ultimately had companies that are public. And as you've got more liquidity or more ability to get in and get out of investments, there has been more interest in terms of pockets of capital that wanted to come into it. And so I think that's more like the end game. Sports is a little different because you have governance control by the leagues. You have ownership approval by the leagues. And so it's been a little bit more evolutionary. Arctos certainly has been innovative in terms of doing that. They've been very, very successful. And we expect we'll see more of that. But we expect that'll be the trend line in terms of moving in that direction.
So I wonder, because with private equity and private asset firms getting in on it, they now, we can see, are really depend on the macro environment for their successful exits. The elevated interest rate environment has not been kind to them. So to what extent does secondary liquidity become dependent on the macro environment?
From a sports perspective, I think it's less so. Again, we talked about the uncorrelated nature of these assets, and if you think about valuation, at least from my perspective, on a sports basis, it's how big is the addressable market? What's the level of engagement? Again, we talked about the live events. Fans go, right? You go with your parents, your grandparents, and so it's multi-generational in terms of that level of engagement. It's very, very sticky. And so as you think about that business model, historically, it's do you show up to the stadium and do you go? Yes. Do you have broadcast and do you watch? Yes. Now in a more digital world, this ability to build community, you can be a fan of any team in the world sitting on the other side of the world today and be very, very active and engaged in that type of community. And that's incredibly powerful as you think about advertisers. You look at the Super Bowl, what the ads went for that. You look at the Olympics ratings. The NBA had their best all-star ratings in 15 plus years, et cetera. And so that ability to have that first data point, the ability to think about what's the lifetime value of a fan, what's the lifetime value of a family, quite frankly, can be very, very attractive. So I think there are multiple business models, and we're just at the nascent stages of what this direct-to-consumer monetization can look like.
The NFL is putting more and more games overseas, Europe, Latin America. What's next for them? I mean, can they create a league outside the U.S., do you think? I mean, it seems like they have global ambitions.
They certainly do, and again, it goes back to that addressable market. How many eyeballs can you get? You look at some of the truly global sports, cricket, basketball is certainly moving in that direction, obviously soccer around the world, right? You talk about hundreds of millions, if not billions of people who are engaged. And so the NFL, the content's worked really, really well here, and they're pushing it, into a lot of success, quite frankly. I mean, there were a lot of skeptics, would it play overseas? It's playing very, very well, and so I expect, the league's announced they're going to go to more and more games overseas, and we'll see more of that over time.
Well, speaking of the NFL, what has more value, these established leagues like the NFL or niche sports that are really coming onto the scene and capturing a lot of investment dollars?
I think it depends, right? What you're looking for. Some of these more niche sports are high growth, and so part of it is the entry point in terms of where do you get in. From my perspective, governance is critical in terms of around a league, and so how are decisions made? What sort of do you have a salary cap? Do you not have a salary cap, right? So if you can de-risk the business model by having very strong governance in terms of how decisions get made, generally more for the benefit of the league as opposed to the benefit of each individual team playing off of each other, that can be very, very attractive. And some of these higher growth, new leagues, niche, to use your word, have set up good governance, and there's real opportunity. But part of that's the price point, and then ultimately comes back to addressable model and what's the level of fan engagement. Fan engagement in the sport.
I think Goldman Sachs has to get Liv and the PGA Tour back together. If you could do that, that would be something.
Working on it, right?
Working on it.
All right, Dave Dassey is partner and global co-head of sports investment banking at Goldman Sachs. Have you been watching the Olympics, Paul?
I have. I'm all in.
Team USA beating Sweden 5-0. That was a good game.
Curling, skeleton, I'm all in.
All right, this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm Nathan Hager in Washington with this Bloomberg Business Flash, watching a tech-led sell-off as we begin the holiday shortened trading week. Anxieties over artificial intelligence are extending into this new week, with the NASDAQ 100 deepening a plunge that's already got it on its track for its worst month since March of last year. Right now, the NASDAQ 100 is lower by 1.25%. Brian Levitt, Chief Global Market Strategist at Invesco, says in this market, it pays to be selective.
There's certain companies that are going to grow at a pretty significant clip or generating free cash flow and are now trading at much more reasonable valuations than they were even a handful of weeks ago. What I also like is this ability to rotate into other parts of the market where valuations are not as excessive, into places like mid-caps, into non-U.S.
Right now, it's a pretty broad-based sell-off, with the S&P 500 now down 0.8%. The Dow Jones Industrial Average is lower by 0.6%. 9 of the 11 main industry groups are in the red in the S&P 500, but it's not information technology that's leading the decliners, though it is down more than 1%. Materials and energy are both down more than 2%. The 10-year Treasury is up 2/30 seconds. The yield lower by about a basis point to 4.03%. The 2-year yield is at 3.42%. Gold is sinking, down more than 3%, trading below $4,900 an ounce. Spot silver is down 4.5%. Bitcoin is lower by nearly 3%, trading just shy of $67,000 a token. Bayer shares are higher, up more than 4.5%. Bloomberg News has learned the drug and chemicals giant is making a $10.5 billion push to settle lawsuits tied to its Roundup weed killer. General Mills is lower by more than 7%. The maker of Cheerios cutting its sales outlook for the fiscal year, citing higher inflation, lower food aid, geopolitical uncertainty. Something to drag Campbell's shares down as well. They were lower by more than 7% as well. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Scarlett and Paul.
All right, Nathan Hager, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. And we're streaming live on YouTube as well, and also at Bloomberg.com/videos, and that's where you'll find us there. As Nathan was just reporting, sell-off here today, led by the NASDAQ yet again on that, some of the concerns about software and AI. Let's check in with our next guest, Mark Chandler, Managing Partner and Chief Market Strategist at Bannockburn Capital Markets. Mark, thanks so much for joining us here. What do you make of this kind of rotation we've seen over the last several months, and most pronounced in the last month or so, kind of out of some of those tech names? Right now, it's kind of software, and maybe into some other value-oriented sectors. What do you make of that?
Yeah, I don't know. I mean, I think things on a big macro scale, and what surprises me here today, I think there's been a shift where foreigners, as we know, weren't really dumping U.S. assets last year. In fact, the tick data that we get later today is likely to show that foreigners were really bigger buyers of U.S. assets last year than they were the year before. However, what they seem to be doing is hedging the dollar, hedging the currency risk. So even though the stock market is off sharply, as you noted today, the dollar is higher. Because when foreigners are selling U.S. stocks, they have to buy back their dollar hedge.
Ah, interesting. Okay, so is this in terms of the international buying or selling, is this a trend, do you think, for 2026, or is this just short-term volatility?
Yeah, my sense is it's just short-term volatility. We've seen the MSCI Asia Pacific Index make record highs. We've seen the Eurozone or Europe's stock 600 also making record highs. I mean, everything's pulling back. I think this is just a global profit taking here in the middle of February.
Mark, we're kind of, I guess, 70% of the way through earnings season for the S&P 500. A, what's your takeaway? And B, are these earnings enough to support these markets?
Well, it just seems to me that what we're seeing throughout the economy is a very concentration, whether it is on consumers, where the top, 10 or 20% account for over half of U.S. consumption. We're seeing that in the stock market too. You know, the Mag 7 are all down this year, and that's where the concentration, of course, has been. So yeah, I think that throughout the economy, we're seeing this concentration. So it's almost, I tell people the story about the guy whose head is in the freezer and his feet are in the stove, and his average temperature is all right, which is really what we get when when we look at these big aggregates, I want to drill down and look closer at this big discrepancy, what economists are calling the K recovery.
Yeah, exactly. Partially, you were mentioning international markets here. Again, big outperformers vis-a-vis the U.S. last year, continuing into this year. Is rest of the world a better trade than the U.S.? How would you allocate there?
Well, I think that the real issue, I think, for dollar-based investors is that when you have a basket of international stocks, the currency could be as much as a third of your total return. And if you have a basket of international bonds, the currency could be 2/3 of your return. So buying foreign assets is not just on the idea that those asset markets will outperform, but that you're getting rid of the dollar. And I think that even though the dollar is up here today, we're actually making new highs on the day as we speak. But in general, I think most people are still negative the dollar. And so I think that is a real encouragement to continue to diversify into overseas markets.
Broadly defined, Mark, fixed income did very well last year. High single-digit returns pretty much across the board here. What is your expectation for fixed income this year in 26?
Yeah, I'm still reeling. We've had like 3 big surprises in the past week or so. When the Japanese LDP won a landslide victory a little bit more than a week ago, people expected the yen to weaken and JGBs to weaken. Exactly the opposite of what took place. And then think about what happened last Monday when we were told in the media that Beijing had been encouraging Chinese banks and financial institutions to de-risk from U.S. Treasuries. Instead of the Treasuries selling off, Treasuries have rallied. The yield have dropped about 15 basis points since China's announcement. And the third surprise, I think, is that despite this drop in U.S. yields, so I'm saying about 15 basis points or so on the 10-year, about 5 basis points on the 2-year, and the market looks like it's pricing in roughly, say, call it an 80% chance of a cut in June. The dollar has held up pretty well. So I think on all 3 counts, there's been a big surprise. And I think it's coming partly from the fixed income market itself.
Mark, in the commodity space, boy, precious metals were just extraordinarily strong last year. And just take a look at gold and silver here. But we've had a pullback in gold here, maybe 10% off of that recent high. What do you think about some of these precious metals here?
Well, I sort of took exception when Treasury Secretary Bessent wanted to blame the volatility on Chinese traders and talked about how they had to hike the margin requirement. I think that's really an important thing for listeners to appreciate is when you buy a stock, you have to put up some margin money. The Federal Reserve sets that margin money. It's a down payment towards your future purchase. But in the commodity market and in the capital markets more generally, the margin money is really set on volatility. So the more volatile an instrument is, the higher the margin from the exchanges. And so we've seen U.S. exchanges also raise the margin for the precious metals just due to the volatility. And so, yeah, I mean, I'm surprised by both on the run up, how dramatic it was, and then of course, as people know, after a dramatic run up, you often get a dramatic sell off. And I think this is where we are. I don't think the market's found an equilibrium yet.
Mark, lastly here, the Fed here, we've started to get a lot of economic data since the shutdown's been resolved. And last week we got labor data, inflation data. This week we get some more inflation data. What do you think the Fed's going to do this year?
Sort of in the camp that sees 2 rate cuts, maybe 3, but it's really predicated on the economy weakening, and especially in the labor market. I find it interesting that the market is, if the confirmation process goes according to schedule, which is a big if because of the investigation at the Federal Reserve, but if it goes on schedule, the new chair's first meeting, Warsh's first meeting that he will chair will be that June meeting, new dot plot, but this is when the market expects the next Fed cut.
Exactly. A lot of ifs there with that litigation outstanding. We'll stay on top of that. Mark Chandler, thank you so much for joining us. Mark Chandler, he's the managing partner and chief market strategist for Bannockburn Capital Markets, joining us via Zoom here. And again, we've got that Fed markets. If you look at the work function, looking at a rate cut maybe in that June meeting. We'll keep an eye out for that. Red on the screen, that's for sure. The S&P off 43.6%. The Dow's off 245 points. And the NASDAQ taking it even harder, down about 180 points. That's 0.8% on this sell-off. Tom Keene, VIX, that's north of 22 right now. So we'll keep an eye on that. 10-year Treasury yields 4.04%. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and streaming live at Bloomberg.com. I think we have part of the government shut down. Quite honestly, I'm just not sure. So I said, I think we pay people to kind of stay on top of this, and we do, in fact. Nathan Hager's one of them, senior policy analyst of Bloomberg Intelligence. He's down there in Washington, D.C. Nathan, is our government fully open? Do we have parts of it shut down? What's shut down? What do I need to know?
See, what you need to know is that there's 1/12 of a government shutdown. There are 11 appropriation bills that have been funded, and the one that has not is the Department of Homeland Security. So it's about approximately 266,000 employees across agencies like FEMA, TSA, ICE, and so forth. Now, the debate isn't so much over funding, it's over tactics, because ICE, for what it's worth, has been funded through the One Big Beautiful Bill through fiscal year 2029. We're talking about $75 billion. And the Democrats are pushing ICE tactics changes, things like body cameras, masks, etc. And neither side has come to an agreement. So what people need to know is this, is that the shutdown is most likely going to last a while. But for those of us in the markets, it really doesn't have much of an impact. I mean, most of the data that we care about, like BLS and Fed data and so forth, that continues operating through September 30th of this year. And I would argue, due to the elections in November, we probably have another year until we really see a shutdown threat that impacts the markets and the data.
Okay, but in terms of real life, what if there is some massive storm and there's an emergency, a national emergency, federal emergency in parts of the country? FEMA would be affected by that, no?
Absolutely. I mean, Coast Guard, TSA. And, you know, what I would say here is that, you know, right now the shutdown is about pressure points. Both parties think that they're sitting in a position that's politically advantageous to themselves, but what will make them change their minds? Back in 2018, it was a TSA sick out. Now, the 45-day shutdown that took place last year, everybody remembers the airline disruptions. Well, that was due to the FAA. But go back to 2018, TSA employees started calling in sick en masse after about 30 days, and that's ultimately what changed the pressure point for that shutdown. And I think that's what's going to happen here. Now, the first paycheck will start this week, but again, both sides are sitting pretty in terms of themselves and how they feel. So I'm not sure you're going to see much in the way of negotiations taking place this week and next. I think it's probably going to be a couple of weeks before we get down and see a real solution to this.
So, I mean, I guess neither party feels like they have political risk here. I mean, it is a midterm election year, but I guess the feeling is it's not that big a deal. It's more just about affordability and things like that.
Yeah, I would also just remember that we are in the primary season right now as we go into the elections. I mean, all 435 members of the House, 1/3 of the Senate are thinking about primaries. And primaries are dictated by their parties. So if you look at, in terms of the Democrats, they were looking at messages that enhance the Democratic Party. Republicans are doing the same with their base. They're not really playing to independents at the moment. And I think that's driving a lot of this. So I think, negotiations will take place. I mean, there are Democrats out there that will say, look, we're in favor of funding everything but ICE. And since ICE is already funded through 2029, that potentially could be a solution. So, but again, it's going to have to be between the Senate Democrats and the White House. The GOP Congress is largely staying absent. They will stay and essentially defer to President Trump on this.
So when Paul flies out to, what's your next vacation? Aspen in a few weeks?
2 weeks.
3
yeah,
weeks.
3 weeks, yeah.
And this probably won't be resolved because neither side feels the pressure. Is he going to feel it when he goes through security?
Oh, I think so. I mean, just anecdotally, I can tell you my wife was feeling it when I said I had to fly out next week. She asked me, are you going to be delayed? And so, I will say is that the pressure will build. I mean, we saw this with the FAA disruptions just last year. The pressure will build. But for Paul, for you specifically, just check and see if Aspen is one of those TSA airports or TSA contractor airports.
Oh,
there are a bunch of airports out there that have contractors and they're not impacted by this.
All right. So is my Congress, are they working now or are they on vacation? I can't remember.
So they're on recess right now. A lot of the lawmakers are still coming back from Germany.
Really?
And so,
See, I had recess when I went to Blessed Sacrament School, but that was 1st through 8th grade. So I don't know why they
Their
have
recesses last a lot longer.
Yeah. So what will they do when they get back, assuming they come back?
So you're going to see one half of the Congress actually focus on this. And it's important to note that every day that Congress is focusing on this, they're not focusing on things like crypto market structure or housing reform or anything like that. So it does delay some of the bill's passages. But there are going to be other members of the Congress who say, look, we're just going to move forward and we're going to do our things. Think of Kevin Warsh's nomination hearing over at the Senate Banking Committee. So Congress will continue to work. And this is a little bit different than other shutdowns where Congress largely said, look, we can't do anything because it's not essential service. services. So you are going to see Congress moving forward with certain items, but this cloud of DHS funding is going to be the one that ultimately just pushes off more and more legislation. And most importantly for the crypto sector, that's the one that we're looking at.
You mentioned the Senate Banking Committee will hold a hearing on Kevin Warsh, but hasn't Tom Tillis, who is chairman of that committee, said that they're not going to schedule any kind of vote until the whole DOJ subpoena on the Fed is resolved, is finalized and resolved from where he sits?
Yeah, it hasn't been resolved yet. And this is actually probably the number one question we get from our clients is what happens in this situation?
Right.
Senator Tillis can block the committee. I mean, it's a 13-11, so it'd be 12-12 if he holds firm. And it would take 60 votes to discharge that petition and go straight to the floor, 50 votes to overturn that. Long story short is that it's not going to be discharged. So I think what happens here is that Senator Tillis remains firm, and you will see statements from the White House, saying, look, we're just going to continue no matter what. We're going to push our nominee. But ultimately, there has to be something here from the DOJ to get this resolved because Senator Tillis is going to hold firm.
Yep. All right. There you go. Bring some chess, I guess. Nathan Dean.
Or checkers.
Or checkers, depending, whichever side you're on, I guess. Who knows? Nathan Dean, senior policy analyst for Bloomberg Intelligence. He's down there in Washington, D.C. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins in just moments with a sell-off in the marketplace today. The S&P off 35 points, 0.5%, and the NASDAQ off 160 points, 0.7%. More Bloomberg Intelligence starting right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Tuesday morning. Paul had to remind me it's Tuesday.
Yes.
Because of a three-day weekend. From us here at Bloomberg Intelligence in the Bloomberg Interactive Broker Studio in Midtown Manhattan. Paul Sweeney and Scarlett Fu here with you. We've got a lot to cover on this Tuesday, this holiday-shortened week. We're going to kick things off with Sam Fazeli. He is our Director of Research for Global Industries. He's also better known as our senior pharmaceuticals analyst to give us the latest in the biotech sector. Victoria Fernandez, the chief market strategist at Crossmark Global Investments, will join us to talk about this continued sell-off in equities that we're looking at right now. Small caps, big caps, tech names, you name it, they're down at the moment. Tyler Kendall is our Bloomberg Washington correspondent on the latest out of what's happening in Washington. Iran saying it's closing parts of the Hormuz Strait as the U.S. talks continue. And Sean O'Hara is the president of Pacer ETFs to talk about ETF investing. How much money is moving into gold? How much money is moving out of Bitcoin these days? Right?
Exactly.
That's what it all comes down to. All right, so all that coming up. But first, let's check in with Nathan Hagar for our Bloomberg Business Flash. Hi, Nathan.
Hi, Scarlett. There is a lot of money moving out of risk on this Tuesday morning. We check the markets for you all day long here on Bloomberg, and it is a pretty broad-based sell-off with the S&P 500 down 0.4%, 26 points lower, trading just above the 6,800 handle. The Dow Jones Industrial Average is lower by about 0.3%. The NASDAQ Composite down 0.5%. The Russell 2000 index of small cap stocks is lower by 0.7%. So it is a pretty broad-based sell-off led by big tech once again, although we are off the session lows this morning. But State Street senior strategist Marvin Lowe says when you think about the run that the tech sector's had over the last few months, if not years, this selling shouldn't be too big a surprise.
Overall, risk had a fairly heavy weight in portfolios. And we're going through some fairly significant, questions and reshuffling with regard to winners and losers, particularly around this technology AI trade. And that's going to create volatility. If we were coming in from a much looser overall positioning perspective, we'd probably have a little bit more room. But, volatility is something that probably isn't that surprising.
And the volatility is a little bit elevated right now. The VIX is up 1.2% at a 21 handle. Right now, 8 of the 11 main industry groups in the S&P 500 are in the red, led lower by energy and materials. Financials is the sector leading the gains this morning. The 10-year Treasury is little changed right now. The yield at 4.04%. Yield on the 2-year is at 3.43%. Among the biggest gainers in the S&P 500 right now, Norwegian Cruise Line is higher by more than 7.5%. Activist investor Elliott announced more than 10% stake. It's pushing for changes as well. Paramount Skydance is higher by more than 6%. Warner Brothers Discovery's opened a 7-day window to renegotiate after Paramount offered $31 a share for the full company as opposed to $30. Netflix still bidding $27.75 for the studios at HBO Max. Netflix shares are lower by 1% right now. Warner Brothers Discovery is higher by 2.25%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Nathan Hager, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and streaming live on Bloomberg.com/videos. That's where you'll find us. Red on the screen as Nathan was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg Television's markets correspondent, Christine Aquino. No, you're just Bloomberg News, right?
I am, yes.
Norman Linda's at Bloomberg's at markets.
It's all in the family. That's
all
okay.
in the family. So, Christine, what do you got for us today?
Well, Paul, I'm looking at a stock that is not red today. Warner Brothers Discovery. Of course, those shares are up more than 2% at the moment. Ticker WBD. And of course, we all know we're still talking about this deal. I can't believe it's 2026. But the latest, of course, is that it has agreed to reopen negotiations with Paramount because now Paramount is offering $1 more per share, $31 per share. And so Warner Brothers taking 7 days to consider that offer and will also be asking Paramount for its best and final offer. And so, of course, under the terms of the waiver, which was granted by Netflix, because remember, they already made a bid for it. Warner Brothers was in favor, and now they're reopening discussions. So Netflix, of course, has a say in this as well. And then it's going to have a chance to countermatch whatever new proposal Warner Brothers comes up with in that 7-day period. But Bloomberg Intelligence analysts are not very bullish when it comes to Netflix's perspective here. I mean, they're saying that Netflix might be better off walking away. Their current offer is $27.75 a share, but there's a lot of risk that they may have to bump that, and that's not going to look good for their leverage if they have to. But as far as Warner Brothers shares are concerned, it's a good thing for them.
Well, everyone says that for Paramount Skydance, this is a crucial must-have situation, whereas for Netflix, it's a nice-to-have situation. All right, so we'll keep an eye on that one. Your next stock to watch?
Taking a look at Norwegian Cruise Line, Scarlett. So ticker NCLH. Those shares are also doing well this morning, up more than 7% at the moment. And that's because we did get a Wall Street Journal report saying that activist investor Elliott Investment Management has built a more than 10% stake in the cruise ship company. It also reported that Elliott has been privately working with Adam Goldstein, who is the former president and chief operating officer of Royal Caribbean, as one potential board nominee at Norwegian. So remember that company has been through the ringer last week. On Friday, it fell more than 7% because there was an abrupt CEO change. They suddenly named John Chidsey as its president and CEO, and its former CEO, Harry Sommer, stepped down effective immediately. So a lot of questions over what happened there, but looks like this activist investment coming in from Elliott is boding well for the stock.
It's so funny. I mean, you just look at the performance in Norwegian on a trailing 12-month basis. It's down 12%, but its competitors, Royal Caribbean and Carnival, are both up 24%. So it's really underperformed its peers. And
yeah.
Wow.
Seems like a lot of idiosyncratic risk.
Yes. Interesting there. All right, General Mills.
Yeah, let's take a look at General Mills, so ticker GIS. That is very much in the red today. Those shares are down more than 7%. That is because we did get the company lowering its fiscal 2026 sales outlook, citing a weak consumer, heightened uncertainty, and significant volatility. CEO Jeff Harmening saying that cereal, snacks, and dog food, we're seeing the biggest hits from this shakier consumer environment. And our Bloomberg Intelligence analysts also weighing in. They're saying that, this adjustment really just reflects a slower and more promotion-driven volume recovery than they anticipated. And of course, the reset underscores that restoring sustainable dollar growth is going to prove more costly and more time-intensive.
Okay, very good. Christina Aquino, thank you so much for that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's switch gears to the healthcare space, and to do that on a Tuesday morning, we check in with Sam Fazeli, Director of Research for Global Industries and a Senior Pharmaceuticals Analyst for Bloomberg Intelligence. He's based over there in London. So, Sam, I see that Moderna and Merck, they're working together on a melanoma drug here, cancer drug. What's the status there?
Yeah, so Paul, thanks for having me back on. Look, they have a trial coming up, which is a very innovative approach to trying to treat cancer, i.e., I'm going to take a drug that releases your immune system, and at the same time, I'm going to give it stuff from your tumors so that it can recognize the tumors. Wow. So you got a vaccine. That's what a vaccine is, right? And the immunotherapy drug Keytruda that everybody's used to. And they've had some really strong phase 2 data that's come out. So what we've done here is that we've gone and have a look. That's one of the key catalysts for 2026. And everyone's waiting for this trial to read out as to what are the chances of, or what are the issues that this trial might face. That's our job, right? We look for problems, look for trying to measure up if there's any risk here. And we've identified 3. One is that the phase 2 data wasn't as easy to interpret because the control arm in it, that initial data that looked great, didn't behave as we thought it should have done. The second issue is that in the phase 3, they're enrolling some healthier patients. What is that can you therefore use the phase 2 to bridge your thoughts to the phase 3? And on top of that, here's an interesting part. Who makes COVID shots? Well, Pfizer, BioNTech, and Moderna. Another study showed that if you use COVID shots within 100 days of one of these immunotherapy drugs in cancer patients, they survive longer. They have better survival rates. What if that happened in the Moderna trial? The control arm has COVID shots in it, and that lifts up the survival if that data was correct. So all these things makes us a little bit worried about this data coming. And of course, Moderna has other issues to deal with, which I'm sure you're going to come up to, which is that FDA rejection to accepting their file for the flu vaccine, which blew my mind, I have to say.
Well, this administration doesn't like vaccines, period.
Yep.
So, and it's been a brutal flu season, right, Sam? I mean, it's not been kind. I mean, I think something like 22 million Americans have fallen ill to the flu.
Yeah, they have. And to be, Scarlett, the issue is now they're deciding what flu vaccine to give us in the US and Europe in a couple of months. They'll be deciding in 9 months' time. That's nonsense. This is the flu. These are viruses. They change all the time. I think we've learned that, right? Here's a technology that could have potentially enabled you, mRNA vaccines, to react much quicker, nearer the time when you know what strain you need to target. This could have been the approval that the world needs. I mean, in this world, we need to be able to deal with these infectious diseases. We've learned our lessons, haven't we? Unfortunately, the person at the head of the division of the FDA called SEBI made a decision unilaterally, by the look of it, based on what people have reported, that he doesn't want to review this file. Moderna had all the right things in place. They had discussed with the FDA. They had this allowance to go ahead. They did a trial that's in line with other people's trials. It just doesn't make any sense. And I tell you what, that really worries me about any company interacting with the FDA. How can you know that you're not going to get next week or 6 months or 10 months or 12 months down the road, a random rejection despite the discussions you've had?
So how are these big healthcare companies, pharmaceutical companies, biotech companies, how are they dealing with the FDA? Because it seems to be a very difficult relationship at the moment.
Look, Paul, only a week before, we were talking about the FDA showing its teeth when he came out and said Hims has to stop selling copycat drugs, which it had no right to sell. And now we have this. This uncertainty is a problem, and they're all trying to manage it. The larger companies can manage it because they have teams of people, etc. But it's the biotechs that suffer because they have limited amounts of cash on a relative basis. And we've had several of these things that have hit the block with regards to regulatory pushback, which you didn't expect to have. So it is a problem for the biotech sector more than the pharma sector.
Interesting. All right, Sam, thank you so much for joining us. Appreciate it. As always, Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst for Bloomberg Intelligence. He's based over there in London. Let's switch gears here, talk about the real estate business here in the United States. We can do that with Jeff Langbaum. He's the REIT analyst for the U.S. Is it all just data centers today, Jeff? Is that all people want to talk to you about? Because it seems like that's the AI play in real estate.
Well, that's one way to play AI from a positive perspective.
Okay.
But right now, what people are thinking about is what the impact is going to be on office space if AI makes all of these industries that lease office space irrelevant.
Okay.
What does that mean for demand for space? And you know, we saw last week that started with software and then it went to industry after industry and ended up with the real estate brokers and eventually the office REITs getting hit hard.
So far, this is just kind of fear that's wafting across the market. Have we actually seen any evidence of this happening?
Not yet. And in fact, we've seen some of the opposite. Leasing velocity has been at the highest level since before the pandemic in markets like New York and San Francisco. The REITs that we follow, names like SL Green, Vornado, Boston Properties, or now BXP, these guys are reporting very strong leasing volumes. We're starting to see occupancies tick up off the bottom in their portfolios. And one of the dynamics at play is that AI firms are leasing space as they grow. And to the extent that companies being impacted by AI start to recede a little bit, there's an offset there.
So your office REIT stocks last week sold off on this fear?
Yeah, and it's not a new fear. I mean, it's been at play for some time now. Work from home kind of worked its way through, and everyone kind of got comfortable with where hybrid kind of settled in, and then what was the next thing to hit office, and it was this, and it's been out there for probably a couple of quarters now. What is the impact going to be? But last week when software rolled over, it just compounded.
Is this something where, because of the evidence that companies are still leasing quite a bit of space, that we're going to see a just as sharp recovery?
Well, that's possible. But there's also the risk that the equity markets are
turbulent
and forecasting, right? And so there is the possibility that there will be negative leasing news to come. It's certainly not showing up in the numbers now. And we do think, and this is backed up by some survey work that we just did last week of office workers in both New York and San Francisco, we actually think that there's still a period of time to come where firms are actually leasing more space. They're expanding their headcount to try and figure out how to take advantage of AI and to grow their business. And that could actually, I don't know about a sharp snapback, but it could, prolong the positive vibes for some time.
What's the sector of the REIT market that you like the most right now?
Senior housing is I mean, it's the one aspect where you cannot refute the demand story at all, and at the same time, where real estate guys typically love to build, to take advantage of those demand stories, there's not much senior housing coming out of the ground. So there's a huge supply-demand imbalance.
Okay, but is senior housing more attractive in certain markets over other markets? How do you pick between winners and losers when it comes to senior housing?
It's really more about the local operator than it is about the specific market. I mean, obviously, if you're in a place where the economics aren't as strong and you don't have as affluent a potential resident base, then that's going to potentially impact. But strong local operators, when there's not a lot of supply coming out of the ground, and you basically just have an aging American population that is going to need housing solutions, it's really a play across the board.
30 seconds. Why isn't there the supply?
The cost of capital is still a little bit elevated, and it's tough to get. It's tough for developers to get capital and underwrite new deals to make sense.
Really?
Mm-hmm.
Man,
do you want to start putting capital to work?
Yeah,
I'm sure
absolutely.
there are developers who would take your money.
Private credit. I mean, I'll step in the breach there. Jeff, thanks so much for joining us. Jeff
On your last
Langbaum,
resort.
senior U.S. REIT analyst for Bloomberg Intelligence, somehow found his way to New York City. No idea how that happened, but we appreciate he's based down there in the Princeton campus where they have extraordinarily good lunches. It's been a long time since I've been down there. I know. I haven't been down there in years. Market's kind of coming back a little bit here. Got the S&P pretty much unchanged. The Dow's up 50 points, and the NASDAQ only down 8 points. So there you go, turning around there. We'll note the DXY, the dollar's a little bit stronger here today, 97.39. So anytime you get that 97, it feels a lot better than a 96. This is good.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm Nathan Hager in Washington with this Bloomberg Business Flash. It's brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Risk is taking a bit of a turnaround here. We're seeing some green on the screen now after the session started with a tech-led sell-off. We check the markets for you all day long here on Bloomberg, and right now the S&P 500 is just a touch higher, up about 5 points. The Dow Jones Industrial Average is up 0.2%, a gain of 94 points, and the Nasdaq Composite is kind of swinging between gains and losses right now. Right now it is up 4 points. 6 of the 11 main industry groups in the S&P 500 are in the green now, led by financials, but information technology, which had been among the biggest decliners in the session this morning, information technology right now is up 0.2%. Seeing a little bit of selling in the bond space. The 10-year Treasury is down 1/32, bringing the yield up slightly to 4.05%. Yield on the 2-year is at 3.43%. Shares of Bayer in Germany are higher by nearly 6%. Bloomberg News has learned the drug and chemical giant's making a $10.5 billion push to settle lawsuits tied to its Roundup weed killer. Michael Saylor's Strategy bought nearly $170 million in Bitcoin last week, roughly half of that financed with the company's perpetual preferred stock. Strategy shares are lower by nearly 2%. Checking Bitcoin, it's still in the red as well. It's down 1 2/3%. And Gemini Space Station, lower by nearly 13%. The crypto platform founded by the Winklevoss twins is parting ways with its chief financial officer, its chief operating officer, and its chief legal officer, effective immediately. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, Nathan Hager, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and on Bloomberg.com. Looking at the markets, a turnaround in the markets, as Nathan was just reporting. That's a pretty impressive from where we were earlier this morning. Victoria Fernandez joins us. She is Chief Market Strategist at Crossmark Global Investments, based down there in Houston. Hey, Victoria, I've been hearing a little bit more and more over the last several months of a rotation in this U.S. equity market from some of the big tech names, some of the names that had been the winners, to maybe some more value parts of the market, maybe even small and mid cap. How do you view that?
Yeah, I actually think it's pretty positive, Paul, that we are seeing investors not just come out of the market and go to cash. I mean, you remember when it was just tracking how much cash was sitting on the sidelines, and we kept seeing investors come out of the market. And we're not seeing that. They're going to some of the more laggard sectors that have not been doing as well. They're finding opportunities there, really coming out of some of those more liquidity-driven sectors. Tech, obviously, one of those. Bitcoin, another example of some of that liquidity-driven area that investors are coming out of. So the fact that they're staying in the market, finding some other places to put their money to work, I actually think bodes well for us.
One area they're not putting money to work is in Bitcoin. Cryptocurrency in general has not been a great bet since October of last year. And it begs the question whether this is really kind of a hedge, any kind of haven from equities, and because it kind of really trades like a proxy for tech in many ways. What are you hearing from investors when it comes to crypto as a diversifier?
Yeah, so crypto is not an area that we actually invest in here at Crossmark for our clients, but it's because, when we look at stocks, we're looking at things like looking at balance sheets, looking at cash flow. Those aren't things you can really measure with Bitcoin. And it's not that it's necessarily a safe haven. It's more that it's a liquidity component. So if you have a lot of liquidity in the market, Bitcoin seems to do better. It diverges a little bit from tech in that aspect. And as liquidity comes down, then you see Bitcoin come down as well, or crypto come down as a whole. You know that investors are turning more towards the commodity components right now. The gold, the silver, the copper, the zinc, all of these elements, I think, is where investors are looking now for more of what we might consider a safe haven in terms of growth globally increasing. They're going to look more that way. Crypto, again, I think is just it's a liquidity measure, and I think it's not where investors are looking to put their money.
Victoria, in terms of the CapEx associated with AI, I mean, it's been so widely celebrated for really 3 years, but now there's, I think, some questions out there about how it will impact productivity, for example, in this economy. How do you think about this we're a little bit later into the AI story now?
Paul, I think this is key for our economy going forward. And yes, it's the same component that really drove these tech stocks to higher prices. Everyone was so excited about the CapEx putting it to work that now is actually causing a concern for some of these companies as well. But the CapEx from the tech component is now starting to drift down into non-tech sectors. And that's the important part, because CapEx then drives productivity. And even though productivity can kind of be a double-edged sword, right? It can help hold inflation down, which is positive, but it can also move the neutral rate higher, pushing yields higher. So there's a little bit of a push and pull there. But CapEx, as long as we continue to get CapEx going into the markets, that companies continue to have earnings, and that we continue to have productivity, then you're really kind of sitting in an economy that even if the labor market starts to weaken, you're going to be okay. You're going to be able to make it through there. CapEx and productivity really are drivers of labor, and they're drivers of jobs. They have a large multiplier in our economy. So it's really a key component to watch coming out of tech into the rest of the market.
All right, we are pretty late into the earnings season here. We've heard from most of big tech, most of software, enterprise software, and it's now the retailers' turn to start reporting. Walmart will begin reporting on Thursday. What's the setup here going into these consumer companies, these retail companies' results, given where sentiment is right now?
It's really kind of hard to tell, Scarlett, because we have such mixed data that's coming our way, right? You have some retailers that are saying, look, we're gaining market share, lower income and higher income consumers are spending here. Walmart is a perfect example of that. I would expect that's going to continue to be their story when they report, and that they will probably have a very good quarter as more and more people go to discount stores. You see things like Dollar General continuing to do well. So I think that's going to kind of be the story. You're going to see high-income consumers that have been driving the economy trade down more private label names, and you're going to see the low-income consumer really pull back a little bit, and that is actually flowing into the middle-income consumer now. B of A came out last week and said now they're starting to see the pullback in the middle-income consumer like they were the lower income, and that's a little bit concerning. We've got some retail sales numbers last week that were not great, and so I think there's going to be concern around the consumer. As long as they can keep those profits growing, the companies should be okay. But we'll get a really good glimpse this week at these consumer-facing companies, see what they say on earnings.
Victoria, this is an election year, and a lot of folks are warning us, get ready for volatility. Election years can often have higher levels of volatility. Are you concerned about that? Have you positioned for it? How do you think about that?
No, I think you have to be prepared for the volatility that's coming. And yes, you're right. In an election year, you typically have quite a bit more volatility. Historically, you actually have a pullback around the middle of the year in the upper teens, right? 15 to 18% pullback. Not that you end the year like that, but you do have that volatility around the middle of the year as some of the elements, the growth elements in the economy were already priced in earlier in the year. You're waiting to see what comes next in order to push the economy forward. And obviously, as we get towards election, there's a lot of headline news that comes out that can make the markets move. So yes, you look at cyclicals, you look at defensives. These are kind of elements where you might want to put a little bit more to work in your portfolio, some staple names in there to help buffer some of the volatility. And some of these more conservative sectors that have been lagging are now in uptrends. And so it's actually a good opportunity to go into some of those areas.
All right, Victoria Fernandez, thank you so much. Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments, joining us from Houston. We need to check in on what's going on in Washington because, as always, there's a lot of developments. And, Paul, you look at the fact that we have a partial government shutdown yet again. I mean, that's just kind of one side of it, but it feels like that's kind of a constant at this point.
Right, exactly. And then we still have, some issues going on the geopolitical front. I guess most notably of many out there is Iran is now back on the front burner. I'm just reading some Bloomberg News reporting at Washington, D.C. Iran's diplomats are prepared to stay in Geneva for days or weeks to finalize a nuclear deal with the U.S. So maybe we're making some progress there. So
yeah, let's check in with Tyler Kendall. She is our Bloomberg Washington correspondent and is in our D.C. bureau. So Tyler, what does it mean when Iran says it has agreed to a general agreement with the U.S. On some kind of nuclear deal?
Well, Scarlett, you're definitely picking up on the nuance there, which is that this is considered to be relatively positive progress on the diplomatic front. But essentially, Iran is saying that the two sides have agreed to keep talking. We have yet to hear from the U.S., get a readout from their side of things, though Axios is reporting that U.S. officials said that the talks went, quote, as expected. Now, at the moment, it's our understanding that these bilateral talks, the second day wrapped up today between the U.S. and Iran in Geneva, are solely focused on Iran's nuclear program. The main question appearing to be whether or not Iran will be allowed to maintain any domestic enrichment capacity for its nuclear program. The thing is that we have repeatedly heard from U.S. officials, including perhaps most notably the Secretary of State Marco Rubio, is that the U.S. wants to see these talks evolve beyond just nuclear capabilities. They also want to talk about Iran's ballistic missile program, as well as its support for those proxy militia groups in the region. In fact, that is partly why our own analysts at Bloomberg Economics say they still think it is highly likely that we could see U.S. military action against Iran, because just focusing in on that nuclear file is likely not enough for the Trump administration to ultimately sign a broader deal down the road.
And at the same time, I see reporting that the Islamic Revolutionary Guard has resumed Navy drills in the Persian Gulf, which will partly close the Strait of Hormuz for several hours. So is that a negotiating ploy on their part? How concerned should observers be?
Well, this was actually previously announced military drills, so there was some expectation by the U.S. that this was going to be coming. But pair that with some of the rhetoric and messaging that we've heard from Iran's leadership, and it is, I think, fair to say that it is likely being taken as Iran trying to bolster against the U.S.'s own military threats. We know that there has been a huge movement of U.S. military assets to the region, including now the deployment of a second U.S. carrier strike group headed for the Arabian Sea, as the White House maintains, of course, that diplomacy is their first option, but they have not taken that potential for military strikes off of the table. Paul, we shouldn't get ahead of ourselves. Anything ultimately could happen, but the Strait of Hormuz, of course, as you well know, is going to be one of those really critical factors to watch. And if the U.S. does ultimately choose to strike Iran, our analysts have repeatedly said that doesn't necessarily mean that we would see any lasting change when it comes to the oil market, but how Iran centers any potential retaliation around the Strait of Hormuz is ultimately what's going to be that indicator on whether or not we would see a broader disruption to global oil flows.
Right, and right now we're looking at WTI and Brent, both lower right now, with WTI just below $63 a barrel, Brent just holding above $67 a barrel. Tyler Kendall is our Bloomberg Washington correspondent, joining us from our D.C. bureau. Coming up, a conversation with Sean O'Hara. He's president of Pacer ETFs, on where investors are choosing to put their money when it comes to ETFs. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm Nathan Hager in Washington with this Bloomberg Business Flash, seeing renewed volatility in the market. Stocks kind of looking for direction now after a tech-led sell-off had shown some anxiety over the outlook for artificial intelligence. We check the markets for you all day long here on Bloomberg. Right now, the S&P 500 is just a touch in the green, higher by 3 points. The Dow Jones Industrial Average is up 0.1%. The NASDAQ Composite is down 0.1%. BlackRock investment management analyst Russ Kestrich says this market is confused.
My own view is I don't think we're looking at a recession. The labor market report was very solid. We're seeing manufacturing rebounding. In general, most of the economic indicators are fairly solid. And if anything, some of the concerns we had about the labor market 1 or 2 months ago, maybe they're a little bit less acute today.
Well, right now, 6 of the 11 main industry groups in the S&P 500 are in the green, led by financials and real estate. Energy and consumer staples, right now, they are the biggest decliners, both of those down more than 1.5%. The 10-year Treasury is little changed at 4.05 for the 10-year yield. The yield on the 2-year is at 3.43%. Bitcoin's down 1.5%, trading shy of $68,000 a token. COMEX gold is down 3%, just shy of $4,900 an ounce. Shares of Bayer in Germany, they're up more than 7% with word of a Roundup settlement push now official. Monsanto says it has reached a $7.25 billion agreement to resolve future and current claims that Roundup causes cancer. And Palantir Technologies is the latest big tech firm to move to Miami. The company announced on X it's moving its base of operations from Denver. Billionaires Ken Griffin and Stephen Ross have funded a $10 million drive to get more executives, investors, and founders to make South Florida their home. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's your Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, Nathan. It adds to that narrative, Paul, of a Wall Street South.
Yep.
That idea that South Miami could be
exactly.
where financial services really center their business. All right, let's talk a little bit about the markets from the perspective and through the lens of ETFs. Sean O'Hara is president with Pacer ETFs, and he joins us now. Sean, we often talk about flows into ETFs, inflows, outflows. How much correlation is there? What is the cause and effect between flows and price action? Do flows precede price action?
I think they come, first off, hi, Scarlett. I think they cause price action. You have to think about an ETF just like an individual security, right? Even though there might be 50, 100, 200 individual stocks in an exchange-traded fund, or 500 in the case of the S&P 500, the composite value of all of those at any given point in time will have an effect on the price. So when you are buying and selling individual stocks, if there's more selling pressure than buying pressure, prices go down. If there's more buying pressure than selling pressure, prices go up. So they're somewhat connected.
They're somewhat connected, and I bring this up because obviously there's been this rotation out of software companies with this AI scare and a lot of movement into other sectors, whether it's cyclicals, whether it's international stocks. People just want to get out of software's way. However, Bloomberg Intelligence has noted that IGV, an ETF that tracks software companies, has seen inflows since January 21st, and in fact saw record daily inflows on February 4th and February 5th. So that suggests that there is dip buying that may lead to a reversal in that price action.
Yeah, and we're seeing flows as well into Traffic, which is one of our ETFs, which basically owns everything inside the data center, which includes software and chips and networking and some of the cooling infrastructure. So the shift in this market is really one from momentum and low quality, which has been sort of the dominant factors over the last couple of years, to high quality or value. And we've seen that in our flows, and we've seen that in the performance of our ETFs. And then the other thing that's going on is that there's a great deal of new flow going into international across the board. It's global, international, emerging markets. We're starting to see bigger flows into that part of our ETF lineup as well.
Yeah, that's kind of where I wanted to go, Sean, because we saw last year real outperformance in rest of the world, many parts of the rest of the world versus the U.S. markets. That's continuing this year. Are you seeing that?
Yes, we are. And it's really basically two things. One is there's been a disconnect in performance, relative performance of international versus US. The US stock market has obviously been the 800-pound gorilla for a long time here. And so, anytime you get that big of a disparity in terms of valuations and performance, I think we sort of always regress to the mean, if you will. But the second thing that's driving the performance on international has always been the dollar. As the dollar weakens, international performance does better because you get that tailwind, unless you've hedged away your currency exposure. So we don't do any hedging at Pacer on currency on international. So we're getting not only that performance from the underlying individual holdings, but we're also getting a little bit of a tailwind as the dollar has been weakening.
All this movement into outside the U.S., into international stocks, are people looking into passive funds, or are they going active and really picking their spots?
Well, we're big believers at Pacer that we don't want to own the whole index. What we want to do is be very selective about what we own. So in the cash cow suite of our ETFs, which is like GCow, iCow, and eCow, we screen for free cash flow yield, and that's basically a value metric. We launched a product earlier last year with NASDAQ. We'd asked them, why isn't there a NASDAQ 100 for international? And they said, well, that's a good question. Let's figure out how to build one. And so we built an ETF patent, PATN, that basically uses intellectual property and patent value to identify companies. And so you wind up with a much different portfolio than the broad indexes. People need to keep in mind that Europe and international, those broad indexes are always heavy financials and heavy asset stocks. And so those are not necessarily the stocks that have the greatest growth potential. So there has been a great deal of flow into the broad-based ETFs that track, the EFA or EEM. But we're believers that, over the long run, you have a better chance to make higher returns by being very selective about what you own and not owning the whole thing.
Sean, what are the flows look like in fixed income?
That's one of the areas, if I had to tell on ourselves a little bit, we're sort of weak in that area. We're starting to see pickups. We've got a couple of products in filings. But, the short-term fixed income trade has been one that has been very, very popular amongst people. You're talking about, bank loan funds and CLO type funds. There's been a great deal of money going there. We're starting to see some flows into our bank loan product, the ticker's FLRT, and some flows into corporate bonds as well, particularly with the way that we use it, because we're about 300 basis points higher on the yield. So I think as you start to think about this market, if you're an investor, you've done very, very well for the last 3 years. But we are at an elevated PE level, and I think people are starting to think about, taking part of their portfolio and seeking alternative places. So fixed income ETF flows have always been solid, but most of it has really been this ultra short end of the yield curve. We'll see what happens with the current, environment where, the short end is now around 3%. That may push people out the curve a little bit. So you might see some longer maturity fixed income sales come in just because you can get a little higher yield there.
As someone in the ETF industry, I'm sure you keep a pretty close eye on the new launches and the kinds of new ETFs that different issuers are coming up with. What's been the outstanding trend so far?
I think there's a big trend in the ETF land towards what I would call structured product type ETF launches. We have a series of buffers, and buffers have been popular, and there's lots of folks that do that. But you're starting to see different payout profiles that would typically be in a structured note start to proliferate a little bit into the ETF world. And there's an auto call ETF that was launched a while back that's taken in some assets. We filed one ourselves, or we will be filing one ourselves. I don't know whether we actually had. So I think you're seeing some of these payout profiles, some of these, sort of buffered strategies or anything that you would do in a structured note becoming more and more popular in the ETF world.
Sean, thanks so much. Appreciate it. Sean O'Hare, he's president Pacer ETFs, joining us there, talking about what we're seeing in the markets and the fund flows into ETFs. But it's just been, the ETF story has just been an extraordinary story over the last decade, I think.
Right, because it's a wrapper. It's not a call on the market at all. It's just a way for people to get in and out, and the liquidity has been proven out.
Yep. Absolutely.
So
And it's
they'll offer up whatever you want based on your style and your preference.
Yep, and it's cheap beta, as Eric Balchunas would say, when you go into the Qs and VOOs and all that kind of stuff.
Absolutely.
And then there's the hot sauce that you can play with around the edges, and that's what a lot of folks do with the ETF space. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in New York City in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube and we're streaming live on Bloomberg.com/videos. You can find all the live and curated video that Bloomberg cranks out on a daily basis right there at that video hub. Well, New Orleans is preparing for parades and crowds for its Mardi Gras celebration today, but it's also confronting a financial crisis with a deficit estimated at $222 million in its operating budget. Let's get the latest on that from Ashna Shah, municipal finance reporter for Bloomberg News. She joins us live here in our Bloomberg Interactive Broker Studio. A couple of years out of UNC Chapel Hill. What a game that was. You saw the Duke Carolina game, right?
Yeah, it was amazing.
Heartbreaking for me, but a great. I was happy for the kid who made the shot. He seems like a good dude. So we'll see you guys in Durham in a couple of weeks. Talk to us about New Orleans here. Boy, with all the tourist revenue, I would think they get. I'm going to get my hotel bill from a night in New Orleans, like 27 different taxes on there. But they have an operating budget shortfall, right?
Yes. So, you know, behind all the glitz and glamour of Mardi Gras, there is some financial issues that are going on right now. Like you mentioned, $222 million deficit. And, you know, as I did my reporting and talked to a lot of city officials, a lot of them have the previous mayor's administration to blame for this. So we have a new mayor that came into office in January, and she took on this deficit. And a lot of it, you know, dates back to the COVID era money that all the states and cities received at the time. You know, New Orleans received hundreds of thousands of dollars. And what they did with that money is they used it for increasing city government staff, recurring expenses, adding programs, and really propped up their day-to-day budget with the COVID funding, which now, you know, we're seeing a couple years down the line after the pandemic, we're really seeing that play out for different states and cities. And New Orleans is at the middle of that right now.
So what's the proposed solution?
So what they're doing right now is basically everything's on the table. I chatted with the budget chair, and she was saying that new tourism taxes could be on the table. So you just mentioned, you know, there's already lots of tourism taxes in place, but currently they don't make any taxes off of the concessions at the Caesars Superdome, which is where the Saints play.
Okay.
So that's on the table. New alcohol taxes, hotel stays. So that's an option right now. And then also what the city started on Sunday actually was that they're doing furloughs for city council or city employees. And so if you make a certain amount of money and above, you could be subject to up to 22 days of furlough days. And that's for the whole year. And it's basically on a scale based on how much revenue or how much money you make each year. But that's 22 unpaid days for a city council employee potentially.
So that's on the cost-cutting side here. Wow, it's amazing. So are there municipal bonds outstanding for the city of New Orleans?
You know, I don't know that, but I know that they do have lots of other, you know, budget gaps to cover. They spent a lot of money over the past couple years, and they have to reel that in by cutting, you know, they've cut, you know, city council employees, cutting programs, and that's a big concern for New Orleans right now because they have to do these cost-cutting measures. But before the state steps in, they're worried that, you know, if it does ever come to that, the state could cut programs, could cut employees, programs that are important to the community, because at the end of the day, New Orleans is a blue city in a red state.
Blue city in a red state. Okay. So what is the state saying? Because, you know, just here in New York City, we know, and people come to understand it when they move here, that the state of New York has a big impact on on how the city operates. The mayor has to deal with that. What has the state of Louisiana said about what they want to do with New Orleans?
Well, so New Orleans went to the state and issued a $125 million payroll loan at the end of last year, and that was to cover outstanding expenses, cover payroll costs, and so that loan is going on right now and is supposed to be repaid in May. But I spoke with the budget auditor, or the state auditor for Louisiana, and he said that he's expecting New Orleans to have to issue another loan in the future, and they could continue doing this until they fix the budget problem.
So is there anything structural here that, like, a solution-wise, is there any kind of, like, doomsday, we have to, I don't know, cut our budget in half or something like that? I mean, is there anybody talking about that? But that would presumably require incredible political capabilities.
Yeah, I think the front thing right now is using this payroll loan to really reel in expenses, cover costs. They did have to use a portion of this loan to cover police retention bonuses. The previous mayor's administration had promised retention bonuses to police officers for 3 years in New Orleans because there was a retention problem. And this year is the third and final year of those bonuses. And about 2 weeks before the new mayor took office, they learned that there is not enough money left for those bonuses. So they had to use a portion of this loan for the retention bonuses, which was not anticipated when they first took this loan out. So they're going to have to figure out a way to curb other costs, or, you know, like I said, they're going to have to take out another loan in the future.
I'm reading your reporting here. Overspending on overtime further deep in the crisis. The auditor found the city budgeted $57,500 last year for overtime, presumably for police, but ultimately spent an estimated $50 million, more than half on police. That's an oops.
Yes.
I mean, it seems like you need some smarter people in there who can balance the budget a little bit.
Costs definitely increased after the terrorist attack that happened in January of last year on Bourbon Street. But you're right, you know, they accounted for, you know, $57,500, and to have a $50 million overspend budget, that definitely contributed to the overruns.
All right, Ashna, thank you so much. We appreciate that. Ashna Shah, municipal finance reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment with markets turning around here. We got a little bit of green on the screen here. The S&P's up 7 points, the Dow's up 70, and the Nasdaq is up 6 points. Yields 10-year Treasury 4.05%. More Bloomberg Radio coming up right now.
This is CBS News on the Hour, your home for original reporting.
I'm Stacey Lynn. In Chicago, a crowd is growing outside the Rainbow Push Coalition to remember the Reverend Jesse Jackson, who died at age 84.
I'm going to miss him, everything that he stood for us as a people.
Reporter Darius Johnson is there.
I spoke to one woman earlier this morning who came here before daybreak, who really wanted to come here because she wanted to honor him as a leader, a man who she believes made way for so many people of color.
Because of all of them, you are able to go downtown and work at these jobs and not be maids and not work on trains because of all of these civil rights leaders.
Jackson's family says he died peacefully early this morning, surrounded by those he loved. This just in, the U.S. military says 11 are dead in strikes on alleged drug smuggling boats in the eastern Pacific Ocean and the Caribbean Sea. According to U.S. Southern Command, no U.S. military forces were harmed. The search for Nancy Guthrie continues in Tucson, and officials say there have been between 40 and 50,000 leads in the case. But former NYPD Detective Herman Weisberg warns
any kind of firsthand information that could be, given to these tip lines is important, but you have to also take a step back and make sure you're not wasting the time of the people scrutinizing those tips.
At a high school hockey game in Rhode Island, the teams were on the ice when gunfire rang out in the stands. CBS's Lilia Luciano has details.
The two people who were killed were the shooter's ex-wife and it seems one of the shooter's adult children. Police did confirm this was a targeted shooting where the shooter might have had some family disputes or altercations in the past having to do with the shooter's gender identity, that there had been threats to kick the shooter out of a home.
Michael Wallace reports Jill Biden's ex-husband has pleaded not guilty to first-degree murder.
77-year-old William Stevenson is accused of killing his current wife, Linda, during a domestic dispute in their Delaware home in late December. Police have not said how he killed her. Stevenson has been in custody since his February 3rd arrest. He's been unable to post his $2 million bail.
And CBS's Katie Weiss has had a big Mardi Gras celebration in the Big Easy.
It's electric out here in New Orleans. I'm right along South Claiborne Street, where most of the parades for Fat Tuesday will be starting out their routes. Some of the bands are already warming up. They're getting ready to march in an over 8-mile-long parade route.
Checking Wall Street markets are moving. The Dow is now up 24 points. This is CBS News. A delivery man in New England has seen better days.
It was a rough day on the job for a UPS driver in Connecticut. He had to dodge a couple of wild turkeys as he dashed door to door in an apartment complex, tucking packages under his arm like a football and sprinting back and forth to his truck. The antics posted to TikTok have gone viral with millions of views. Deborah Rodriguez, CBS News.
A new artificial intelligence video generator from ByteDance, a creator of TikTok, is getting slammed by Hollywood organizations. They say Dance 2.0 blatantly violates copyright and uses the likeness of actors and others without permission. Dance is only available in China. It lets users generate high-quality AI videos using simple text prompts. Stacey Lynn, CBS.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Shuttle diplomacy reaches a whole new level. Welcome to the Tuesday edition as Special Envoy Steve Witkoff and presidential son-in-law Jared Kushner take part in nuclear talks with Iran at the table in Geneva today before crossing town to enter peace talks with Russia and Ukraine. We'll get the latest on these parallel negotiations when we spend time with Adam Ferrer at Bloomberg Economics. The Department of Homeland Security has now been shut down for 4 days. There's still no deal, and we'll get the latest from Jonathan Tamari at Bloomberg Government. And as early voting begins in Texas, the first votes of primary season, we'll have the latest from our political panel, Bloomberg Politics contributor Jeannie Shanzano and Republican strategist Ashley Davis, all after a look at Wall Street. Let's get up to date on the Fat Tuesday trade with Nathan Hager here in Washington. Hey, Nathan.
Yeah, hey, Joe, we're looking for some direction in the market. Now, there's still this anxiety around whether you want to call it the AI disruption trade, the AI scare trade, what have you. Right now, stocks are looking for some direction. Victoria Fernandez, chief market strategist at Crossmark Global Investments, says with this renewed volatility, she's just glad to see investors aren't staying on the sidelines.
They're going to some of the more laggard sectors that have not been doing as well. They're finding opportunities there, really coming out of some of those more liquidity-driven sectors. Tech, obviously, one of those. Bitcoin, another example of some of that liquidity-driven area that investors are coming out of. So the fact that they're staying in the market, finding some other places to put their money to work, I actually think bodes well for us.
And we check the markets for you all day long here on Bloomberg. Right now, the S&P 500 is unchanged, hovering between gains and losses. The Dow Jones Industrial Average is up 39 points. That's a gain of almost 0.1%. The NASDAQ Composite, just a touch in the red now, down 18 points. That is a decline of 0.1%. Right now, 5 of the 11 main industry groups in the S&P 500 are on the rise, led by financials and industrials. Information technology, which has seen so much of the selling over the last few weeks, is in the green by 0.33%. The biggest laggard right now, consumer staples, down 1.8%. We heard from one of those big companies with earnings this morning. General Mills is down nearly 8%. The maker of Cheerios cut its sales outlook for the year, citing higher inflation, lower food aid, and geopolitical uncertainty. Right now, the 10-year is down 1/32. The yield at 4.05%. Yield on the 2-year is at 3.43%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager in Washington. That is your Bloomberg Business Flash. Joe Matthew.
All right, how about it? We got Nathan Hager aboard today for at least the next hour. Thank you for joining us on the Tuesday, feels like a Monday edition of Balance of Power here on Bloomberg Radio, streaming live on YouTube. You see what Nathan looks like. Get to YouTube, search Bloomberg Business News Live. We'll save a seat for you here in the studio, unless you're already watching us on Bloomberg Originals. We'll have more on the markets coming up in about 15 minutes' time with our eyes set on Palo Alto after the closing bell. 1 week from today, it's going to be all about the State of the Union. Yeah, 1 week from today. Big stuff. The president's, well, I guess it would be his fourth, right? He did the speech to the joint session of Congress last year. Now it's an actual State of the Union. And the big narrative today in Washington is it will happen with or without the shutdown. We're in day 4 here, and I have no news for you, by the way, other than the fact that there was a counteroffer to the counteroffer. There's no deal. We'll get into it a little bit later on. You knew this was the case. We set you up last week. Everyone's gone, lawmakers, for the next week, so don't hold your breath. There might not even be a deal when they get back. And if you're headed to the airport, just give an extra thanks to the TSA agent who gets you on board. President says he is on board with the speech. He was asked about it on Air Force One. Well, I think I would, yeah, Trump said. Wouldn't bother me. He was asked as well about important talks getting underway. And depending on who or what you are reading, you will think that this is either make or break with Iran. Today, missiles will fly at the close of business if it doesn't work out, or it's just another round of lower-level indirect talks in Geneva. They talk about peace all the time over there in Switzerland. Not to mention the other event that's taking place across town. So if you're Jared Kushner or Steve Witkoff, you're saddled up again. And it's not just Iran. They're not even leaving town. They'll be in one building for this conversation, and then they will get in a car and go across town to another negotiating table, which involves Russia and Ukraine. The president on Air Force One asked about both, talking with reporters on his way back to town. Listen.
I'll be involved in those talks indirectly. That they'll be very important. We'll see what can happen. It's been typically Iran's a very tough negotiator. They're good negotiators or bad negotiators. I would say they're bad negotiators. Well, like big talks, it's going to be very easy. I mean, look, so far, Ukraine better come to the table fast. That's all I'm telling you.
The president at the back of the jet, where it's pretty hard to hear what he said, if you're listening on the radio here. I'll be involved in those talks indirectly. He is referring to Iran there. Then you kick down to Ukraine. They're big talks. It's going to be, so far, Ukraine better come to the table fast. That's all I'm telling you. So we're back to that with Ukraine. He was disappointed in Vladimir Putin a couple of weeks ago. And it's Zelensky who's apparently not coming to the table now. Incidentally, Zelensky's doing an interview. I'm just looking at headlines crossing the terminal. Ukraine to discuss Russia-held nuke plant in Geneva. Surprised by changes to the Russian team for talks. This is a good time to dial up Adam and see what he's thinking. Geoeconomics analyst at Bloomberg Economics. These guys spend all day modeling around these possibilities. And he's, of course, become a reliable voice on this program. Adam Farrer, hope you had a long weekend because we're back to it here. Just so we understand how we should be framing, let's start with Iran. Is this make or break or just another day of a very long negotiation?
So it certainly seems that we're on the beginning elements of a long negotiation from the comments we're hearing, certainly from the Iranian side, and then indirect comments that are coming out potentially from the U.S. side, although there has not been an official reaction yet from Steve Witkoff or Jared Kushner as to what happened today and what they actually agreed to or didn't agree to. And so from the Iranian side, we got a long statement, but at the end of the day, what we got was agreement, talks for future talks, right? The idea that they will come to terms on what the talks will be about and go back and forth in writing as to the details. And so just a lack of clarity on what, if anything, was agreed to moving forward, right? With the big question on the table on the nuclear program, on whether enrichment is really, whether the U.S. administration is willing to allow Iran to enrich uranium, which Iran sees as its right. And then, of course, this overarching question on their ballistic missiles and defense capabilities, which Iran sees as its only real deterrence against both the United States, but particularly Israel. And Israel sees as a red line for their own security. And so we just don't have any details right now as to where either of those stand.
It's kind of amazing. We do these meetings. You never get a readout. You kind of have no idea. And then there's a Truth Social post or there's a leak to or a statement to media, in this case, Axios. Barak Ravid on the case. I'll tell you what, 2 sirens on this tweet. A U.S. official tells me progress was made in the talks with Iran, but there's still a lot of details. Proposals will be provided by Iran, detailed proposals, in the next 2 weeks. Are they trolling Donald Trump? 2 weeks?
It certainly seems like the timeline has pushed out considerably from
Well, he loves 2 weeks, right? It's always in 2 weeks.
He certainly has brought up 2 weeks in this direct context before,
Yes,
right?
yes,
And I think, we saw strikes very shortly afterwards. And over the weekend, following the announcement from the president that a second aircraft carrier was moving to the region, we also saw additional deployments of U.S. forces moving out of Europe and other parts of the world to the Middle East least further increasing the U.S. defense posture there. So there's no doubt that the U.S. is prepared for military action or is preparing for a larger strike. The question right now is whether the president has made that decision or whether he is also seeking more time to build up forces and hopefully reach an off-ramp, because the risks here are higher, and that Iran might take this opportunity, seeing itself backed into a corner, to actually lash out, particularly on the shipping in the Strait of Hormuz, that could impact global oil prices quite significantly, with over 20% of oil flowing through that region.
I need to ask you about Ukraine, but it's important you mention that. Parts of the Strait of Hormuz will be closed for several hours. I don't know if this is done today or if this is still in process. As part of Iran's military drills, what's the purpose of this message? Obviously, this is all part of the negotiation.
Yeah, I think it's relatively transparent what they're doing here, right? They're reminding the United States, but also the world, right, exactly, that they have capabilities, that they may be down, but they are not out, right? And they've built out this large asymmetric capability that's designed specifically to shut down the strait, using anti-ship missiles, but also just small attack boats to complicate.
So they're not
any naval
mining
presence.
the strait. This is a different approach.
No, not right now. I mean, they certainly have plans to mine the strait if they
Okay.
need to, and that would be a major problem, right, for both U.S. military operations, but more importantly for markets, global shipping and particularly oil shipments.
So Kushner and Witkoff get up from the table, presumably get some refreshments. They've got a couple black SUVs waiting for them out there. They cross town to the next meeting, Russia and Ukraine. This is amazing to me, the words we just heard from Trump. Ukraine better come to the table fast. That's all I'm telling you. When were they put on the back foot? I thought he was upset with Putin.
So as you already stated, right, it seems like we've gone in this cycle again, right?
Yeah.
And we've pivoted to the other end of it, where the pressure from the president is back on Ukraine. And we heard it towards the end of last week as well, but reiterated again today, that he seems to see the problem, the major roadblock to peace right now being Ukraine itself. And, because certainly we know Ukraine is coming to the table. Ukraine is at the talks today and has been at the other trilateral talks that the United States put forward. But the problem, the persistent problem, is this intractable question of territory, particularly the Russian demand that Ukraine hand over large elements of eastern Ukraine that they have not taken militarily. And this broader question of security guarantees long term, of what guarantees does Ukraine have that they can protect themselves and maintain even that border in the future if Russia actually does seek more territory and more wins over time.
We don't have much more than a minute. Do we have any idea? This line that Donald Trump, it depends who he spoke with last. I guess somebody didn't like Zelensky has been in his ear, but do we know where he is seeking counsel? Is it Marco Rubio? Is it his national security advisor?
So it's always the question.
It's not the latter.
It certainly doesn't seem like it would be Marco Rubio, who has certainly taken a more traditional and nuanced perspective on these talks and trying to push forward a little bit more classically anti-Russian position. So I would say we don't know right now as to where he's hearing this. It is possible that it's simply a question of the readouts he's getting from Witkoff and Jared Kushner, who he trusts implicitly.
And Witkoff calls him at night, right?
That's
they
right.
talk on the phone, so it might be something like that.
That's right. We know that Witkoff hears a lot from the Russians and often relays their positions directly to the president.
We won't get a readout on this meeting, presumably either, right? Other than the Truth Social feed. Is that what you're watching?
Yep, we're watching very closely.
It's on the terminal, by the way. Adam, thank you so much. Adam Ferrer with us to get things started from Bloomberg Economics. We'll let you know what we hear from that second meeting as we work our way through this Tuesday in Washington. Thanks for joining us on Bloomberg.
From the Bloomberg Interactive Broker Studios, this is Nathan Hager with your Bloomberg Business Flash, watching this red headline cross the Bloomberg terminal. New York City Mayor Zoran Mamdani is proposing raising the city's property taxes for the first time in more than 2 decades and is looking to raid the city's reserve funds to fill a roughly $5 billion budget gap. Mamdani will make his pitch this afternoon as part of his preliminary budget proposal. New York City Comptroller Mark Levine says, quote, of Mamdani that he's put a pretty extreme option on the table. As for the market, we're seeing a bit of a turn here, back in the red for the most part. We check the markets for you all day long here on Bloomberg. The S&P 500 right now is down 5 points. That's a drop of nearly 0.1%. The Dow Jones Industrial Average is down a point. The NASDAQ Composite is lower by 0.2%. That is a drop of 51 points. The 10-year Treasury is little changed for a yield of 4.04%. Yield on the 2-year is at 3.43%. Home Depot is getting a little bit stricter when it comes to its bonuses as the DIY giant faces a tougher business environment. Bloomberg News got a look at a memo showing the company's raising its minimum sales performance target from 90 to 95%. Those who hit it will see an adjusted payout of 25% of the target. That is down from 50% in the old bonus structure. Home Depot shares right now are down 2%. And Ford is out to prove it's not done with electric vehicles just yet. The automaker went on a social media blitz this morning, talking about how it shrunk its battery, squeezed nearly 50 more miles of driving range out of it to get a mid-sized electric pickup on the market next year, starting at $30,000. That would be about $20,000 less than the average new vehicle in this country. Right now, Ford shares, they're lower by 0.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nathan Hager. That's your Bloomberg Business Flash, Joe.
All right, Nathan, thanks for the update on the tax situation in New York. We'll bring you more on that as we learn it from Mayor Mamdani. It is budget season after all. Thanks for spending part of your Tuesday with us. I know it feels like Monday. I hope you had a long weekend, but if you didn't, we missed you yesterday, and we're back to it here on Balance of Power, the Tuesday edition, on the radio, on YouTube, streaming live. Search Bloomberg Business News Live. In about a half an hour from now, we will welcome our global television audience to the conversation. As President Trump steps in a pile, or in this case, a gusher, in what is, if you live around here, one of the biggest local stories in Washington, D.C., you might even smell it if you're close enough to the Potomac River. This is like the top story while you're eating breakfast and you look at the news going on here. Consider this. One of the largest sewage spills in U.S. history is taking place right down the road from where I'm sitting, right down the road from the White House. Think of this as the Valdez of sewage spills, or better yet, the BP oil spill of poop. Where's Ed Markey when you need him? Remember that thing was gushing oil out of the floor of the Gulf for not days, but weeks. The same thing's been happening over here, and it's not oil coming out of the pipe. You go back to, I believe it was the 19th of January. A pipe burst, putting thousands of gallons of raw sewage into the Potomac River. Kristi Noem, the, of course, Secretary of Homeland Security, which is closed now for 4 days and includes FEMA. Those FEMA workers have been dispatched now to go and work on this. Talk about thankless work. Kristi Noem warning the leak imperiled the entire D.C. region's water supply. And you would think so, right? But it turns out, in fact, well, facts are stubborn. Local drinking water comes from upstream the leak. So bottoms up. See a lot more people reaching for bottled water around here. Now, I mention all of this because this has been going on. You haven't heard me complain about it. The president is now involved. On Truth Social, Maryland, Virginia, and Washington, D.C., who are responsible for the massive sewage spill in the Potomac River, must get to work immediately, he writes. If they can't do the job, they have to call me and ask politely to get it fixed. The federal government is not at all involved with what has taken place, he says, but we can fix it. Remember, even in that case with the Democrat shutdown, we have to bring in true patriots to do the work now because many are not working right now. These Democrat-caused disasters, both river and shutdown, he says, will only get worse. He refers to it as a radical left-caused environmental hazard. With all their talk about carbon footprints and everything else, allowing hundreds of tons of sewage to pour into the mighty Potomac, making it much less mighty. They did, by the way, this thing is, it's called the Potomac Interceptor. How is everything so dramatic? A 200 million gallon spill of raw sewage discovered almost a month ago now. They've been testing the water, and I believe the E. coli levels are about 250 times beyond the legal limit. Water samples taken from a site downstream. More than 250 times the recreational limit, according to data posted by DC Water. And all the local officials are saying, boy, it's not my fault. They bypassed this thing and put it in the C&O Canal, so it's not pumping directly into the Potomac. So if you're sitting outside on date night at Fiola Mare, I'll be like Trump here. Darling, what can I get you? Maybe a place that doesn't smell like poop, honey. Perfect view of the Trump Kennedy Center from there. This is not what Jonathan Tamari thought he was coming on to talk about, and I'll apologize in advance to Jonathan, but there is a very important link here. And yes, it's FEMA. Those workers who are being dispatched over to the river to try to close off this big gusher are not getting paid. And that's because the Department of Homeland Security is shut down. You see how it all comes full circle here. Jonathan Tamari joins us live from Washington at Bloomberg Government. You know, the president was asked about this, Jonathan, on Air Force One last night, talking about the need to reopen DHS and the debate that's taken place when it comes to ICE restrictions proposed by Democrats. Here's what he said.
Are you going to sit down with Democrats this week on DHS funding, sir?
I will, but, you know, we have to protect our law enforcement. They've done a great job. I just got finished saying that we have the best crime numbers we've had in many years, and on murders, 125 years. And that's despite a lot of people that shouldn't have been let into our country coming into our country, criminals, many, many criminals. But we've taken out tens of thousands of people, brought them back to their countries.
Well, so they're still talking. Congressional Democrats have submitted their counteroffer to the counterproposal to the original offer to the White House. We're not sure exactly what's in it. Maybe Jonathan's taking a look. Again, our senior Washington reporter at Bloomberg Government. You swim in the Potomac, Jonathan, or no?
I certainly did not before, and I'm definitely not going to start now. I will say that. And I will say that image you just evoked of the Valdez of sewage, that is going to stay with me for quite a while, especially as we approach lunchtime here. Thank you for that. That is going to stay in my mind. Thank you.
Fantastic. It's the least I could do. And if you're with us on 99.1 here on this lunchtime in the nation's capital, we'll always have this moment together. So is the president's going to do the State of the Union a week from tonight with or without the shutdown? Is that what we think?
Yeah, it sounds like it's going to be with or without the shutdown. You know, the president does not turn down many opportunities to have the spotlight. And I think if this shutdown is still going on, he'll probably use it as a chance to criticize Democrats over the effects of the shutdown. But it's interesting, you know, when you look at some of the polling that's out right now, immigration, traditionally one of Trump's strongest topics, traditionally one of Democrats' weakest topics. But his polling has really dropped on immigration, and the polling on the reforms that Democrats are proposing, or what they would call reforms, is very strong. So it's a rare moment where Democrats feel like they have the upper hand on this issue. Republicans don't want to give ground. And so this is why we're sitting here, and I'm coming to you from the office and not from the Capitol, because there's not a lot of movement and there doesn't seem to be a lot of incentive for movement right now.
Fascinating. So are the sticking points the same? We don't know what's in this counteroffer to the counteroffer from Democrats, but demasking and tighter use of judicial warrants seem to be deal breakers right now. Is that still the case?
It is. Those are kind of deal breakers on both sides. Democrats say there's no deal without them, and Republicans say there's no way that they're going to vote to allow those things. So you've got both sides saying that they have red lines that are diametrically opposed, and both sides kind of thinking that the politics is in their favor. So there is not a lot of urgency that we're sensing right now to end this anytime soon, as, again, evidenced by the fact that no one from Congress is even here in Washington right now.
Right. Are they getting an earful at home? I mean, you talk about lawmakers going home and getting a little taste of reality from the constituents. But I'll tell you what, I was walking in here, Jonathan, you look at the front pages of any major newspaper, this isn't even mentioned. We know that ICE is funded through the big, beautiful bill. So does this have urgency outside the Beltway or not?
Not really, not right now. I mean, not only is ICE funded, but a lot of the other departments that are not getting funding, a lot of their personnel is considered essential. So that means that they have to keep working even through a shutdown. Folks at TSA, folks at FEMA, as we've discussed, they're going to work without pay. And some of them, their paychecks are already on the way. So they're not even going to miss paychecks until sometime next month, which is maybe then when you start to see the effects of maybe people start calling out. People don't want to show up to work if they're not getting paid. And maybe there you see it, but there's not a lot. So, I mean, we just went through a shutdown of pretty much the full federal government that went for more than a month. We're talking about one single department right now. There isn't that fire under either party to really cave right now, and they both see important political messaging in this issue.
There was an effort by Rosa DeLauro that I know has not been embraced by members on both sides, in fact, to just carve out ICE funding, reopen all of the rest of DHS, including FEMA, TSA, Coast Guard. That's going nowhere, though, it sounds like, because then no one has any leverage, right?
Right. Republicans don't want to do that because they feel like once everything else is funded, then Democrats really don't have any incentive to vote for ICE whatsoever. They need to package those things together. And that's where I think Republicans hope that eventually this issue kind of comes around their way, where some of the things that happened in Minneapolis, the 2 shootings, the 2 killings that happened there, get further and further in the rear view. And then people maybe start looking at TSA agents not getting paid, FEMA officials not getting paid. And then Republicans say, look, they're holding up all these other people while ICE is still operating, and kind of blame Democrats for depriving, federal workers of their paychecks. Then that is maybe a way that this turns around as time goes on. So Republicans aren't going to break ICE out separately as much as Democrats wish that would happen.
Interesting. We even found some Democrats, including Debbie Wasserman Schultz, who didn't want that to happen because they thought they'd have I think less leverage in the end. Not that she said it quite like that. Jonathan, we've got less than a minute. What happens when they come back? I mean, are there going to be negotiating sessions, or it's just a stare-off?
I think we'll see where kind of things stand at the end of this week. If maybe the trading of papers gets them somewhere where maybe over the weekend they can get a deal that they can vote on next week. I'm sure both sides would eventually like to move on, but I think we'll have to see what plays out this week. If not, I mean, during the last shutdown, the Senate continued doing other legislation like just normal, moving nominees and such. So it could be that they just kind of move on while these talks happen in the background. And as you said, they're not really driving the news, the front pages right now.
Maybe they could figure out how to fix that pipe. Jonathan, thanks for coming in. I appreciate it, as always. Reporting for Bloomberg Government, Jonathan Tamari, live in Washington. He's not on Capitol Hill, but the Capitol Police say they just arrested a person who appears to have a gun near the west front of the Capitol building. We'll let you know as we learn more.
I'm Nathan Hager in the Bloomberg Newsroom in Washington with this Bloomberg Business Flash, watching another bout of volatility in the market. Traders are struggling to assess the outlook for artificial intelligence after a broader sell-off, whether you want to call it AI disruption or an AI scare trade. Ed Yardeni of Yardeni Research says he sees it as AI fatigue.
People are just totally tired of the AI concept. They don't know whether they're coming or going with it. They don't know whether it's going to be wildly profitable or not. And I think another thing that's entered here is, Elon Musk has been talking about how deflationary the combination of AI and robotics is going to be. And so we've got all that happening.
Ed Yardeni of Yardeni Research. Right now, the market is going back into the red. We check the markets for you all day long on Bloomberg. Right now, the S&P 500 is lower by 0.1%, down 6 points. The Dow Jones Industrial Average is little change to the downside. It's down 17 points. The tech-heavy NASDAQ Composite down 0.3%. That is a decline of 60 points. Right now, 5 of the 11 main industry groups in the S&P 500 are in the green, led by financials. Information technologies just hanging in there with a 0.1% gain. The biggest laggards right now, energy and consumer staples. 10-year treasuries, little change. The yield at 4.05%. Yield on the 2-year, 3.43%. Paramount Skydance shares are higher by more than 6%. Warner Brothers Discovery has given Paramount 7 days to renegotiate. Paramount's now offering $31 a share for the whole kit and caboodle. That's up from $30. That compares to Netflix's $27.75 for Warner's Studios and HBO Max. Right now, Netflix shares are down almost 1%, I should say. Palantir Technologies, the latest big tech firm to move its headquarters to Miami, a pretty big government contractor. The company announced on X that it's moved its base of operations from Denver to South Florida. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager in Washington. That's your Bloomberg Business Flash. Joe Matthews in Washington as well.
Indeed, Nathan, thanks for joining us today. It's been a pleasure to have Nathan Hager with us here on this Mardi Gras 2026. It is not only Fat Tuesday, it is also a big day in the world of politics with the first votes being cast in this primary season. This is it, right? This is day one. Early voting begins in Texas. 10 days worth as we work our way to the primary on the 3rd of March. And, we've talked this up and down. This could be one of the most expensive, if not the most expensive, and certainly the most dramatic Senate race in the country this season. And look, if you enjoy this kind of stuff, this is going to be high entertainment, in some cases for all the wrong reasons. But the fact is that we're going to be heading for a runoff, it looks like. Depending on what happens here with the primary itself, March 3rd again, the runoff would follow on May 26th if nobody clears 50%. And based on the polling we're seeing, that's probably not going to happen. So Cornyn, Paxton, Hunt, that's your three-way race. And this is going to be a doozy, unless, of course, President Trump gets involved, and people keep asking if he's going to endorse in this race. And it sounds like, well, yeah, but he's going to endorse everyone. You've seen this before. Here's the president on Air Force One.
I just haven't made a decision in that race yet. It's got a ways to go, and he's a good man. John is I like all three of them, actually. I like all three. Those are the toughest races. They've all supported me. They're all good, and you're supposed to pick one. So we'll see what happens.
They're all good. Can't go wrong. The John, of course, is John Cornyn. He's being asked, are you going to support the incumbent, Mr. President? The longtime senior senator from Texas? He says, well, I like them all. I like all three. So this is creating a bit of an issue here. Not that that's the only race in Texas, but this is the one that's going to take all of the attention, of course. Ken Paxton, of course, the Attorney General here last night announcing an illegal voting tip line for the primary, so it's on. As we assemble our political panel, Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us, our democracy visiting fellow at Harvard Kennedy School's Ash Center, and Republican strategist Ashley Davis is back, partner at S3 Group, former special assistant to the Director of Homeland Security. It's going to be great to hear from both. We've got a great panel today. Great to see you both. Ashley, I want to start with you in Texas because I'm starting with the Republican primary today. Is Donald Trump going to pick one of these gentlemen, Because it looks like we're going to a runoff. Maybe he waits for May to start naming names. What do you think?
Joe, that's what I'm thinking. He probably waits and sees what happens, after March 3rd. Obviously, as you just said before we came on, that it's going to most likely go to a runoff. You have the polling showing that Paxton and Cornyn are within the margin of error, Paxton up 2, Cornyn up 2, depending on what poll you look at. But to me, which is really interesting, is Wesley Hunt's polling like 20%, which is super strong for him. I would think, though, what's going to happen after March 3rd is that Paxton probably doesn't make the runoff, and then you have Hunt doesn't make the runoff, and then you just have Paxton versus Cornyn, and that will be going into March 26th, and that will be a much clearer race. Lots of people that I talk to in Texas that are my former colleagues are, Cornyn's great. He's been around for a long time. They think Paxton's not great, and they like Wesley Hunt, but there's just absolutely no way to get him over the finish line at this point. So,
Interesting.
I think Cornyn's
in a
stronger.
statewide race, though,
Ashley.
Ashley. Oh, that's Cornyn. Okay, interesting. Because, you play this statewide in Texas, and Paxton sounds a lot more like a MAGA candidate than John Cornyn, right? I mean, you still go advantage Cornyn in a two-way race.
I do, but here's why. I think people think that Paxton has a lot of baggage. And if you talk to any Democrat, they would much rather want to run against Paxton than Cornyn, obviously, for obvious reasons. But just like we would probably most likely run against Crockett. But I really think that people still look at Paxton's history and think of him as maybe not a really good person, even though he is more MAGA. But if it's a two-way race and then Cornyn performs pretty well, maybe that's when Trump does end up endorsing. I mean, I can't predict. No one can.
Sure. No, absolutely. It's going to be a heck of a Truth Social whenever that comes out. Jeannie, let's talk about the Democratic primary. And by the way, this Tallarico story on CBS is wild. This is the night before Netflix suddenly has to wait to hear Paramount with it. But let's just focus on what we're talking about here. Stephen Colbert booked James Tallarico, the Democratic candidate. He's a state lawmaker. We've had him on this program a couple of times, to join him in New York at the desk. Apparently, CBS told him he was not allowed to do that because of equal time laws at the FCC, which have been left on the side of the road years ago, but we'll acknowledge that. And so what they had to do, Jeannie, is just put it on YouTube. It didn't make the program. And as Colbert said, FCCU, Brendan Carr. But the fact is, you know how this works, Jeannie. That'll get way more views than something that was scheduled on CBS TV last night that may or may not have gone noticed. Now it's the banned interview, right? I can only imagine what'll happen to the clicks. And as I read here, in the Democratic primary, Jasmine Crockett, the congresswoman, is leading with 47% of the vote, 39% Representative James Tallarico. How are you viewing this contest?
I'm smiling, Joe, because I'm so happy to talk about election season beginning. So thank you and Ashley very much. I'm very happy. It's been a doozy. This is one of the good things that has happened to Tallarico. CBS should ban interviews more often, I'm sure, as far as he's concerned. Certainly, this interview would not get nearly the looks that it will now that it's been quote unquote banned. And of course, this has been a really tough and personal race. You guys were just talking about on the Republican side, but on the Democratic side, you've had charges online of racist statements made by Tallarico. He says they weren't made. You have a former candidate in Colin Allred endorsing Crockett. You've had a lot of concern amongst moderate Democrats that if Crockett wins, she can't win. But I think, just like when Ashley was talking about the Republican side, where it's sort of this, moderate center of the road versus MAGA, in the Democratic side, there can be surprises because, Crockett, for all of the challenges people say that she is running and saying, I can bring out the vote. I can increase voter turnout amongst the base. She's like the Donald Trump of the campaign versus Tallarico, who's saying, I will reach to the middle. I'll pull those independents and those moderates, and maybe Democrats will, for once in a century or something, win Texas. It's all a very uphill battle for the Democrats, but it really depends, on who wins on the Democratic side and who wins on the Republican, because, of course, Crockett versus somebody like Paxton is far better for the Democrats' traditional thinking goes than it is going to be Tallarico versus somebody like a Paxton.
Who's a better candidate statewide in the primary? Is it Tallarico?
In the general, that's the traditional thinking. But Joe, I'm so over traditional thinking at this point, because every time we go there, it seems to blow up in its face. And I think you cannot deny what a really accomplished politician Crockett is. But again, a lot of that depends on, can she get people out to vote and who can she run against? And of course, Tallarico comes with his own baggage. Now he's got a little support from Colbert and the CBS, so that's a good thing for him.
I guess so. He had Joe Rogan on his side a couple months ago. We'll see if that remains the case as we spend time with our panel, Jeannie Shanzano and Ashley Davis, the beginning of early voting. I'm psyched for campaign season as well, you two. Just spend too much time here in the bubble. But we have to talk about a major story that a lot of people woke up to this morning, and that is the passing of Jesse Jackson, 84 years old, surrounded by his family. Of course, a prominent civil rights leader and somebody who ran for president a couple of times, remembering this DNC speech in 1984.
I'm more convinced than ever that we can win. We have fought up the rough side of the mountain. We can win. I just want young America to do me one favor. Just one favor. Exercise the right to dream. You must face reality, that which is, but then dream of the reality that ought to be, that must be.
Some 2 decades, even more, before America elected its first black president. Jeannie, what are your thoughts on not just the legacy? You're going to hear a lot about that today. I don't even know what that means all the time when we talk about politicians, but the impact that he had on the Democratic base was what?
Enormous. I mean, I think in the later part of the 20th century, there's nobody on the Democratic side who had was a bigger force. He changed, you heard the beautiful oratory there. He ran for president twice. He was a civil rights icon working with Martin Luther King. He worked overseas, but what he did in terms of impacting Black public officials running for office and seeing themselves as people capable of running for office, so many of them say today that they were told as children to repeat the phrase that he made famous, I am somebody. And that was what helped them catapult into elected office or into leadership writ large. And he was not just a great orator, he was a great political mind. Without him changing the way that we manage and count delegates on the Democratic side and proportional representation, there would be no Barack Obama. So in all ways and every ways, he changed things. He wasn't perfect, but his impact is enormous, including 2 sons who have either been in or are running for Congress. That's quite a legacy.
Yep, that's right. And Jonathan Jackson is still reporting for work on Capitol Hill. Ashley, he, of course, was a Democrat. There's no doubt there. But Jesse Jackson impacted politicians around the political spectrum as a black man in this country, running for president, mounting a serious campaign before that was considered mainstream.
Absolutely. And I also think, Joe, one of the things that Jeannie was talking about what he did for Black individuals and public leaders across the country, but also remember in 84 and 88 when he ran, he also went and was able to bring in the poor white people as well. I mean, there's an iconic picture of him in Iowa with sitting on a tractor with a bunch of white farmers around him. But I think that something, and people have kind of been talking about this today as well, is kind of that economic populist message that actually, ironically, Trump taps into as well. But he did that. He was the first to do that. And he was a brilliant communicator. He was somebody that was able to really utilize, obviously, his gift of being able to message, but also the media. If you think about 84, 88, and, there forward, up until maybe Barack Obama, JFK, maybe early, a little earlier, they were not, he was able to get the populist message across differently than anybody else.
Really interesting, and appreciate both of your thoughts on that. Ashley Davis and Jeannie Shanzano, our great political panel today, will be back in hour 2 as we welcome our global television audience. Jesse Jackson, surrounded by family, as I mentioned, died Tuesday. He had disclosed in 2017 that he had Parkinson's disease. He was 84. I'm Joe Matthew. We'll have much more straight ahead here on Balance of Power, only on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Iran asks for 2 more weeks. Welcome to the Tuesday edition as Iran responds to nuclear talks underway earlier today in Geneva, happening a short distance from talks on the war in Ukraine. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us here on the Tuesday edition. We'll have more on this shuttle diplomacy Kaylee, when we talked to Evelyn Farkas at the McCain Institute, both meetings are now wrapped.
Yeah, it's a busy day if you're Steve Witkoff or Jared Kushner,
That's
who,
for
of
sure.
course, are leading the charge for the Trump administration on both of these issues. Interesting, though, for Iran to say it has reached a, quote, general agreement with the U.S. on the principles of a deal that would see, of course, changes around their nuclear development program in exchange for sanctions relief. The question is, what does general agreement really mean, and how close are we to actually having a hammered out deal, as President Trump still has a second aircraft carrier group en route to the Middle East?
And the promise of a more detailed proposal in 2 weeks' time does sound very on brand for Donald Trump. The second meeting they went to, and again, this is just across town in Geneva, has already wrapped up. Seems to have been a fairly short session. The president saying it's time for Volodymyr Zelensky to come back to the table, making us wonder exactly what the motivation is now.
Yeah, putting more pressure on Ukraine as he keeps his focus on geopolitics, but also on issues here at home. We should note, as we come to air on this Tuesday, the government is partially shut down. The Department of Homeland Security ran out of funding at midnight on Friday. No sign yet of a deal anywhere close to making that funding reenacted once again. We'll have more on that later this hour with Democratic Congresswoman Dina Titus of Nevada.
Be curious to hear where we're going with this one. Lawmakers are gone for the week, so this will not be solved, Kaylee, anytime before next week. So don't hold your breath.
Won't hold our breath for that, but we'll hold our breath for a look at these markets as we kick off the trading week after the holiday. And for that, we turn to Nora Melinda, who's checking on them from New York. Hey, Nora.
Hey, Kaylee. Well, it's 2:01 here on Wall Street, 1:01 p.m. here on Wall Street. We check markets for you all day long at Bloomberg. I'm taking a look at the S&P 500 lower, hanging around that 6,800 level. We are seeing shares of a lot of the tech companies lower. We're seeing the NASDAQ 100 down by about 0.5%, while the Dow Jones Industrial Average slips about 0.1% lower. Taking a look at some of these treasury yields, we do see that the benchmark 10-year treasury yield is just below 4.1%, while the policy-sensitive 2-year treasury yield is hanging around 3.4%. We've got gold and silver sliding this afternoon. Gold hanging around that 4,800 level, while silver is around $73 per ounce. We're also keeping an eye on a few of those individual movers. I mean, of course, the fight over Warner Brothers Discovery continues. Warner Brothers agreed to reopen negotiations with Paramount Skydance after Paramount proposed both raising its bid and sweetened other terms of its offer. Netflix has granted Warner Brothers Discovery 7 days to weigh Paramount's proposal. Still, Warner Brothers is recommending its shareholders vote in favor of the already binding agreement with Netflix. And over at Norwegian Cruise Line, that's ticker NCLH, shares are jumping. That's after activist investor Elliott Investment Management built a more than 10% stake in the company. They also sent a letter and presentation to Norwegian Cruise Line urging changes to unlock what it believes is more than 150% upside for shareholders. And lastly, Southwest Airlines, we're seeing that in focus higher by about 6% after UBS upgraded the carrier to buy from neutral, noting that there is upside potential from the company's extra legroom and assigned seating initiatives. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, Nora, thank you so much. Checking out the Tuesday trade for us. And Joe, you know, it's Tuesday, which puts us exactly 1 week out from the State of the Union address that President Trump will give to a joint session of Congress. Yes, it's just 1 week from now, happens to be the day after lawmakers return from their recess. And my question is, will he be addressing the room with part of the government still shut down, with Department of Homeland Security still not funded after midnight Friday came and went and no deal was made between Republicans and Democrats over ICE reforms?
You know, he was asked about it on Air Force One. He said, I think I would, wouldn't bother me. Wondering exactly how he would play that. Some think it's a bad look to be up there with one agency closed, but he could also use that as a hook to castigate Republicans or Democrats rather and blame them for not working with Republicans. So either way, we're going to be up there live, and this will likely be a doozy with a lot to talk about. We should mention that Democrats have come back with a counter offer to the counter proposal. We just don't know, Kaylee, what's inside.
Yeah, we never got the details of what the White House countered with. Usually here in Washington, if people are quiet about the details, it may mean that actual progress is being made. But we know that the Democrats had a long list of demands that they initially put forward. And the question is going to be, how much will the Democratic base allow them to pull back on what they asked for and find some kind of compromise here? How much is the White House, on the other hand, willing to give in terms of compromise?
Well, let's check in with Tyler Kendall for the latest on this. Thomas, Bloomberg's Washington correspondent, joins us now live in our Washington bureau with her eyes as well on the meetings underway in Geneva. Let's start with DHS, Tyler. 4 days. We knew we would start this week with this agency closed, and I think we know we're going to start next week with it closed as well. The big sticking points remain the same. Nothing has changed. Demasking and judicial warrants are non-starters on both sides of the aisle, it seems.
Right, exactly. We haven't really gotten much insight into how either side is going to ultimately need to compromise to reopen the Department of Homeland Security, home to nearly 260,000 federal workers. But it almost feels eerily quiet here in Washington. I don't know if you guys feel that way, but Congress is on recess for at least the next week. So to your point, these are going to be negotiations that end up dragging on. Now, my inbox last night lit up late in the evening because we did hear from Senate Minority Leader Chuck Schumer, who confirmed that Democrats have sent over their counter proposal. But to your point, we haven't really gotten momentum on what those non-starters essentially for Republicans are ultimately going to shake out to be, right? We know that the White House is in favor of body camera mandates, for example. We've already seen that put into place by DHS, but those other things like new warrant requirements and what's been called demasking, having federal agents remove their masks during immigration enforcement procedures, doesn't seem to be something on the table. And Joe and Kaylee, this goes to Republicans' initial push that they really wanted to see this compromise be done through executive action, have President Trump put through some orders. But at the end of the day, Democrats are holding firm. They need to see some changes codified into law.
Yeah, they want to see legislation, though we know President Trump does not shy away from executive orders. In fact, it happens to be one of his favorite policy tools, if you will. President Trump, while focused on domestic issues like keeping all of the government agencies funded, also has had a great deal of focus on geopolitics, as we well know, in a variety of different theaters, Tyler. But the ones we're focused on today, because they both happen to be centered in conversations taking place in Geneva, Switzerland, are talks with Iran and over ending the war between Ukraine and Russia. This is how President Trump characterized it yesterday.
I'll be involved in those talks indirectly. That they'll be very important. We'll see what can happen. It's been typically Iran's a very tough negotiator. They're good negotiators or bad negotiators. I would say they're bad negotiators. Well, they're big talks. It's going to be very easy. I mean, look, so far, Ukraine better come to the table fast. That's all I'm telling you.
So I'm not sure what we think about his indirect involvement, how direct that may be, Tyler, but knowing that Iran has said there is a general agreement here and in 2 more weeks we should have further details of a potential deal, what do we really know?
So we have to take this into the broader context that essentially what we heard out of Iran today is that they're agreeing to more talks. The talks didn't go off the rails, which is seen as a relatively positive development when it comes to the diplomatic option being pursued. And it appears that the biggest question on the table right now is what is going to be the future of Iran's domestic enrichment capacity related to its nuclear program. That seems to be the #1 crux of the talks at the moment. The thing is, we have repeatedly heard from U.S. officials, perhaps most notably the Secretary of State, Marco Rubio, who says that these talks need to expand beyond that. They want to see on the table Iran's ballistic missile program, also its support of regional proxy militia groups. And at the moment, it doesn't seem like they're going to end up broaching those topics. And in fact, our own analysts at Bloomberg Economics have said the fact that this has been limited to what they are calling the nuclear file, that's probably not going to be enough of a concession for the Trump administration. So they are still keeping in their assessment the likelihood that we could see military strikes down the road. And as you both know, we've seen escalation just in recent days, this bolstering of military assets, another carrier strike group going into the region, and Iran, of course, closing part of the Strait of Hormuz for pre-planned military drills.
So that's the first part of what he was talking about there with Iran. When you move to the talks also in Geneva with Witkoff and Kushner, another meeting that has now concluded here, he said, Ukraine better come to the table fast. That's all I'm telling you. Or what? It'll be occupied by Russia? Isn't that already happening?
Pretty interesting statement from President Trump. Perhaps
we thought he was upset with Putin most recently.
Perhaps goes to that mounting frustration that we have seen from the White House that there hasn't been this breakthrough. Pretty remarkable just in and of itself that we're seeing these dual back-to-back negotiations in Geneva led by Special Envoy Steve Witkoff and the president's son-in-law Jared Kushner. I think it's fair to say that the consensus going into these talks was relatively low in terms of what sort of progress we would see, because we saw strikes just last night. The Ukrainian Ukrainian president posting in a social media post that there was nearly 400 drones and 29 missile attacks earlier today. Ukraine did confirm that it had targeted an energy infrastructure facility on the coast of the Black Sea. So we've really seen this escalation, sort of this pullback from what the White House had been touting as progress. We can say that in recent weeks there had been progress, in particular about security guarantees. That was one of the two biggest sticking points on the table. That appears to be relatively resolved. The U.S. has put forward really strong security guarantees, according to our reporting. But the issue of territory, and we heard from the Ukrainian President Zelensky earlier today, they're going to talk about this very important nuclear power plant in that eastern Donbass region. The issue of territory, it feels like we are just very far from any sort of agreement.
All right, Bloomberg Washington correspondent Tyler Kendall, thank you so much. And on both of these conflicts and their potential resolutions or lack thereof, we turn now to Evelyn Farkas, Executive Director of the McCain Institute, also former Deputy Assistant Secretary of Defense for Russia, Ukraine, and Eurasia, who's here with us now on Bloomberg TV and radio. Evelyn, it's good to speak with you again. If we could just begin with Iran, given that was the set of talks that happened first with Jared Kushner and Steve Witkoff. This notion of there being a general agreement, an agreement to do another round of talks once we've exchanged some finer points of a potential deal here. How much should we be encouraged by that, knowing all the while en route to the Middle East right now is another carrier strike group?
Yeah, I mean, I don't think that I would put too much stock in it, in the sense that when President Trump has two carriers off the coast or, you know, within striking range of Iran, it usually means he's going to use force just based on past recent experience a la Venezuela. So I think that President Trump is pretty much leaning towards using force. The Iranians don't want him to use force. So of course they've agreed to some kind of framework. But I'm not sure that we should be encouraged that the end is in sight, because the Iranians were pretty dug in about limiting the agenda to nuclear, whereas we were pretty adamant that the missiles should also be included. And of course, that it has immediate implications for the potential use of force. You can see the Iranians saying, well, if you're going to strike us, we want to have a capability to defend ourselves.
Is that why we need 2 more weeks? Evelyn, Axios reporting that is the word from Tehran. We will have detailed proposals in the next 2 weeks. What will they do at that time?
Yeah, I mean, they're clearly trying to make sure that the carrier, battle group can't be utilized or at least to try to put pressure on the White House not to use force before the 2 weeks are up. And we know that the second carrier will be in place at the end of this week. So President Trump is not going to want to wait 2 weeks. And so it does, again, it puts pressure on the White House. Now, what is the White House going to do? Because use of force is not something that's widely popular inside the United States, and certainly not inside of MAGA. And so if it's President Trump, if he's seen as preemptively using force when the Iranians seem to be willing to negotiate, that's a little bit of a political problem potentially for the White House.
Well, but it may not be as much of a problem if you're Israel or Prime Minister Benjamin Netanyahu, who was here in Washington meeting with President Trump on the issue of Iran last week. Evelyn, how much do you think Trump's decision-making will be influenced by what Netanyahu does or does not want when it comes to the ballistic missile program and other issues?
Yeah, it's interesting. I'm not sure what the answer to that question is, because we know that, Prime Minister Netanyahu has been trying to, put pressure on President Trump to use force, I think. And then at the same time, the Gulf allies have been pressuring President Trump not to use force. I think President Trump is probably taking his own counsel. I'm not sure that he feels beholden to Israel in any way. I think he does want to bring about political change in Iran, and certainly he wants to eliminate the threat that's posed to Israel and others by Iran's nuclear and missile capability.
Let's turn to Ukraine for a moment. Evelyn, are you encouraged by what you're hearing, or are you concerned that the president is turning on Volodymyr Zelensky once again?
Yeah, I mean, this is the same dynamic, Joe, over and over again we see, where President Trump is verbally pressuring Ukraine. Ukraine has already compromised with itself, in effect, through all the negotiations the White House has held, the meetings the White House has held with Ukraine to get them to a position, the most minimal position that they could accept. And at the same time, the White House has not put pressure on Russia. And of course, because of that, in part, Russia has not compromised. So it's time for the White House and the president to put pressure on Vladimir Putin. I think, once again, they will find that they have been disappointed by Russia at the negotiating table.
Pressure in what form, Evelyn? What would actually be effective in getting Putin to change his mind around a war that he has now been pursuing relentlessly for 4 years next week?
Right. The first step is putting, basically signing the sanctions legislation that I understand. I was in Munich at the security conference this past weekend with Senator Graham. He's feeling really good about his bill, the Graham-Blumenthal sanctions bill, being put on the floor of the Senate for a vote. Obviously, we know that the House also would have to have a comparable bill. We know that there are the votes to get it passed, to get it on the desk of President Trump, and it's so high on the Senate side that the president can't veto it. So that would give him a real, card, if you will, that he can use against Putin to say, we're now sanctioning your oil and gas, and we're putting secondary sanctions. We're putting sanctions on those countries that buy your oil and gas, and that will hurt Putin because he's already having to draw down his foreign reserves in order to keep this war going. That's one. And then, of course, providing more assistance to Ukraine, more military assistance, getting more of those shadow tankers off the high seas. There are many things that we could be doing to put pressure on Russia.
I'm sure this is part of your discussions in Munich. Evelyn, just back from the Munich Security Conference, where the Secretary of State, Marco Rubio, was looming large this year following Vice President J.D. Vance's speech in Munich last year that really rubbed our European allies the wrong way and kind of set the stage for some of the difficult conversations we've had with our European allies. John Micklethwaite, our editor-in-chief here at Bloomberg, sat down with Secretary Rubio to talk about his approach. Here's what he said.
The Vice President said last year very clearly was that Europe had made a series of decisions internally that were threatening to the alliance and ultimately to themselves, not because we hate Europe or we don't like Europeans, but because what is it that we fight for? What is it that binds us together? And ultimately, it's the fact that we are both heirs to the same civilization, and it's a great civilization, and it's one we should be proud of. It's one that's contributed extraordinarily to the world, and it's one, frankly, upon which America is built.
So do some reporting for us here in our remaining moment, Evelyn. What was the feel on the ground? Was Secretary Rubio looked at as the good cop to J.D. Vance's bad cop?
Largely speaking, Joe, yes. I think people did take a sigh of relief because the tone was markedly different. And he did say, we're going to be together. However, and that was kind of in the moment. However, subsequently, as you know, some of the coverage of what Europeans have said when they took a look at the transcript, when they looked at what Secretary Rubio said a little more closely, they questioned, what does this mean, civilization? And I think if you interpret it as a shared adherence to the rule of law, going back to Magna Carta and all of that, I think that the Europeans would feel good. If it means something more, akin to a kind of white colonial interpretation of our history, then people feel a little less reassured. But overall, I would say the feeling was
Evelyn
positive.
Farkas at the McCain Institute. Megan, thank you. This is
It's 1:21 here on Wall Street. I'm Norma Linda. We check the markets for you all day long here at Bloomberg. Yet another volatile day on Wall Street. Traders are struggling to weigh the outlook for artificial intelligence, growing increasingly concerned that big tech companies will keep borrowing until it hurts in the battle to develop the most powerful AI. Taking a look at the S&P 500, we are seeing it just below flat, down about 0.8%, or less than 0.1%, excuse me. The NASDAQ 100, we are seeing lower by about 0.3%, while the Dow Jones Industrial Average also slides just below flat. Taking a look at some of the volatility in the market, take a look at the VIX index hovering near the 21 handle. We've got the benchmark 10-year Treasury yield just below 4.1%, while the policy-sensitive 2-year yield is hanging around 3.4%. We've got both gold and silver falling in trading this afternoon. Taking a look at gold, we are seeing it at $48.78 an ounce, while spot silver is at $73.29 an ounce. We're also keeping an eye on some of the individual movers. Life sciences company Danaher, DHR on the ticker, agreed to buy medical equipment firm Masimo in a deal worth $9.9 billion. This transaction is expected to be completed in the second half of next year and should allow Danaher to gain a foothold in the medical supply business. Over at Wendy's, shares of Wendy's are back in the red for the biggest intraday decline since May 2022. Its earnings report on Friday produced a volatile reaction from traders, and we see shares of Wendy's today down as much as 10%. And finally, Sonoco is jumping for double-digit returns after the packaging products company reported fourth quarter EPS that topped the average analyst estimate. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Norma Linda, and that's a Bloomberg Business Flash.
All right, Norma Linda in New York checking on the markets for us. Thank you so much. Meantime, here in Washington, we're checking on the status of the Department of Homeland Security. And yes, it remains shut down, though actually, the vast majority of the 260,000 people that department employs are classified as essential workers. So TSA agents working without pay, members of the Coast Guard as well. FEMA, of course, a question here as President Trump says he'll be mobilizing FEMA to help fix a sewage issue in the Potomac River just down the road from where Joe and I are right now. But yes, the agency is technically not funded, hasn't been since midnight Friday when the deadline passed for Democrats and Republicans to reach an agreement on ICE reforms in order to agree to keep funding going and these people paid. The question is, 4 days on now, are we getting any closer to some kind of agreement on this? We understand that the White House has set back a counter to the counter proposal that Democrats, or I guess a response to the counter proposal. How many counters have there been now? There's been multiple. The question is, are all these counter proposals making any real progress? And where does President Trump stand in all of these conversations? He was asked about it on board Air Force One just yesterday.
Are you going to sit down with Democrats this week on DHS funding, sir?
I will, but we have to protect our law enforcement. They've done a great job. I just got finished saying that we have the best crime numbers we've had in many years, and on murders, 125 years. And that's despite a lot of people that shouldn't have been let into our country coming into our country, criminals, many criminals. But we've taken out tens of thousands of people, brought them back to their countries.
Well, as he speaks to protecting law enforcement, there's still no breakthrough on protecting law enforcement with the demands that are coming from both sides when it comes to demasking, questions about warrantless raids. No progress has been made since lawmakers, easy for me to say, left town at the end of last week. So let's see how the panel is feeling about this. Bloomberg Politics contributor and Democratic analyst Jeannie Sheehan Zaino is with us, democracy visiting fellow at Harvard Kennedy School's Ash Center, and Republican strategist Ashley Davis is with us, partner at S3 Group. It's great to see you both here. Ashley, what's your thought right now on these items that seem immovable at the moment? If we're still calling these non-starters when lawmakers return, how do we open the department that you used to work for?
Well, I still think they're unmovable as of right now. I really don't think there's pressure pressure is what's going to open this up. I think the first pressure point will be actually February 27th when some of the individuals that work for parts of DHS will lose some of their paychecks. The issue is, as we all know, and we've talked about millions of times, the ICE and CBP are going to be funded. They're already funded through the One Big Beautiful Bill. There's TSA and even USCIS is also fee-based funding. So a lot of their agency will continue to get some of their funding through the fees that they collect. And FEMA is an essential agency, and the Coast Guard is as well. So there's just not that trigger point that's going to cause people pain until that first paycheck, which will be next Friday. So I don't see much moving until then, to be honest with you. And no one's here, as it was said earlier. I mean, Congress is out of town.
Yeah, so it might be at least a week before we get any real signs of movement, Jeannie. But when Ashley describes as when the pain will be felt by some when that first paycheck is missed, who do you expect will ultimately respond to the pain first, knowing that it was a handful of Democrats at the end of that record 43-long-day shutdown who decided to vote to open the government despite not actually getting anything extracted in terms of real changes on the healthcare policy they were seeking? Are we going to see that this time around?
You know, I don't think so, Kaylee, because I think Democrats are in a very different position this time. You know, you played that clip from Donald Trump last night, and it's a great example of how off message he is on this issue. He's talking about deporting criminals, but by DHS's own count, only 6% of the people deported last year had a criminal record for a serious crime. That means 8 to 9 out of 10 did not. And when the American public sees that, and then they see the brutality on the streets of Minneapolis, the killing of Renee Good, the killing of Alex Preddy, they say to themselves, this has been a case of mammoth overreach by an organization that was funded at 3 times its usual amount in the big, beautiful bill. And so the president has got to recognize that. And I, by the way, think that the White House does, because the White House has been saying, we need to negotiate, we'll negotiate. They haven't, shown signs of that. But as you juxtapose that to what was happening in the last shutdown, they said, no, Democrats have to reopen, and Democrats did. This time, I think they too see the polls. The Donald Trump immigration policy with ICE is very unpopular. They're going to have to negotiate this out. So I think it's very different from where Democrats ever find themselves with immigration, and certainly different from where they were last time around.
Well, if FEMA workers didn't think this job stinks, they do now, Ashley, as you probably heard. And while you live in the Washington area, so you know all about what is one of the biggest sewage disasters, one of the biggest sewage leaks in the history of America. This is like the Exxon Valdez of sewage. It started in the Potomac River, and they've routed this into the C&O Canal. The president back on Truth Social talking about this today. He says those who are responsible must get to work immediately. If they can't do the job, they have to call me and ask politely to get it fixed. He's now sending FEMA in to try to deal with this disgusting spill. Is there politics behind that move, Ashley? Is this to put FEMA in the media spotlight, or is there more going on here? Maybe this is why we shouldn't shut down the government.
First of all, I live in the city, so this is also, obviously some of the Truth Social posts last night were about Westmore as well. So I think this is going after the governor of Maryland. I mean, they don't have any, and that's where the sewage is coming from. They don't have a very good relationship. But, the first thing I said this morning to my son was, you cannot go to, they've been ice skating and stuff or playing hockey on the C&O Canal. I'm like, you can't go there anymore. I mean, the ice is melted, but I mean, I think there's a little politics in this, but it's actually a concern because if it gets, the water issues is going, our drinking water issues is going to be something that they have to be very concerned about.
Well, Ashley mentions Governor Westmore, who actually responded to President Trump's latest Truth Social post on this, saying, Mr. President, this spill is basically contained, so could you approve the FEMA funding to help Western Maryland rebuild after the historic floods last year? He tags Secretary of Homeland Security Kristi Noem for good measure, ends his tweet with, thank you for your attention to this matter, as we often see the president do on Truth Social. I'll just leave that one there. Jeannie, as we think about the politics of this, just the politics that President Trump is dealing with in general right now, knowing that he is intending to travel this week, as we thought he would be doing every week, to different parts of the country to talk about affordability. He's heading to Georgia later on this week to talk about that very issue, I guess trying to stay on the message that his chief of staff, Susie Wiles, has been trying to get him on for months now. What does it say to you that the tour is back on after what was, I guess, a hiatus when it barely had begun to begin with?
Yeah, the affordability tour is back. And I never get to say this, Kaylee, so I have to just invite all 3 of you to New York, where we don't have a sewage problem at this point. So come on up. It smells very good. It is fascinating because, of course, he's going to the swing state of Georgia, and he's going to former Representative Marjorie Taylor Greene's district. So I think it's going to be a little tough for Susie Wiles to keep him on message. I think last night on Air Force One, he referred to her again as Marjorie Trader Greene. So I don't think he's quite over the spat between the two of them. But this is critically important. I mean, his poll numbers have dropped so far. They are in real trouble here. And I think the three polls I would point you to are the ones which have got to just destroy any sort of sense of self that Donald Trump has, with the majority of Americans saying they prefer Joe Biden as president to Donald Trump. That is a big blow to Donald Trump. And a lot of that has to do with affordability, which he described as a hoax, and the economy and the cost of living and inflation. So he's got to get out there. He's got to get on message. I know he wants to go hit Marjorie Taylor Greene, not physically, but, just in words. But I think they really got to try to keep him on message to let Americans know there is good news on the economy, but they are not feeling it. And he has not done a good job in terms of telling them all the work that he is doing.
So is the message consistent when the president goes back to Georgia? Ashley Davis, he's been saying, and as recently as Friday in the driveway at the White House, we won the war on inflation. Is that the message for the people of Georgia?
But listen, I think Jeannie's exactly right. I mean, there are good stories, just like Biden had good stories in regards to the stock market when he was still in office. But the problem is it's starting. It's February 17th, and politics is 100%. We're on it. Jeannie said earlier today she's so excited to start talking about primaries, and I'm like, oh, I'm not ready yet. but yes, I think though 100%. I think 100% that he still just needs to be careful in regards to, yes, inflation's come down, gas prices. I mean, we can go through the list. However, if they're not feeling it at home, he has to.
I think we're having a little bit of difficulty with Ashley's connection, but to the point she was just making, Joe, and we said this during the course of Joe Biden's reelection campaign when there still was one, there's a difference between the rate of inflation going down and prices themselves going down, disinflation.
Yes,
and that's
indeed.
something that President Trump is now contending with.
That's they have two very different things.
Yeah.
And with the help of our great panel, sorry we couldn't have Ashley finish her thought there. Ashley Davis, S3 Group, and Jeannie Shanzano, Bloomberg Politics contributor. Incidentally, by the way, water samples taken downstream from the leak, this is the sewage leak, E. coli levels are still more than 250 times the recreational limit. They're saying if you touch the water, wash your hands and any gear that comes in contact promptly and thoroughly. I don't think we're going swimming.
So that's the skating gear for Ashley's son.
That's
maybe.
correct, yes.
Needs to head up to New York and skate on the Hudson instead.
Exactly.
Well, we're not skating on the Hudson. We'll stay here in Washington, where we have some important conversations still to have from this desk, as we'll be joined by Democratic Congresswoman Dina Titus of Nevada coming up. More on the DHS shutdown, what Democrats want to see funding for that agency restored, maybe a little bit of gambling as well. This is Bloomberg.